Welcome back to Squawk Box. The Harris Walls campaign engaging in a media blitz this week. Here's Vice President Kamala Harris on CBS's 60 Minutes.
My plan is about saying that when you invest in small businesses, you invest in the middle class, and you strengthen America's economy. Small businesses are part of the backbone of America's economy.
But pardon me, Madam Vice President, the question was, how are you going to pay for it?
Well, one of the things is I'm going to make sure that the richest among us who can afford it pay their fair share in taxes. It is not right that teachers and nurses and firefighters are paying a higher tax rate than billionaires and the biggest corporations.
Joining us right now is pollster and political strategist Frank Luntz, who watched that interview along with millions of Americans. What was your initial reaction to somebody who focuses on words and disposition, perhaps?
Well, first off, she is now, took a while, but she's now taking the tough interviews, getting asked the tough questions, and being challenged. 60 Minutes did an outstanding job trying to get answers from her. And second, it's actually Donald Trump who's ducking debates and ducking that interview on 60 Minutes that he had said he would do and then backed away from. So she gets credit for that. Third, and I think this is important, she asked a question about fair share, pay your fair share. This is language from the Democrats that has gone back 25 years now to Al Gore in 2000, and no one has yet defined, and Harris does not do it here, what exactly is fair share? What is the rate, how much, how you pay it, and it's a legitimate question. I want to give her credit for one important use of language. In the convention, the Democrats talked about freedom. That's normally a Republican issue. Here, she calls herself, asserts, I am a capitalist. That's something you expect to hear from the Republican candidate, not the Democratic candidate. And now she's focused on small business, which has always been a Republican issue. Andrew, she is taking pages out of the Republican playbook. She sounds, if you just listen to these general statements, she actually sounds like a moderate Republican. So the challenge for the Trump campaign is to stop with these incessant character attacks and challenge her on the specific issues and her claim, because let me tell you something. According to the New York Times most recent poll, she's beginning to cut through.
That's where I wanted to go with this next. So you're in the polling business, and you're in the business of reading polls, if not your own. So what do you see happening in the polls in the swing states in particular? Not the national polls necessarily, but in the swing states where both of these candidates are spending virtually all of their time?
And it makes sense because every one of those swing states is within the margin of error. Every one of those swing states could end up in the Harris camp or the Trump camp. That this election with exactly 1 month to go is so darn close. And I can't find a time, a historical precedent for this, when the two candidates 30 days out were almost identical, if not identical, right, in the states that matter. That you could literally have a 270 to 268 situation, right, in the Electoral College.
But let me ask you this. Part of the issue over the last at least 2 cycles that we've had, there's been an undercount on Trump votes, right? When I talk to people at a cocktail party and people say, well, who do you think is going to win? Invariably someone says, well, the polls look like they're the same, but, over the years, if you go back 2016, you go to 2020, Trump was always undercounted. Therefore, if they look like they're apples to apples right now, I'm going to give it to Trump, or at least that would be the prevailing view. I don't know if that's your prevailing view. I don't know if you look at the betting markets. I don't know what you think is the right metric to actually have a better understanding of where we really are. Or maybe you think the polls have gotten so good, they've just gotten better over the years.
No, I don't. And it's part of my industry. It's one of the reasons why I focus on language rather than the polling. And also, I don't think it's as important to predict the winner. It's more important to understand what the winner will do. Let's talk about substance, not about who's ahead and who's behind. I've been using sessions with undecided voters now for the last 3 months. I've got 3 different groups that are tracking them, and I've seen them move. They moved away from Joe Biden in an extensive way. They moved towards Kamala Harris after that first debate, And right now, they're asking, who's telling me the truth? Andrew, the most important value right now is not about accountability. It's not about tax rates. It's not those details. Which candidate do I believe is telling me the truth, and which candidate will have my back over the next 4 years?
You know, Frank,
Others have decided it's too close to
other
call.
than the billionaires with this that don't pay taxes on their stepped up profits on the founders, that's an absolutely false statement that the 1% pay a lower tax rate than the people she's saying. That's absolutely false. And she is finally, you know, not going on with The View and maybe taking some tough interviews, but the answers were not impressive. Yesterday, I know Elon Musk is now, you know, the Antichrist to the left, but there's no point in criticizing Kamala Harris. She's simply the face of a much larger machine. She'll say whatever's on the teleprompter. She'll get stuck if the teleprompter breaks. It's whoever controls the teleprompter who's in charge. And who is that? It's not any one mastermind. And that's the feeling I get. It's almost like a Politburo.
Elon Musk was saying that as a reason for why Kamala Harris hasn't been trying to.
You impressed with her answers?
No, but am I impressed with what Elon Musk said yesterday about that? No.
You're not impressed that he can make the point that she can make the point that there's a Politburo and this could be Biden, this could be Harris. I mean, I don't know if she even knows what she's saying when she's saying a lot of these things, and you're swallowing it hook, line, and sinker.
No, it's not that I'm swallowing it. I'm telling you what the public is saying.
Well, you're saying that the public believes that when she says that the rich don't pay their fair share, that's patently false. What she's saying,
Yes,
the 1% pay much higher rates than the people that she's talking about.
She's a
But
billionaire, not 1%.
what is
You say
reality?
1%.
I'm not
She's a
saying
billionaire.
1%. I know, but it's
Hold
not
on.
going to solve. It's not going to solve the problem.
Hold on.
That may be the case in terms of the ultimate number, but in terms of actually
But
people feeling like the system
People
makes sense.
do pay their fair share, except for maybe what are you talking about? 100 people? So she's got to put all the wealthy people in the same.
It doesn't make what she said untruthful. It actually makes what she said truthful. That's
for 100 people.
right. So, but you
that
just
doesn't
said
help
what she said
solve
is
the
not
problem.
true.
The 1% are not under tax. We have a very progressive tax system, and the idea that the rich do not pay their fair share is not true. Unless you're just talking about the rich, you mean 100 people or 200 people.
I think we're talking about more than that.
Okay, 500 people.
She said
1,000
billionaires, but your
people.
point is a fair one. That
Well, that's
if
the
you look
only
beyond
point
that,
to make,
yes.
because we don't care about those. I mean, maybe you do care about the 500, but that's not the issue. That's not the issue. We have a fair tax system in this country. Teachers, they're not paying more than rich people, except for the
Except for the richest.
Okay.
Except for the richest people in the country who by the way, would pay the most into the system.
And one of
So
the
then let's
rich,
be
and one of the richest people who did sell stock paid $11 billion of taxes in 1 year.
Correct. And I think that's fabulous. I'm not. Nobody's
You do?
nobody's
Okay, good.
criticizing.
I hope it is.
Nobody's
fabulous.
criticizing him for that, but we've had conversations about taking loans, which you've agreed to. You've agreed that
Fine.
it's unfair
And it's
for
not
people
going
to
to make
take
that
loans
it's
out
not going to
against these
solve
things.
anything. It's not going to make.
Right,
But
so-
Frank,
But if the tax, we've talked about this.
Frank,
If you-
these interviews are not going well on 6. That did not go well on, at least from what I could tell on 6. Did you think it went well?
So there's one point. The fact that she did it and Trump did not
Trump
is
did it last year, and Leslie, or 4 years ago, Leslie Stahl
4 years
never
ago.
apologized for
And he walked out.
absolutely lying. Absolutely
walked
lying
out.
about the laptop. Never
Let me
apologized.
get one more point in here because immigration is a key dividing issue. And the fact is, she makes claims about immigration that you should be addressing, that we've been focused on it, we've got solutions. And the fact is, immigration got much worse under Biden than it did under Trump. The key element here are facts, a fact-based approach, which would justify the comments that you all been making. You have to draw the comparison. Where were we on January 20th, 2021, and where are we today? And Trump is not making that comparison. Harris is at least getting heard now. She's taking the tough questions, and let's be honest with your viewers. Up to now, she did not do that. Now she's doing it. Up to now,
50
she did not.
days.
But she's doing it, and
She
she
hasn't been
deserves.
forced to it. You're looking at polls. Look at some of the betting sites now.
I see that. Look, it's a dead even race, and she's
I
making
think that's
the right
the scariest
decision.
thing that Frank said, is that if it's 270 to 268 in the Electoral College, how do we react? When you've seen such clear misses, near misses in the past with hanging chads with Bush.
I think Andrew's right about unless the polls have gotten better. If she's up, if she's tied, which was a recent, I forget which was that, a YouGov, she was tied after being up 4. If it's a tie or she's only up 2, it's going to be a major problem in the electoral, in the swing states, Frank. Unless the polls are suddenly better. Right?
No, let me be clear. I'm not.
You're still worried
backing
about the
polls.
cats, people eating cats, which they did down in Venezuela. I'm glad you finally got over that.
Well, the issue right
I thought
now
you were going to
is
cry.
the issue is affordability and immigration, and whichever candidate addresses those 2 issues is the candidate that wins. It is a jump ball. It is unclear right now, and you're correct that she is not being as specific as the voters want, but you're incorrect. At least she's begun to answer the questions.
Great. She's, we're almost going to elect her president. We know nothing about her.
Thanks,
Would be
Frank.
nice. It would be nice to answer a few questions.
Thanks, Frank.
Coming up, a rapid update on the economy and economic growth heading into 2025. And Amazon launching its fall Prime Day. We're going to talk to an analyst about how this sales blitz will impact the retail and tech giant. Squawk Box coming right back.
make money.
Amazon's October Prime Day kicks off the day, hoping to lure shoppers with exclusive sales and deals. Joining us now is Mark Mahaney, Evercore ISI, head of internet research. It's your favorite stock among all of them, I think, Mark, but not necessarily for Prime Day, but because some of the other moves that the company is making really through like Prime TV.
That's right. It's a number one pick in large cap, in mega cap. We think we're going to have ongoing margin expansion both in the retail business and in the AWS business. That's for the company as a whole. I think free cash flow is continuing to improve, and we think we're going to see accelerating growth at their AWS segment and stable growth, kind of consistent, close to double-digit growth in their retail business. You put all that together, and we think there's a lot of valuation upside to the share. So yeah, we like Amazon right here, and Prime Day is just another feature of it. It's not a needle mover for the quarter per se, but it certainly helps, and it'll probably bring in more Prime members worldwide, which is always a win for Amazon.
In terms of operating income, how much does advertising represent right now?
Oh, that's a good question. They're doing about $50 billion now run rate in ad revenue, and they don't disclose what the margins are, but geez, it's got to be pretty high, Joe. I'm guessing they're doing almost 50% margins on that. If you look at what Google and Meta are able to do at that sort of scale, $50 billion a year in ad revenue. So that's $25 billion in up to $25 billion in operating income. It's a substantial percentage of their overall profits, a substantial percentage. The two biggest profit drivers here are AWS and advertising. And by the way, the good thing for Amazon and for Amazon shareholders is the fastest growing parts of the business are the highest margin. It's called a wonderful mix shift.
Yeah, you make that point. So you can only estimate margins for the advertising side, and there's a lot more ads now, and there's a lot more content that's sort of it sounds like at NBC, but there's must-see TV, and the number of offerings are increasing, especially sports for Amazon.
I think. Yeah, Joe, I think that's been one of the biggest kind of, strategic pivots at the company. They've really leaned into being a media and entertainment empire is a strong word, but they certainly have a lot of professional content, licensed content, theatrical content, and then over the last 2 or 3 years, you've really also seen them lean into sports, and where you get these massive audiences, major reach, major frequency, and you get high CPMs. And just beginning at this year, they started layering in ads into Amazon Prime Video. It was one of the biggest unmonetized ad platforms out there, potential ad platforms out there. We think that'll help with profitability. In fact, it's probably the single biggest driver of ramping margins, ramping profitability at the company. The other one is on the retail side, they went through a major CapEx cycle in 2020 and 2021, and even in going into 2022. And now they've sort of been leveling that out. So you've got what's called rising capacity utilization, better usage of all this distribution centers that they may have overbuilt. But rising capital utilization, capacity utilization, there's another word for that. It's margin expansion. So you get these two kind of really nice tailwinds. Now there's some headwinds here. They're starting to make a big investment in this satellite system called Kuiper. And but as long as they break that out and give us a sense of what those costs are and what they see as the revenue opportunity, I think the market will give them a little bit of the benefit of the doubt for that.
Do you have any businesses that would be recession resistant if the day ever comes where there's a slowdown? Because it seems like a lot of these things would be very economically sensitive.
Yeah, there's no recession resistance here, other than there's a fair amount of their spend now that's what household essentials. AWS as a business is kind of core to most companies. You need to keep the lights on. You need to keep your data saved up in the cloud, served up and saved up in the clouds. But the vast, I don't know what percentage of Amazon's retail business is consumer discretionary. I'm guessing it's north of 60%, maybe 70%. So no, if there's a real slowdown in consumer discretionary spend, especially given the size of Amazon, I mean, they're 10% of retail sales, about the same as Walmart. They would absolutely see an impact to their growth if there was a recession.
Okay, all right, we're gonna end it there. Mark, what's your price target? I think you raised it, didn't you?
Yes, yeah, we did. We're up near 250 now. We're looking on 2026 and 30 times, 25 to 30 times free cash flow gets you there, and we think that kind of multiple for kind of a key, brand, an enduring brand. Amazon's going to be around in 5, 10, 15, 20 years. A name like that can do premium growth for a substantial period of time. We think that kind of multiple is well warranted.
Okay. Thanks, Mark Mahaney.
Thanks, Joe.
Okay.
It is just after 7, about 7:04 now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. A bunch of big stories to tell you about this morning. We are tracking Hurricane Milton right now. It's a Category 4 storm with maximum sustained winds of 155 miles per hour. It's moving towards the west coast of the Florida Peninsula at 12 miles per hour, expected to make landfall there tomorrow night. Meantime, PepsiCo reported profits of $2.31 a share, 2 cents better than estimates. Revenue of $23.32 billion, slightly below expectations. The company, though, cutting its full-year outlook, blaming an unexpected decline in summer sales and cautious consumer spending in North America. We're watching that stock off about 1% right now. And Honeywell announcing just in the last hour it's spinning off its advanced materials business into an independent, publicly traded company. That's going to happen by late 2025, early 26. The company accounted for about 10% of Honeywell's total sales last year.
All right, let's get a check on the futures this morning. We are in positive territory. Dow futures up by about 50 points. NASDAQ futures up double that, over 100 points. And the S&P 500 up by about 25 points. Want to get over to Steve Leisman. He's got a rapid update on the outlook for growth through the end of this year and into next. Hey, Steve.
Good morning, Becky. Yeah, the strong jobs report, and we've had a series of recent economic upside surprises. They have forecasters boosting their growth outlooks for this year and next, and no longer predicting much weakness at all in the economy here. Compared to our CNBC Fed survey from September, GDP forecasts in the CNBC Rapid Update for the next 4 quarters have been upgraded by an average of about 0.4%, or nearly half a point. What were weak quarters are now seen as just a few tenths below potential growth. Ed Yardeni writing, quote, "The widely feared phantom recession is over." That is the one that was long predicted but actually never came. Okay, so the 16 economists we surveyed over the weekend see GDP coming in at 2.3% for the year, dipping to 1.9% in 2025 and bouncing back. So all around potential. Goldman is the high for the year at 2.8, while Citi is the low at 1.3%. They see 2 quarters of negative growth in Q4 and Q1 of 25. Higher oil prices, hurricanes, a return of inflation, presidential election. These are all the risks that are out there in all the forecasts. Mark Zandi of Moody's, he says his baseline forecast bakes in a Harris win and a Republican Senate and Democratic House. That is divided government. And he writes, quote, "The results is no significant change in economic policy. The economy will continue to grow strongly and operate at full employment and inflation at target." Speaking of inflation, the inflation and growth numbers in the rapid update should allow the Fed to continue cutting measurably. Most forecasters see inflation continue to decline, though several have built in a bump early next year. Remember, we saw that in 2024. This year, that could once again, guys, give the Fed pause. Becky?
So this was a big deal, the numbers, and I think big questions. I mean, I've heard other Fed speakers over the last day or two kind of saying, yeah, I voted for the 50 basis points, but I want to be much more measured from here. Is it your thought that 50 basis points is not going to happen again?
I thought they should have done 25 to start with, but, I was wrong about that. I think a gradual approach makes a lot of sense. You got to feel for the bottom. As a guy who fishes and you wade fish and the water can be murky, you don't know where the bottom is. You want to walk slowly. There could be a rock there. You want to be careful. And so, and I also think, by the way, that as long as you're kind of clear about your intention, the market will go ahead and price in what it is you intend to do for the economy. Although I would point out the NFIB survey again this morning shows small businesses still struggling. We can see big businesses, the companies we cover, Becky, they get great rates out there. They get tight spreads. Small businesses are suffering from these higher rates. I saw one study that showed the average small business has to borrow at 10%.
Wow. Steve, thank you. We'll see you later.
Pleasure.
Coming up, Google loses an epic battle. Now the tech titan will be forced to open its Google Play Store to rivals. How this could impact the future of apps and fees for the tech giant. And at 7:35 a.m., former House Speaker Kevin McCarthy on the election with 1 month to go. Less, in fact. Squawk Box will be right back.
A federal judge has ordered Google to open its Google Play Store to competition and to make the Android apps in the Play Store library accessible to rivals. While Google said it will ask the court to pause the pending changes on appeal, Epic Games CEO Tim Sweeney tweeted, "The Epic Games Store and other app stores are coming to the Google Play Store in 2025 in the USA without Google's scare screens and Google's 30% app tax, thanks to victory in Epic v. Google." Joining us right now is former White House Chief Technology Officer Anish Chopra. He is now the Chief Strategy Officer at Arcadia. And Anish, the tweet that came from the Epic CEO, is it too early to declare victory? What happens next?
Well, for sure, Google will appeal. The facts don't look great in Google's case in the sense that a lot of anti-competitive policies are driven by what's learned in discovery. Did they mistreat certain individuals? Were they abusing their position? Even if the underlying questions as to whether an app store is a utility for good or a vehicle for anti-competitive behavior, those bigger questions are left a little bit separated from the fact that here, the facts clearly were in the case of Google not necessarily behaving appropriately in this use case. So at the moment, it's a little early to be celebrating. There will be an appeals process, and more importantly, there'll be a technical review on the how we actually separate some of these App Store features.
Anish, I've been going back and forth, just kind of kicking it around. On the one hand, I understand that this is something that's similar to what Microsoft faced, to say, okay, it's too big, it has to be able to share, got to have access from other people coming through. On the other hand, to think of this as a utility, as you just laid it out, okay, they built this store, now you're going to say this is essentially the same as a utility where we gave you the land, we allowed you to build these things and build something up, and now you need to share it with everybody? Is that really the case? Is Google's App Store or Apple's App Store the equivalent of a utility at this point?
Great question, and I want to separate the two. Apple argued that the hardware, the device we buy, which has all these sensors, is tightly integrated with the way we interact with it, the camera, the sensors, and so that experience is tightly coupled, and that they'll make that available through their terms and conditions for those who wish to buy the smartphone. In Google's case, they've already separated the hardware, say Samsung phones and Google's own phones, from the software. So you could theoretically stitch together another app store and have access to the same controls in the hardware. So it's a little bit of an apples oranges in terms of the products we choose to buy, even though we might view them both as smartphones that deliver app experiences. And the difference is critical because one of the challenges we face is in security. We do not want the freedom to download malware that's going to have our phones and messages shared with foreign adversaries. So that's the trade-off, and why this is a moment to be cautiously optimistic, to be pro-competitive, but we don't want to throw the baby without the bathwater in terms of
that's really interesting, because when Apple has said that and made that argument, I've always bought in as an Apple user. I don't want to accidentally download something. I don't want my kids to accidentally download something that then comes in and affects our entire house because we're all sharing Wi-Fi on things. When you hear something like that, that's a bigger concern, I think, than competitive issues that they may be facing. I want the safety to know that I am not going to get hacked or brought in. Is this going to upend that?
Actually, in the case of Android, it may be reasonable because there'll be other app stores that may make priority the privacy and security features. They might filter further which apps you get to discover because they've gone through an extra step of security. So I hope the market will respond, I think, in threes, just to be pragmatic. There may be trusted brands that we know, Meta, in this case, Epic Games, and they'll say, you know what, you trust us and we'll give you the experience curated for you and reduce the fees. But that'll only be for the 1%ers.
This is kind of ridiculous when you start explaining it this way. Do we really need more competition on this? I need more games brought into my life. I need more of these stupid apps.
I can't verify the claim, but if you listen to Zuckerberg gave a kind of a podcast last week, and he shared the note that if you added up all the taxes, quote unquote taxes that Meta pays in order to get access to users, because it doesn't control any of these app stores, he said something to the effect of half of his profits. He's realized only half the profit potential. So the numbers do add up. I don't know if that's, again, I can't validate that, but
these
you
are
can get
big
a sense
guys
of it.
complaining that they don't have bigger profit margins. I mean, cry me a river. Again, do I need more of these apps as a consumer?
But Anish, Related to that, can I just ask a margin question? The real question to me is whether, and the argument from a competitive standpoint would be that if Mark Zuckerberg could quote unquote get higher margins, that he would actually lower his price and it would be better for consumers. That's the only way to think about it, unless you think that he would just capture a higher margin, in which case that's a different story.
Yeah.
Correct. Well, for sure, the economists would argue you put these assets to their highest and best use, and you'd have a mixture of consumer surplus. Hopefully, you'd have some reinvestment in R&D. But the main point I would suggest to you is that the line here in an open platform like the Android operating system does allow for this conversation to be had, much like the net neutrality debate with broadband. We don't want CNBC to have a slower speed when running on a FiOS home network because we only have really the choice to pick the one cable carrier or two in our typical household. So in the way, there is a little bit of a, if you've got the privileged prime seat, you got to be a little bit fair to all, and hopefully that fairness is driven a lot more by the value to the the app ecosystem than to the rent seeking in the middle. That's a reasonable argument to say how close is the app store market to the broadband net neutrality debate.
I'm just looking, Meta's net profit margins for the last quarter, almost 35%, 34.4%.
Oh, no crying me a river on that. But the premise is there's an economic value to securing our phones, to optimizing the developer experience, to enabling app discovery. These are services that an app store makes available for which they should be returning a reasonable margin. Not that we need to manage what that margin is, the market should decide. And in the case of Android, there'll be a window. The judge only made it 3 years. So this is not meant to be like a long-standing forever dynamic, but it's meant to sort of maybe put a little bit of a shock in the system, which again will be appealed. So I would say the takeaway for anyone listening is we want to be mindful of what is a value-added service and what is a gatekeeper that's rent extracting. And we want, generally speaking, to have markets that are competitive, that err more on the side of in this case, utility access to critical services.
Anish, I can't say I'm any clearer on what I think about this after this conversation, but I do feel like it's making me think more, and I appreciate the points you brought up. So thank you for joining us.
Okay. Hopefully I'll convince you next time of something more important if I missed.
I'm still thinking. Well, I'll think it through.
Okay.
We'll have you back soon. Thank you.
Thank you.
Coming up next, the market's in focus. The S&P 500 up more than 5% just over the last month. We're going to talk to a strategist about equities, the economy, the Fed, heading into 2025. All that and more. Squawk Box rolls on after this.
What I want businesses to know about my community is just how to tap into the passion around the culture and the relationships. The Hispanic community is deep ingrained in these, and by tapping into these, you'll find that there's dedication, excitement, energy, creativity, and innovation, which will ultimately lead back to the business success.
crash course is.
Quick look, rather, I should say, or a take on the futures right now. We've got some green on the screen, about 48 points higher in the Dow. NASDAQ up about 90 points. The S&P 500 up about 22 points. And here with more on the markets is Lori Calvesina, head of U.S. equity strategy at RBC Capital Markets. Nice to see you.
Good to see you.
So what do we think? What do we think here at this point in the ball game?
So look, we're at my target for 2024, right? And no strategist ever wants a neutral call. It's just not that much fun.
Right.
But when we do the math for next year and we keep a similar PE multiple around 23 times on trailing earnings, we can get you to 6,200 for the math on the market next year pretty easily, assuming we have a solid economy. By that I mean say 2% of GDP or more in real terms. Inflation continues to come down. We get a few more cuts. The 10-year yield stays below 4%. Our modeling suggests we can keep a similar PE to now. You bake in some earnings growth alongside that. You can have a higher market next year. So that's what we've been talking about a little bit more lately, because for the here and now.
But if you're already there, the question is, do you think that there is going to be a leg down before a leg up? In which case, if you're sitting around thinking, when am I supposed to? Nobody likes to time the market perfectly,
right.
But if you're already at neutral or you're already at your level, do you sit around and say, okay, let's just wait. Let's wait and see what happens?
I think that's fair. I mean, look, we made some sector changes this morning, but the reality is, I get calls from international investors say, hey, election's coming up, should we do anything? I'm like, maybe you just want to wait a little while. And nobody ever likes to hear that message. But we do tend to see markets sell off September and October of election years. That's very typical. Obviously, we didn't get that for the whole month of September. We got it at the beginning. If you look, just put all of the day's headlines and hot topics aside, right, and just focus on something universal. AAII sentiment is hovering around 19% on a 4-week average. 22% is the one standard deviation mark. So we're kind of flirting with danger there in terms of being a little too bullish. And when you hit that one standard deviation mark, that's when we keep having these 5 to 10% drawdowns. If you look at positioning data on CFTC, you come up with even scarier charts that say, I think the point you're making, we may be due for a bit of a pullback.
Okay, so if a pullback is coming, you just said you were recalibrating which industries you'd be investing in.
So we did a couple of things this morning. We reiterated our overweights on financials and materials. Those are two we've liked that we still liked. We did downgrade the utilities sector. We've been overweight there since January, and we pulled that down to neutral. We upgraded healthcare from neutral to overweight.
Because?
It's a combination of things, I would say. Number one, you've got a better valuation story in healthcare than utilities right now. You've just seen utilities absolutely ripped. They were cheap when we upgraded. They're not cheap anymore. They're starting to look expensive. Healthcare still looks pretty reasonably valued, and a bunch of industries look cheap, like pharma, biotech. The other thing we're seeing is the funds flow data is starting to shift. So utilities and REITs as well have had these really fierce inflows over the summer. Those are both starting to fade. So I think those kind of bets on lower interest rates, you want to move into these income sectors, I think that's
already happened.
I think it's happened.
Okay, last question, big tech, what do you do?
So we're neutral there. I'm watching the semis very, very closely. They're still looking problematic on our model. They still look a bit overvalued.
All the semiconductors, or?
We look at a median PE in the Russell 3000. So we're not looking, just at the
You're not looking at NVIDIA, okay.
We're not looking at the big cap name. It's a broader overvaluation issue we have there. Okay. I like the longer term fundamentals, but I do think this market is going to continue to rotate and broaden out. So they need to get cheap before we move back.
Okay. Lori, thank you.
Thanks for having me.
We'll see.
All right, when we come back, America's biggest water utility company revealing that it was the victim of a cyber attack. We've got the details when Squawk Box comes right back. America's largest water utility company revealed yesterday that it was the victim of a cyber attack. New Jersey-based American Water said that it became aware of unauthorized activity last Thursday and immediately took protective steps. The company says it does not believe its facilities or operations were impacted, but it is pausing customer billing. The utility provides services to more than 14 million people in 14 states. And guys, you've heard about hacks at some of the phone companies recently, and these are the issues that cybersecurity experts have been very worried about and watching for some time.
Yeah, it's time to go along all those security companies, I think, because it's only going to get worse. And these things matter. Water now.
Electricity is
The
always
grid.
a concern. Yeah.
My GPS. And I had the wrong.
Lost without it.
Right. Coming up next, former House Speaker Kevin McCarthy on the election countdown and what we could see from both campaigns down the home stretch. Squawk Box coming right back. Vice President Kamala Harris is making the media rounds now, starting with the week off with CBS's 60 Minutes. The Vice President discussing her plan for the economy, still fell short of providing answers on how she's going to pay for some of the agenda. Join us now to talk more about this and much more. Former House Speaker Kevin McCarthy. We are seeing her venture forth now after what some would say was quite a while, and I don't know whether you'd say she was sort of forced to do it, or why do you think it's happening now? I mean,
well, she's being forced. Her whole plan was to stay away from the media all the time, and it started playing against her. But okay, she's gone on 60 Minutes. But can anyone tell me her 3 points of what she's going to do if she wins? No. And so it's not breaking through. You've got to, if you ask Trump.
I can tell you what she said.
Yeah,
you're asking me what she said?
What are the 3 things she will do if she wins?
She's going to try to deal with housing, right?
$25,000, yeah.
No, $25,000 is she's going to try to build more houses so that there's a greater supply. She says that she's going to give $50,000 or a $50,000 credit to small businesses, right? What else is on your list?
I'm sorry, you can't run for president. You can't say, I'm going to stop immigration, build the wall, I'm going to make the economy stronger.
You can run.
You really
for
need to go to
president.
But the idea that you're saying that nobody knows, I mean,
but
Yeah, but you can't. You
Yeah, but
can't
Kevin, she
name
says she's
three.
going to raise taxes on corporations. She's going to raise taxes
on individuals.
She says she's going to do that to maintain programs and increase programs for what she says is the middle class. She says she's going to support Roe v. Wade. I mean, those are the things she says she's going to do. On the other side,
You
it's
don't have a clear. I can't believe running for president this time. Every single
She doesn't
American
have-
can
she's
say it's
running,
three
she's
things.
running for president by not being Donald Trump
Yeah.
and not being
She's
Joe
running
Biden.
against somebody instead of for something. So if she was to win, to govern would be very difficult. And look, I think everybody's missing the wrong polls. This is a very close race. There is no undecided voter anymore. It's whatever candidate is able to get out the low propensity voters. An interesting poll came out last week, and it was Gallup. It's something they always do. They don't ask you who you're voting for. They ask, who do you identify with, Republican or Democrat? And for the very first time, Republicans beat Democrats, and they beat them by 3 points. Now, if you correlate this to past elections, and you see the disparity between Republican and Democrat, you usually go like 3 or 5 points, you can tell when a Democrat wins the presidency. There was a second question in there they asked, who was best to solve the problems in the future? Republican. So I take it as it's a better climate. Republicans should be performing better. And it all hinges down to Pennsylvania. And Pennsylvania's tied right now. And if you look back 4 years ago, Biden was winning in Pennsylvania right now by a high number. If you look at Wisconsin, Biden was winning Wisconsin by more than 6 points, but he only won it by 20,000 votes. So you can't really play into these polls that are in the margin of error. What do they mean? And is Trump still getting the underpolling that he got before?
Look, we made that point earlier. That there's a very good possibility that there's a massive undercount going on.
Yeah.
We've seen in 2016,
Kevin,
we saw in 2020.
Could we ever ask for, do you think, more fairness in the way everything's going? I'll make one point now. The outrage machine for Elon Musk for now endorsing Trump is out of control. Now, Twitter is still a free exchange of ideas from both sides. On the other hand, the New York Times just endorsed Kamala Harris. That's the 17th straight Democrat the New York Times has endorsed since Dwight D. Eisenhower. That was the last time. That was 1956. Take your pick of any Democrat you want to go along the way. They've endorsed every single one.
So they endorsed Mondale over Reagan in re-election.
But the arbiter of all truth and all fair journalistic integrity in the world does that every year. Not a word is spoken about. But Edward,
Can I just say something? And I just want to say
but
this
what
about the New York
about
Times for half a
17
second.
times?
There's an editorial page of the newspaper.
No, I understand that.
And then there's a news page.
Okay.
If you want to conflate them, you can go ahead and
I am
do that.
conflating.
I understand
You
that.
see the choice of the look. There is
I
an
understand that.
overriding viewpoint from the Times that is manifested everywhere.
I would say
Andrew,
this.
it's not just the
I would say at the end of the
and
day,
17 straight. You didn't have a single one that.
All I'm suggesting to you is there was an editorial, but it was an editorial page. I just don't understand.
You don't think the rest of the paper?
No, I'm not gonna, I'm not gonna engage in that with you. But the other piece of this is,
you ever feel like a divorced child?
But-
Go
ahead.
well, no, because it's
You
just
cannot deny
Look,
that
I
the
think the
overall
arbiter of what we
viewpoint
need
the
to
New
do.
York
Okay,
Times-
And I can say that your overall point, which you bring into the news conversation every day,
Right.
the overall point
We
that
all-
you bring
we
into
both
the
do.
news conversation
We
every
both
day
do.
is one that is about a conservative Republican who is
Right.
explicitly supporting this president.
I'm talking about.
Okay,
at this
that's
point,
a distinction.
I'm talking about at this point, Elon Musk suddenly has totally become the out. Keith Olbermann said he needs to leave the country and X needs to be shut down. Why? Why not the New York Times then?
I think the point Joe's trying to make is, you get treated differently
There's no doubt.
if you come out and endorse Trump. I think it's our Republican for that matter. People loved Elon before. And I think overall as Americans, we've got to get to a point where we can respect somebody's differences of opinion, right? You may have a difference of opinion. I was just texting with somebody today that's mad at me about my party, right? I still like the individual. I just text back, oh, you made me smile. You made me laugh, right? I respect that you have a difference of opinion, but I want to have those discussions and not dislike you over it. Elon, we can't bring our astronauts back from space unless it was for Elon. We just had a hurricane where these people can't have internet unless it was for Elon. If you're somebody from the left and care about the environment, the only person that really developed an electric car everybody loves is Tesla. So you shouldn't dislike Elon because he hinges on the belief of the First Amendment.
They're saying that there must be a deal for Elon with Trump where his businesses will benefit instead of obviously the preferred candidate for Elon Musk would be someone who wants to make the EV transition
Elon's
even more
preferred candidate is the Constitution more than a person. Overwhelmingly, look, I've known Elon for more than before he was very wealthy, and he's always hinged on one thing. He is direct. It's about the Constitution. And what's moved Elon was buying Twitter and seeing what government has done and trying to knock down people's First Amendment rights, even if it goes against him.
Do you think you're going to lose the Republicans lose the House?
I don't think so. I think it's the environment.
60% Democrat on the probability now on politics.
Okay, then let's walk through it. Republicans start by getting 3 more seats in North Carolina. They get the 4th. They'll pick up Alaska. We'll win 1 in Colorado. We've got 2 in Michigan with Slotkin leaving there. We can pick up. The problem being is with the asterisk there, it's easier to win seats this cycle than the last cycle. Democrats have more money. In the last cycle, we had more money than the Democrats. We were on offense. Right now, the Republicans are playing defense. That's a problem.
Can I ask, earlier we had Frank Luntz on, and he said this is so close. He doesn't think polling has gotten any better than it was before. He could see a situation where it's 268 to 270 in the Electoral College. And I know you talk about how we really should be able to disagree with people and see it, but I just wonder if there's a bit of a tinderbox that's building up in this nation right now. If it's a really super close election that hinges on a few thousand votes.
If it's a really close election, then the polls are right. I think what the country needs is a decisive election. Because if it's close, everyone's going to assume, I was so close.
If half of the country thinks that they got the election stolen.
The other thing I think the country needs is, look, I think we should say right now before the next election, when you come down to 2 candidates, they have to agree to 4 debates. 3 debates, each one has to be on an individual topic for the whole time, whatever the top topic is. Economy, immigration. And the 4th one is a free-for-all. So the country also gets educated on the issues itself. And they'll share ideas, right? And then the other thing has to be is, our last 2 elections were not people going to the polls to vote for someone, they went to vote against someone. We need an election about ideas. Presidential elections should be aspirational. What should the next 4 years for this country be? And then when the electorate decides that, it's easier to govern. You can move those policies because the country decided that. This is where we're failing one another. And look,
what would be the issues you would say for is it the economy?
The economy?
Foreign intelligence?
I'd say the economy, the border, foreign policy.
Right. Yeah.
Those 3 are core to what
Can I just ask you a question? And I think, look, I think there's a lot of people who look at this election, this particular election, and they're actually not even looking at the policies that you're talking about.
No.
Or the ideas. The ideas have nothing to do with it. I think they're literally looking at the character of these 2 individuals. That's it.
Mm-hmm.
And they're saying to themselves that one, I think that Democrats would say that they believe that the other side is effectively disqualified, right? And by the way, they would actually look at words that you used and some of your peers and colleagues used after January 6th, where you said that he was disqualified, and that would be the evidence enough. But I'm just saying that's what they would look at, and they would say.
So you're saying democracy is on the ballot?
I'm saying that there is a large portion of this country that looks at this idea, just broadly speaking, about you talk about the Constitution, democracy, this and that, and they look at January 6th, they look at the character and some of the things and the hate and the sort of disposition of the two candidates just on personality alone, and they say to themselves, I'm not even looking at the policies themselves, right? I know people who would look at this election and say, you know what, Vice President Harris, she could be, I know people who would say she could be okay to fine to maybe bad. And the same people would say, I could see Trump be all the way to good to absolutely horrific, right? And that delta is just too much.
Yeah, but
I'm just saying, like that's a little bit of the calculus here.
Okay, the point you're making, for the same reason, and that's why I asked you about democracy on the ballot. I think both sides believe that. And I believe there's a big core of people who don't ever want to vote for Trump. Personality, whatever they want, or January 6th. But I'll tell you, there's a big group on the other side that believes the exact same thing on the Democrats using the court system to go after somebody politically. So this is why they both think it's a big issue, but they both view it totally
I don't
differently.
think you should be able to judge either side as being bad people, and that's what I hear
But they're not bad people.
That's what I mean,
And
but I hear it every day.
This is the difference, though.
Right,
You should respect somebody that has a reason why. Now, look,
and you
but
shouldn't think they're stupid.
but think of this.
When you say about bad people, I
didn't say bad people. Well,
No,
if I said
but
bad people, I don't mean it.
here's the thing about the good people, bad people thing. People look and say, and now you have to decide that courts and juries in America are no good. If you want to take this position, but people look and they say, here's a person who has been in court, who has been convicted on one end, has been
Would Trump ever have been in court had he not won
found
for
to have
re-election?
raped somebody? You can go through the bankruptcies and all. People just look at that and they say,
Andrew,
right?
you know
He's
he
not
would not
found
be
to have
in
raped
court if he
somebody.
wasn't a candidate. But beside all this, look, nobody's bad. You respect everybody's opinion. But let's get to this
But there are
point.
no court cases that involve her doing any
you
of these
just
things,
had
right?
And there's no case where she even ran for president. She never went to Iowa. She never went to anywhere else. So you just had the last election during COVID where times were different. Now you are having an election where somebody didn't even run for office and then got put on the ballot.
I'm
so
not
it's
disagreeing
a
with that, by the way.
Situation.
We'll
And
stipulate that
Donald
that's
Trump
the
was
case.
not convicted of rape in the case involving Jean Carroll. New York jury found him liable for sexually abusing Carroll and defaming her in a civil.
So
okay,
is that a good person or a bad person?
Don't you?
Is that a good person or a bad person?
I'm not saying that, but
Well,
don't you think you should be more careful if you say someone was convicted of rape?
I didn't say the word convicted. I said
you
found
did.
to.
Well,
Found to. Found.
I think
That
you
was
said
that's the language. Go
Okay.
Andrew, but
This is our problem.
But you don't get anywhere with 50% of the country. They still.
They don't believe judges. It's like they're.
I guess not.
don't-
They've litigated through this and still decided to support him.
Apparently. And
That
and the
doesn't.
question is,
You're
why
not
is that?
smarter or a better person than them because of that.
I don't know. Maybe I am.
I know. I know you think that.
Okay, I respectfully
I know
both
you
of your
think-
positions, but my point is exactly making this is where America's at. You didn't talk about a wide open border and who has what policy to fix that. You didn't talk about inflation.
Right,
Who
no,
has a better policy for making our economy stronger? We're not talking about foreign policy where it's
We could
very
have summed
challenging.
it up.
We've got
Orange
a
man
world.
bad. It's
Yeah.
the same thing. We
Yeah.
see it. The TDS. We see it. It's orange man bad, and you're never going to get anywhere.
You gotta let.
It's my life. So.
But we're in a major
it's
challenge right
entitled
now.
to that.
I mean, you talk about the economics of every day. We've got a debt about to break us. We've got a world that looks like 1938.
By the way,
We
on
haven't
the
had-
debt front, I do not think that we've heard from former President Trump with a true demonstrable plan to reduce the
And we
debt
could have
deficit.
talked
Let's just-
about the taxes. He's spending all kinds
But
of
by the
money.
way, I don't think that Harris has
Former
a better
Speaker
plan to
Kevin
deal with the debt
McCarthy.
deficit either.
We'll be
Nobody
right
does.
back. They're taking us out. We'll be right back.
Welcome back to Squawk Box. GM CEO Mary Barr expected to tell investors how the automaker is adjusting EV plans at its investor day today. Phil LeBeau joins us now with more on that. Good morning, Phil.
Good morning, Andrew. Pop quiz time. Do you know what this is? Take a guess. This is one battery cell. One battery cell. I want to give you some perspective on the ramp up in production of battery cells here at the Ultium Cells production plant. Ultium Cells, by the way, a joint venture between General Motors and LG Solutions out of Korea. There are 36 of those cells in each of these carriers as they go through final production here. Some perspective on how many they are manufacturing here. Look over here. It's a little hard to see, but all the way down there, you see all those blue crates? There's about 2 million of these cells that have already gone through production down there. And then as we come across over here, I'm going to show you just how big this facility is. By the way, they're only at 40% capacity. They're just scratching the surface in terms of what they plan to do and manufacture here. Another 3 to 4 million cells in these crates over here. All of these cells, by the way, will be manufactured and out the door in 15 to 20 days. And again, they're at 40% capacity. Why are we in here? By the way, first cameras that have ever been here for a live report in the battery production area. The reason we're here is because this is critical to what Mary Barra will be talking about today at the GM Investor Day. EV variable profitability. That is the target that they have set all year to get there by the end of this year. Where are they on that path? Do they still believe they can get the variable profitability? They are clearly ramping up EV production. We saw it yesterday at the Springfield plant. You clearly see it here in this battery cell production facility. Also, peak profits. EVs are a big part of the future for General Motors, but peak profits right now in terms of internal combustion engine vehicles, more than a few people are questioning if they can continue being as profitable or growing profit in that area. And then finally, what's happening with China? Is there a restructuring in the future there? General Motors, as you take a look at shares of GM, they've lost $210 million in China in the first half of the year. There was a time just a few years ago where General Motors was making a couple $2 billion a year in China. But as that market has changed dramatically, General Motors is facing some tough questions there. All of those questions will be front and center when we talk with Mary Barra exclusively later today ahead of the GM Investor Day here in Spring Hill, Tennessee. We'll discuss not only China, EV production, the ramp up in EVs, getting to variable profitability, and where General Motors is right now, guys, in terms of its plans for continuing to grow profits. So lots to discuss with Mary Barra, and this is a very cool place to be in, guys. You truly see how quickly EV battery production is growing when you're in a facility like this.
Okay. Phil LeBeau, thank you, sir. We'll keep an eye on the coverage all day. Appreciate it.
All right, still to come this morning, tracking the Hurricane Helene recovery efforts. We will talk to a local reporter covering the storm's devastating impact on North Carolina, who is fact-checking the misinformation related to the hurricane. Squawk Box will be right back. is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And among today's top stories, soda and snack maker PepsiCo trimming its full-year organic revenue growth outlook following its second straight quarter of weaker than expected sales. For the third quarter, Pepsi did beat profit expectations, but demand for drinks and snacks fell. Pepsi says volume in both its food and beverage divisions declined 2% in the third quarter. Honeywell unveiling plans to spin off its advanced materials division as soon as today. The public company could be worth more than $10 billion, and that business and Honeywell's remaining operations might have more flexibility for making deals as a result, they say. And finally, check out shares of Samsung, the Korean tech giant, saying that it is forecasting worse than expected third quarter profit. The good news here? Samsung is guiding for a 274% surge in operating profit during the quarter. The bad news is that's still below what the street was expecting. That year before quarter had been a really difficult one. The company's vice chairman issuing a rare apology to Samsung's customers, investors, and employees after the guidance came out. The stock off by 1.1%.
Okay, take a look at futures right now, up about 60 points on the Dow, S&P 500 up about 25 points, NASDAQ up about 101 points. When you get over to Frank Holland with a look at this morning's pre-market numbers. What's going on, Frank?
Hey, good morning. We're going to start with Oppenheimer with a downgrade on Microsoft from outperform to outperform. Analysts say they believe the revenue and EPS estimates for this name are just too high, and they overestimate the enterprise adoption of AI. You can see shares are down 0.33%. Analysts are also concerned about OpenAI losses. They believe that could reach $2 to $3 billion for Microsoft in fiscal year 2025. They also cite falling interest rates as a tailwind. This is interesting because they say Microsoft will earn less interest on its $76 billion in cash. Again, shares of Microsoft down just about 0.33% right now. We also have analysts downgrading Qualcomm to sector weight, saying the company, they may have overestimated the chip maker as an AI play and added really a long list of headwinds, including losing market share in smartphones overall, fewer shipments to Apple as it develops its own modem for the iPhone 17, and the stock trading slightly above its historical valuation. Again, this is BTIG doing a downgrade of Qualcomm. Shares are down 1 and almost 0.25%. We also have a double call in financial. This is BTIG upgrading Affirm and downgrading American Express. Affirm is now a buy. Analysts say Affirm is taking market share in consumer point-of-sale finance, and they agree with the CEO of Affirm that it's Amex for the other 99%. Take a look at shares of Affirm. They're up just 5% right now. And also we're looking at American Express. It's now a sell. Price target of $230. That's important because that implies about a 15% drop from where the shares are trading at right now. You can see shares are down almost 1%. Analysts say they expect the soft macro environment to drive deceleration in its build business. They also believe estimates for revenue and EPS are inflated, and they say Amex could be set up for an earnings miss. Again, shares of Amex down almost 1%, Affirm up 5% right now. Back over to you.
Okay, meantime, Florida preparing for Hurricane Milton. According to the latest release from the National Hurricane Center, remains a Category 4 storm with maximum sustained winds of 145 miles per hour. It's moving now towards the west coast of Florida. That Florida peninsula at 12 miles per hour, expected to make landfall there tomorrow evening. Now, the state has ordered evacuations that cause major traffic jams. I don't know if you've been watching either on other networks or online. You can see them. They're headed away from the Tampa Bay area. They're also scrambling to clear remaining debris left over from Helene just 2 weeks ago, which could turn into projectiles with high winds, and that makes all of this that much more dangerous and complicated.
Meantime, recovery efforts from Hurricane Helene, which has now claimed at least 230 lives, continue across the southeastern United States. Officials are tackling storm damage and misinformation related to the storm. Let's bring in Julia Coyne. She is a reporter with the Charlotte Observer. She's been out in the field covering the hurricane's devastating impact on North Carolina. Her newspaper, in fact, has a reality check page to fact-check misinformation related to the hurricane and the recovery efforts. And Julia, we want to thank you for being with us. I know you've been out on the ground there. Tell us, first of all, what you've seen in terms of the devastation. And by the way, you're someone who comes from Sanibel Island in Florida. You have seen hurricanes before, but what did you think of what you saw this time?
Yeah, so I've been on the ground and also up in the air and embedding with pilots who are using helicopters to airdrop supplies, and also pilots who are in small bush planes, surveying the damage, trying to see if roads are accessible, if anyone's sending smoke signals, that sort of thing. So I've been both on the ground and in the air, seeing the damage, and it's extensive. It's eerie how common the sights become, both when you're walking around and flying above, just seeing all of the devastation in the area.
I mean, I've been reading about how they're still trying to recover bodies at this point, going out with cadaver dogs, taking them on the rivers, trying to sort through the debris that's piled up all over the place. This is a horrible situation. There have been lots of concerns about the abilities of the rescue efforts. What would you say with what you've seen?
Yeah, so I have been mostly involved with volunteers on the ground. I've met a few organizations leading relief efforts and rescue efforts that have brought those dogs out. I haven't heard numbers above 1 or 2 bodies recovered per town, but of course those numbers continue to develop every day.
What do you think about FEMA's response to this? There have been a lot of accusations that have been made that FEMA is not doing enough, that they weren't prepared for this, that they are turning away some of the local volunteers who have been trying to bring things in. Is that the case?
I've not seen that. Again, I have been involved with those volunteers and talking to people on the ground. So I can only speak to what I've run into in those situations. And I can say that a lot of people who are in these very isolated communities say that they haven't seen government efforts. But again, that's just what they're seeing in these very small towns that only locals really know how to navigate.
Right. What is most needed at this point? What do people there say that they would need from the outside, whether that be volunteers or the government?
Yeah, these people are they're self-described stubborn people. So when we show up with supplies, at this point, most of them are pretty set. They are still asking for diapers above the size of 5, and efforts are now shifting to keep people warm as cold weather rolls in. That can mean blankets, socks, coats, that sort of thing.
I know one of the places that you went was to rescue a 70-year-old woman and her dog. She was running short on medical supplies. And that's really another layer of things we haven't talked about. Even if you were there and you were supplied for things, you may not have anticipated that you'd need 2, 3, 4 weeks of medication or other items. How big is the need for that?
Right. So in that area specifically, they received a few days of rain before the storm came. So this woman's doctor's appointment was canceled, and she did not have her heart medicine even before Helene came. So I was with a helicopter who was able to lift her out, but that's just one story of many. That's why access to roads and areas to land have become so important, because that's the only way to get to these areas and get people, a large population of who are elderly, the stuff that they need to continue.
Julia, thank you for sharing your stories with us and for the efforts that you've put in there on the ground. We appreciate it.
Thank you.
All right, coming up more on the markets, we're going to take a look at some key technicals following the S&P's worst day in a month. Plus, what is Tesla gearing up to reveal at its much-hyped robo-taxi event this week? What would constitute a win for investors? What would be a disappointment? Top analyst Tony Sacconaghi will join us for that conversation. Stay tuned. You're watching Squawk Box on CNBC.
Welcome back to Squawk Box. Beautiful shot there of the Capitol. Meantime, Berkshire Hathaway further trimming its position in Bank of America. An SEC filing now showing Berkshire sold another 9.6 million shares in recent days for about $383 million. The conglomerate now owns just a little more than 10% of B of A. That's right above the threshold where Berkshire has to report its stock moves around the bank. B of A remains Berkshire's third largest holding behind Apple and American Express. How much do you think of these moves are aimed at trying to stay within a certain ratio, or do you think that they are actually a sign of the way Warren may be thinking about B of A?
I don't know. I do know that once it falls below 10%, he will not have to report it in 3 days, so you will not get the information as quickly. He still owns far more of Bank of America shares than he's sold. I think it's north of $30 billion versus the $10 billion that he's now sold. So he still is and by the way, I think if you look back to July, that's when he started selling. I don't know how much the stock is down from then. September, July. I don't know if we can see a longer term chart. Over 3 months. Yeah, it's come down since he started selling, and it's been under pressure most of that time, I believe.
No, it's looking like a good move already, but time will
selling
tell.
the shares themselves will put pressure on it.
Time will tell. Some interesting things. Let's talk about it. In fact, there are some. I don't know. I've been troubled for a while, but we know that both the Dow and the S&P 500 seeing the worst day yesterday since September 6th as oil prices and treasuries rose. Join us now at the technical levels that he's watching. Jason Hunter, head of technical strategy at JP Morgan, 22 and change on the VIX. There was some weird repo stuff going on long-term. The 10-year has been headed higher. Are there concerning underpinnings, or is it all systems go?
Well, I think it's a little confusing given the leadership changes we've seen since midsummer in the equity space, where you've had defensives and cyclicals rally at the same time and kind of take the baton from tech, which doesn't entirely make sense. It looks like the market's trying to make both tail risk bets at the same time going into the September FOMC. But regardless, that's got the S&P having broken out after the FOMC up against an all-time high, which from a pure just chart-based perspective is a positive. It's maintained that breakout. Hasn't been able to build on it, but a breakout's a breakout.
That's the question, I guess. Is it going to break out, or is it not? Is it going to go down? And do you see any signs that we could be topping out?
So I would say when you take the big step back and some of the commentary we've had over the last months, when you look at how long the curve's been inverted, and now you're starting to get a bullish steepening impulse, generally that tends to coincide more with bearish equity performance, at least over a short term. As the Fed's initially starting to ease, but we haven't had the data to really suggest that recession's imminent. Some of the labor data softened, but the unemployment rates tick back down. The demand data's picked back up, and you can see the equity market is quite confused by that. Again, with the leadership shift that we've seen. So at the end of the day, it's a lot of mixed signals. The individual charts across different asset classes, you get a lot of things that don't necessarily fit together. So what I've done in the recent months is I'll take each chart at face value and leave the kind of the macro overlay aside, because the pieces aren't necessarily fitting together well right now. And if we, like I said, if we get a breakout in the S&P, a breakout in the Russell 2000 like we've had after FOMC, that's a bullish bias. I'll put my stop just underneath the breakout levels and act more like a trend follower than try and get ahead of the things, because that, quite frankly, has not worked.
Do you try to handicap geopolitical events, or do you don't even try?
No, so I think you recognize what those risks are, and I think it's more about risk management around the views and trades, where you'll set a tighter stop. Or in some of the things that tend to go non-linear, if you think about Brent prices, where they've now traded back up into the summer range, and you recognize that just may not be a move to the upper end of the range, that could really be a blow-off. You just recognize the risks around the chart-based views, and like I said, you set your stops accordingly.
Okay, so what about the breadth of the advance right now? Finally, something that turned into a positive, or still something that makes you skeptical?
Yeah, so I think that's where you see the Russell breaking out, small cap having led large cap through the latter part of the summer. You're getting a broader breadth of things that are participating in S&P rally, which generally is a positive. That's an early cycle type story. Let's call that a bet that the manufacturing cycle globally is going to start to repair itself. And you can see with DM central banks easing, some policy news out of China, That all makes sense right now, but again, you also had defensive leadership at the same time. So those two pieces don't exactly square well together. It's a
People
bit
just
confusing.
covering their bases.
Exactly, I think that's right. And like I said, you treat in that world, I just treat each chart separately, and I'll put my stops in place after a breakout. I'll chase that, and I'll act a bit more reactive than trying to predict where the next pivot's going to be. And hopefully things start to clear up a bit more, and we can get some foresight here. But for right now, I think being reactive and keeping tight risk tolerance is the right way to do it.
What other markets around the world are important to us right now?
So I think the rates market is a big one. In fact, when the 2-year note got to 350 recently, going into and after the FOMC, both the technicals, just looking at the chart pattern, suggest the rally looked exhausted. But when you looked at how the forward curve was priced, just how many eases they had priced into the forwards, historically you really need the labor data to fall apart for the market to price in more. So we actually went short the 2-year note. That quickly is backed up with the help of this Friday's payroll report to a level where I don't think it goes much higher from here. We think 412 is a limit for twos. So whatever concerning, let's say, input that would have into equities, that, the Fed's not going to ease as much, we think there's a limit to that, which could be supportive if the rates market starts to find its footing and you see some rebound steepening in the Treasury curve here.
Right. Okay, Jason. Good summary. Thank you.
All right. Thank you.
When we come back, we will take you live to Las Vegas, where the biggest names in gaming are converging. Contessa Brewer is there. She's got a big lineup for us coming up. Contessa, what should we expect?
Hi, Becky. It's great to see you. Okay, well, so first of all, we're seeing 40 months consecutively of growth in the casino industry in the United States. It's remarkable, but the labor costs are going up, and there are headwinds. We're going to talk about that with CEO of Caesars, Tom Reed, still ahead, right here on Squawk Box.
Welcome back to Squawk Box. Futures are up a little bit, getting back a little bit of what they gave back yesterday. 35 points now on the Dow. Nasdaq a little bit stronger, up to 82. S&P up 21.
Going to get over to Contessa Brewer because she's got a story on this. Gambling's biggest luminaries coming together this week in Las Vegas. Contessa Brewer is live at the center of it all. She joins us now with a special guest. Good morning, Contessa.
Good morning, Andrew, and welcome to Las Vegas. Look, Caesars has a lot of news. They just announced new buybacks, a new $1 billion in debt offering, and Tom Reeg joins me bright and early here in Las Vegas. It's nice to see you. I'm just curious how much your share price had to do with the stock buyback, and why does it take that kind of news to juice the stock of a company that has been performing on all cylinders?
Yeah, Contessa, to go back, we closed the merger with Caesars in July of 2020. We all remember it was a different world then. We had a significant capital spending program that we stepped into when we bought Caesars. We had $400 million we needed to spend in New Jersey. We were building an expansion in New Orleans that opens 2 weeks from now that was $435 million.
In time for Super Bowl next year.
That's right. And a new property in Virginia that's over $800 million that will open before the end of the year. As we were reaching the end of that cycle and looking at what was happening with free cash flow and where our stock was, it was an easy decision to start to buy some stock. In terms of where the share price was, we were on the wrong side of the macro trade while the Fed was raising rates. We're a levered company coming out of a merger, and now that the Fed has moved into a cutting cycle, we've seen a turn in our stock.
You also just made a deal with the union late last year that gives the biggest pay hike that your employees have ever seen. You've got casinos all over the country, the biggest operator in terms of number of properties in the United States. What are you seeing about the American economy and where customers are that discretionary income might be a concern?
Yeah, I'd say we're about the purest measure of consumer discretionary given the business that we're in, and it's been remarkably resilient. We had the kind of a bubble when stimulus checks went out, and that faded a little bit as that money was spent. But the consumer remains quite strong. Here you see here in Vegas, I'm sure this week the market is packed. We're running at 99% occupancy year round. The regional business is holding in well, and the digital business is growing incredibly strongly. So we've got a business that did $2.9 billion of EBITDA combined coming out of the merger that's doing about $4 billion now.
Okay, first on Las Vegas, Wells Fargo said its Las Vegas F1 room rate tracker took a turn to the downside with average daily rates down 40% year over year. Is that an indication that there's not enthusiasm over F1? Is that what you're seeing?
I'd look at it more as an indication of garbage numbers. They're measuring really what's 8% of our room base in terms of where rates were. Last year, it was well known that we held rates very high coming into the race, and they dropped as it came. What we learned last year was we needed to fill sooner, so we're not holding rates as high. If I look at F1 for us, it was a lift last year of almost $20 million versus the weekend the prior year. This year, I would say, flat to up or down a few $million versus last year, but up the 20 versus 2 years ago.
And you mentioned the digital business. The powerhouse in this space is FanDuel, and DraftKings coming in a strong number 2. And then there's this fight over the third and fourth positions. How important is it to you? You just launched a new online casino app, Horseshoe, yesterday. How much is this important to the growth of Caesars business? And can you make an impact? Can you grab market share away from the two big players?
Yeah, well, Contessa, I'm old-fashioned. I like to make money. So I measure it based on how much money we're making, not how much market share we have. So our promo spend is a third to a half of what DraftKings and FanDuel have. So those subsidies don't run through our GGR market share numbers. But we've got a business that's approaching, soon will exceed 20% EBITDA margins in a business where most are still losing money.
Before I let you go, we're keeping an eye on Florida and Hurricane Milton. I know your home is in Florida. How are things looking for you? How's the situation for you being here and watching that storm approaching?
It's deja vu from 2 years ago. I was in Vegas watching Ian hit our home 2 years ago. This storm seems to be tracking north of us, but we'll still have to deal with surge, and you should pray for anybody that's in the middle of this. It's awful to go through these, and after the news cameras leave, a week or two from now and go to where the next storm's going to land, the people where it hits will have to deal with this for the next 5 or 10 years.
It is a monster going in. Tom, hoping the best for you and for your family too. Thank you for being with us early this morning on Squawk Box. Andrew, I'll send it back to you.
Thank you. Enjoy Vegas. What stays there, well, doesn't stay there. Thank you.
Coming
up, breaking U.S. trade data. Plus, we've got some hints that this morning's results from PepsiCo are giving us about the American consumer. What's really happening here? We're going to tell you when Squawk Box comes right back.
We are just seconds away from a new look at the trade deficit. You can see the futures are a little higher this morning, Dow up by 40, the NASDAQ up by 80, S&P right now up by about 22. Rick Santelli is standing by at the CME in Chicago, and Rick, the drama is building.
Yeah, we're waiting the August trade deficit, and this is kind of important, actually, and I'll tell you why in a moment. It's hitting the wires, minus 70.4 billion, minus 70.4 billion. actually quite close to expectations. And the real interesting point here is that last month, still unrevised, it might get revised as I'm speaking, it did, but it's a subtle revision. At minus almost 79 billion, it was the largest in 2 years. Why? Well, think about the port strikes and what many companies were doing prior, trying to get ahead of the strike. They were bringing in more imports. The more imports you bring in, of course, that makes the deficit wider. And I think that dynamic, of course, has slowed, not because this August number knew that the strike would be settled, but because many of the importers already satisfied some of the issues, some of the pre-ordering they had done. So this was expected to see that the surge in imports that put last month at the worst deficit in 2 years is easing back just a little bit. And in terms of exports and imports, we also get some relative value and demand between overseas and domestic. And the argument, of course, goes that we are slowing it domestically. The aftermath of the big jobs report can still be seen. Today is the 5th session in a row. Long-dated Treasury yields have surpassed previous days' high yields, staircasing on yields, building momentum. But the asterisk today is short maturities have not done that yet. So it's going to be very interesting. The last 3 or 4 days, it's been the short end that led rates higher. Today, it's the long end. We're actually seeing some steepening. And even though we had a brief visit to an inverted 2s to 10s curve yesterday, it settled in positive territory. Becky, back to you.
Hey, Rick, does the strike have any impact on this? And I know it was a brief strike. It only started in October, but there was a lot of stuff that was getting brought in ahead of time to try and beat the deadline for the strike.
Yeah, absolutely. That really probably had more of an effect in the July numbers that was at minus 78.9 billion. In the August numbers, the fact that it's getting smaller shows that some of those imports that we were bringing in to deal with the potential issues of a long strike probably were easing even before, of course, this is older data, that the importers knew, of course, that the strike would be more short-lived. So yes, the dynamics of the strike, preparing for the strike, the fact that there was a good glimpse into the future that this was probably going to occur really was playing a bit of havoc, putting a lot more volatility in some of these trade numbers.
Okay, Rick, thank you. Steve Leisman joins us right now for more on this too. Steve, your thoughts?
Yeah, Rick hit it on the idea of the impact of the potential strike, perhaps boosting it. I'm interested in the export data, which was up 2%, not a bad number for U.S. exports. Sometimes we get a boost in exports because of the effect that we were talking about, which is the containers come in, you got to send something out. So sometimes there's a little bit better export numbers, but you got to follow the rest of the world and see how the rest of the world is doing. It impacts U.S. growth. It impacts whether or not we have we're importing inflation, all sorts of things. I do want to talk for 1 second about the Federal Reserve. John Williams making a few comments, and he says it will be appropriate again to bring interest rates down over time. That's an interview with the FT. He also says that the Fed forecast of 2 more cuts this year is a pretty good reasonable representation of a base case. Very quickly, Becky, on the probabilities, we're at 88-12, and that's a new number because we have to show this in a different way. 88% for a quarter, 12% for no cut. That 12% is a new feature of the trading. Now, so what happens? You have this problem where you have to look through what people think happens on the front month and then look through that to the next month. So now a 94% probability of a second cut or 50 basis points from here. And then 6% for no cut. So that's how the market is trying to suss this out. We can do a quarter, and then some people think, well, we won't do any more than that, but the majority think there'll be 2 more quarter-point cuts. And what's nice about that is the market, there are your numbers there on screen, the market basically is aligned with the Fed, at least through the end of this year, with the data that we've been showing you about the rapid update, GDP not doing too badly, and inflation. Well, if the forecasters are right, Becky, we've arrived there, at least on the headline PCE. We're going to hit the target this quarter. So maybe break out the party hats at least briefly. Becky?
Yeah, I mean, Steve, we've been trying to just get around the idea of, does it matter if there's one rate cut that's kind of stripped out of this? I guess maybe it matters if they don't do 50 basis points again, because if they did do 50 basis points, the market might reassess everything one more time. But we know the direction that the Fed is
Right.
moving. We don't know exactly when they're going to get, what the terminal rate's going to be, but we know the direction they're headed.
Right, but that was the danger, of course, of doing 50, is the market start to think that it was, the new normal was to do 50, and I think the Fed is trying to advise that is not the case, that we'll probably go back to quarters, maybe every meeting. They may get to a mode of doing every other meeting, depending upon how the growth and the inflation numbers come in. I think it's important, you have to look at the data really carefully, but inside our Rapid Update, we show this bump up in inflation for some forecasters in the first quarter of 2025. You remember we went through that this year with what was called sort of residual seasonality, which you can put in plain English and saying, hey, we had stuff happen at the beginning of the year that we didn't expect to happen, price increases. So that's becoming perhaps a feature of the inflation reporting. And if it's a feature of the inflation reporting, it could be a feature of how the Fed cuts interest rates. And Becky, it's a little bit more than just a quarter. If you look at, and this is a wink and a nod to those in the back, the September 2025 Fed funds contract, what you see, if they've dialed out about 50 or 60 basis points of easing over the next year, so they've kind of reduced their exuberance for Federal Reserve rate cuts over the course of the next year.
Hey, Rick, I'm glad you're still there. I wanted to ask you about the 10-year going back above 4%. It closed yesterday at the highest level since August. All of this conversation we were just having with Steve, I'm sure, playing into all of that.
Yeah, I think so. And I think also the fact that auctions start today, we have 3s, 10s, and 30s. And whenever you have the long end package, it really does seem to excite the long end. And as for the Fed, it certainly seems to me I have to push a little bit back on Steve. There's always this dynamic between the Fed and the markets. I look at it as the dot plots, forecasting doesn't work out well for the Fed. But I think what's notable here is the Fed really is more staid, more static. They're talking about rates are too high, rates have to come down. They've really pushed this dynamic in a huge way, where the market immediately did readjustments after the jobs report. The market is truly data dependent. The market is truly trying to assess new information. I'm not so sure I see that from the Fed. As a matter of fact, it looks like the Fed's trying to quickly catch up to the market's new reality, and that reality can change rather quickly between Thursday and Friday CPI and PPI, and the post-mortem on the jobs report, which blames educator seasonality, teacher coming back seasonality for all the job creation. So the next jobs report and this week's inflation numbers could have an outsized impact on the market. And I do think that if any of the 10 and 30-year long-dated auctions go a little bit iffy, we're going to be looking at long-dated treasury yields moving even higher than they currently have been.
Okay, well, that is something to watch. Rick, Steve, thank you guys.
Right, coming up, top analyst Tony Sacconaghi from Bernstein tells us what he's expecting when Tesla finally unveils its robo-taxi plans. Will they be enough to move the needle for investors? That conversation is next. First, as we head to break, let's check out the shares of Wells Fargo. Wolf Research. Wolf of Wall Street? No, I'm not. Upgrading the bank to outperform from peer perform, saying bad news is fully baked into the stock. Wells Fargo due to report its results on Friday. Stay tuned. You're watching Squawk Box on CNBC. Welcome back to Squawk Box. The futures right now up 40 on the Dow, 70 or so on the NASDAQ. S&P indicated up 22. Crude was pulling back after getting to the top end of its range, down 1 3/4 points this morning, percentage points.
Meantime, a judge's ruling meaning that Google is going to be forced to offer alternatives now to its Google Play Store when Android users want to download apps. The permanent injunction is the most significant development thus far from Epic Games' 2020 antitrust lawsuit against Google. Epic accused Google of anti-competitive practices, including paying hardware companies and Android iPhone makers, or I should say phone makers, to not develop competing app stores. As part of the ruling, Google is going to be restricted from those practices for 3 years. That's according to the filing. Google will also not be able to pay companies to launch apps exclusively for a first on Google Play Store. Epic Games was mostly defeated, we should mention, in a similar lawsuit over Apple's App Store. That trial was decided by a judge, but a jury decided the Google trial. In a blog post, Google said it will appeal and asked the court to pause the pending changes. Meantime, Tesla is scheduled to unveil details of its long teased, and we'll wait for the release of robo-taxis later this week. But our next guest says a lot of questions remain, including regulatory issues around self-driving cars, how Tesla's going to scale the service, and ultimately how much more competition will be in the space. Joining us right now is Bernstein Senior Research Analyst Tony Saganaki. Good morning to you. What do you expect we're going to hear? We've been waiting for this news for a long time. I think it's exciting to many, but also for many, there's some skepticism about when it will actually arrive.
Good morning, Andrew. Yes, I think the consensus is that Tesla will announce a dedicated robo-taxi model, likely to be available at some point in the future, let's say 27 or 28, that Tesla will demonstrate a application whereby a ride-hailing app, that it will provide some kind of update on where they are on full self-driving, and maybe also potentially announce that it's doing some robo-taxi trials. I expect if they did that, those would have to be with an accompanying driver, but nevertheless starting trials in 1 or more cities in the US. I think that's generally what's expected amongst investors. There are big questions about whether Tesla will provide updates on Optimus Robot, or whether it will provide an update on new models, particularly, the revamped models expected early next year, or a lower cost model expected in 27. But I think the focus will ultimately be on a robotaxi, unveiling itself and an accompanying ride-hailing app.
So, Tony, we're looking at the stock now at $242.90. If, in fact, they make this announcement, how does this change the game? How does this change how you would value this company?
Well, I think investors are applying different probabilities and discount rates to a robotaxi service going forward. And so I think it's widely anticipated, but as you noted at the outset, there are lots of questions. There are technical questions about whether Tesla can get to the reliability level with a more limited sensor suite. They only have cameras. Other competing autonomous vehicles have LiDAR and radar, so there's a technical question. I think there's a regulatory question. There's a timing question. And, how competitive is this space going to be? Are prices going to be driven down, and how much value will there be to be captured? So investors are ascribing different probabilities and timing to these scenarios.
What probabilities are you ascribing to those things, and how are you doing the valuation then?
Well, here's how I think about it, Andrew, is I think it will be difficult for Tesla to leapfrog existing players. Uber, Waymo, and others are doing level 4 robotaxi service today in multiple cities. Even if Tesla is able to leapfrog, I think it'll be a limited year advantage. So let's say in a year, Tesla has level 5 robotaxis. They can go anywhere. They have a ride-hailing service. My guess is competitors are going to catch up reasonably quickly. So this notion of having sustained outside profits, even if Tesla were to leapfrog given the technical hurdles and the regulatory hurdles, I think are difficult. And the valuation of Uber is $150 billion. The valuation of Uber, probably in the US is half of that, $75 billion. Tesla stock today embeds we think $600 billion beyond the core auto business, much of that ascribed to robotaxis. So we struggle with that differential given the probabilities that I have.
But let me ask you this in terms of just the competition piece of it, which is to say, you made the argument that you think that Uber and Waymo will have an advantage, maybe given LiDAR and other things, over Tesla. There is an argument to be made, and maybe you'll disagree with it, which is that they have they have thousands, tens of thousands of these cars on the street today that have cameras on them. They're taking in data that can't really be matched. If you look at some of their self-driving features right now, they clearly seem to be the leader or the most advanced in terms of where that would be if you were to sort of set aside what Waymo is doing. Is there an argument to be made that they will leapfrog everybody and that they in some ways already have?
Well, I think the bull case is they will leapfrog. I think it's very difficult to say they already have because Waymo is doing 100,000 rides a month right now with essentially a perfect safety record in multiple cities. Tesla's nowhere close to that. If we look at intervention data from the state of California, where everyone is doing self-driving trials, and we look at that data compared to self-reported data from Tesla, because that's all we have available. Tesla hasn't provided anything in the public domain. Tesla is at best middle of the pack on intervention data. So I think we absolutely categorically cannot say that Tesla is the leader from a safety and intervention perspective in full self-driving. I think the hope is, as you say, that AI and their data stream will allow them to leapfrog and get there, but that's not where we are today.
Let me ask you a different question, which is we were talking about politics earlier today and Elon's support, obviously, of the former President Trump. How you think, and I ask it just as a straight up jump ball, how you think it impacts at all, if it does, the business?
I think, clearly it's a modest negative for the business. I think the principal challenge that Tesla has faced is that it has an aged lineup, and most of its cars are relatively expensive. They're $40,000 and above, but none of them have been refreshed in the last 4 years. At the margin, yes, the core base for Tesla, its base of customers historically has been, coastal customers, East Coast, West Coast, more liberal leaning. And so, Elon's politics may be polarizing to some of those customers, but for certain, the biggest factor is really its product lineup.
And do you think there's any advantage that he gets? I mean, do you think that there are Republicans or Trump supporters historically that may not have wanted to buy a Tesla that say, I'm going to go out and buy one? Are there more of those? I mean, is there a balancing act there or no?
It's difficult to say. Historically, I think the customer base has been likely more coastal, more liberal, more Democratic leaning. Obviously, as you try and deepen penetration, EV penetration in the U.S. is only about 4%. You want to try and broaden that base. And so I'm sure, like anything in politics, there are people taking sides, and it will be offsetting for some, off-putting for some, and maybe attractive for others. But I think if you look at the traditional customer base, they typically are coastal and left-leaning.
Maybe the Cybertruck. Get rid of a big old tank Cybertrucks and run over to Priuses or something, Tony. You know what I mean? For the redneck right-wingers. How about the Cybertruck, Andrew? Maybe the Cybertruck for the rednecks. They go.
I don't know. I mean, I sort of marvel at them. It's not for me, but
it's like a Hummer. It's like a
Hummer.
It's like a. But Tony, it would make more sense for him to go all in on the EV transition candidate. It just would, wouldn't it? If that's what was all he was thinking about was lying in his own pockets, what's good for his own company, it would be the candidate that wants to get to net zero by 2030 through electrification. I think. I mean, you might be right, but a lot of Tesla, the East Coast, they put a bumper sticker on their car that says "Shut up, Elon," but they still drive the Tesla, right?
Right. No, I mean, look, I think politics is really tricky to weigh on the impact on Tesla, but at the end of the day, this is a company that was growing at 50% per year before. And in the last 2 years, even before Elon became more political, we've essentially seen that growth rate grow to zero, and that's simply because they don't have the product.
Exactly.
Tony, I want to thank you. We got some breaking news that Becky's got that's moving to stock right now.
We did. In fact, check out shares of Roblox. That stock right now down by about 6.8%. This comes as Hindenburg Research is disclosing a short position in the stock. It's releasing a report explaining its rationale. In that report, it says that it suspects the company's metrics are wildly inflated and says that the company is either misleading or outright lying to investors about its key metrics. It also describes the platform as what they call a pedophile hellscape for kids, and says that it easily found chat rooms where people were exchanging child pornography. I'm just looking into the report at this point. This is Hindenburg again, a short seller, saying they've taken a short position. After we found a username, they say, we listed our age as under 13 to see if children are being exposed to adult content. By merely plugging adult into the Roblox search bar, we found a group called Adult Studios with 3,334 members openly trading child pornography and soliciting sexual acts from minors.
Did you see the Jeffrey Epstein?
They said they registered as a child, and then they were also able to access games like Escape to Epstein Island and Diddy Party. We found over 600 Diddy games, including Survive Diddy and Run from Diddy Simulator.
Fan accounts called Jeffrey Epstein Supporter. I mean, this is pretty remarkable.
This is since September 2nd, 2024. Third-party monitor Moderation for Dummies has reported around 12,400 erotic role-play accounts on Roblox. They include everything from rape and forceful sex fetishes to underage users willing to do anything.
I got one that, oh my goodness, you see this?
Stock is now down 9%.
Palestine and Israel hangout allows kids of all ages to purchase bombs and knives and attack each other.
The CNBC is reaching out to Roblox for comment on this, but the stock was already moving beforehand because of, again, a short seller's report, Hindenburg, saying that this is what they found when they launched onto it. That stock at this point down by about
Public
10%.
Bathroom Simulator Vibe is the name of one of the rooms. You know, we've had the CEO, David Baszucki, on this broadcast for many, many times since the company went public. My kids, including my daughter, 7 years old, plays on Roblox.
What's the I don't even understand.
I don't know. I was under the impression, I will say, that you had at least had heard historically that they had better controls on their platform than everybody else. But this is damning and raises a million questions. So,
we should point out that, again, this is from a short seller that says they have a short position in the stock before they put this report out, but these will be things that will be able to be verified or not.
But I'll say the other piece of this, which is very interesting, is they're even just suggesting, putting aside what is horrific in terms of some of the these chat rooms that they found and games that they found, they're claiming effectively that some of the traffic is manipulated, meaning they're finding traffic coming out of Vietnam and other places that they think is being led by server farms and other things. So this is going to be big news this morning.
The stock's down by 10 3/4%, and Squawk Box will be right back. right, welcome back, everybody. PepsiCo lowering its full-year organic revenue growth outlook as it reported mixed third-quarter results. Joining us right now is Brian Spillane, food and beverage analyst at Bank of America Securities. Brian, let's dig into this quickly. The numbers for North America were incredibly disappointing. You talked about volume there for down 17% for Quaker Oats, down 2% for Frito-Lay, and down 3.5% in beverages. And I'm sorry, I should say Quaker Foods was down 7%, not Quaker Oats. What's happening? Why are they losing out in volume? Why are they struggling there?
Yeah, there's really two things happening. One, the Quaker issue is related still to the product recall they had earlier this year on granola bars and just getting that product back out onto the shelf. But when we look at the snacks and beverage business, the real weakness is isolated in the convenience store channel. The price points are definitely very high. Consumers are also prioritizing other things. If they've got a limited wallet as they walk into the C-store, they're prioritizing nicotine first, and then the other attachments are actually falling off, and that's really where the serious weakness is right now. Is
Brian,
more in the convenience channel.
We have 10 seconds to the end of the show. Would you buy this stock or not?
I think this is going to be a buying opportunity for this stock. It will get back on track over the next 6 to 12 months, and it's trading at a discount.
Thank you, Brian. We appreciate it. That does it for us. Make sure you join us tomorrow. Right now it's time for Squawk on the Street.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Futures are mostly positive as stocks in Hong Kong suffer their worst decline since 2008. Pepsi kicks off Q3 earnings. A lot of Fed speak today, watching Hurricane Milton, now one of the strongest Gulf storms in 20 years. Our roadmap is going to begin with futures, though, shrugging off these China jitters after Beijing holds off on further stimulus, and one key Fed official says our economy is well positioned for a soft landing.
Plus, PepsiCo trims its revenue outlook. It says U.S. consumers continue to pull back on buying snacks and drinks. And keep an eye on shares of NVIDIA, 6-week high, eclipsing Microsoft as the second most valuable company. That kind of happened during our show yesterday. More gains today, not for Microsoft, but for NVIDIA.
Let's begin with the markets from the U.S. to China. We mentioned Hong Kong. Actually, the divergence, Jim, between Hong Kong and Shanghai was historic.
Yeah, and let's remember also, there's some crazy stuff going on. There's this hot money component. Like, when there's not enough money, hot money, that can go by Shanghai and also by NVIDIA at the same time. So the money flows back. Finally, I mean, they didn't announce stimulus today, and matter of fact, they're putting the brandy, Hennessy, one of your favorites probably, Hennessy, they got a tariff one. Well, they're counting the cases. But all I can say, Carl, is that if we could get that money back, if we could get the Chinese money, remember when Dave Tepper, who was like the best in the world, was saying everything? Well, today it's like nothing. So if the money comes back, then I think that you'll see a decent opening.
Right. They had this press conference with this National Reform Council where I guess the details on stimulus were pretty light.
Right, and we did, the whole essence of it is it's the bazooka. And David, the bazooka can't just be done for like 3 days. You gotta like bazookas. I'm not talking about bazooki. Don't get me wrong. Bazooka. Bazooki is robots.
You talked about the smart money guys, fast money guys.
Right.
There was this expectation somehow that after China had been closed for a week, that all the domestic Chinese investors would rush to buy.
Yes.
Because stocks were up so much. Remember, other markets, Hang Seng, have been open, or
Hang Seng, China was closed. Hang Seng's been open. That's why Hang Seng is now reflecting the new market.
In fact, the Chinese were like, "Oh no, sold to you."
Right.
Thank you so much. Now we're up. Take a look at Baba.
They did it again, is what you're telling me?
I'm just saying, look, I mean, this is what's happening, right?
No,
Stocks went up. I mean, look at Alibaba, right? They're all right. In a week, 2 weeks. We know what happened to so many of these companies. But Baba's multiple went from what, like 8 to 14?
13. Yeah, absolutely.
Weeks.
I did that last night, and frankly, they still have a huge amount of cash as a market.
Okay. I mean, maybe it didn't deserve to be 8. Does it? I don't know. But now, of course, it's going to be down, or as much as 7% this morning, as the Chinese come back from vacation, not to buy but to sell.
No, well, they didn't get, they didn't come and get like some sort of $1,000 per person thing like we did for COVID.
No,
they didn't do it.
No, They didn't.
The Chinese communists
To
have
Carl's point, there's been a lot of hope built into a lot of announcements that did come without specifics behind them, or at least in some cases.
But
and
David,
so we have
liquidity,
to wait and
liquidity.
see.
They put a lot of liquidity in, and it looked like that you could buy back stocks for without putting any money down. If you're a company, the companies were the two that were cheap were Baidu and Baba, and they're still cheap on a multiple basis, which would make it so that if you're a smart person, you might just say, okay, look, now that it's finally coming down, let's buy the two that are good, Baidu and Baba. Let's buy those two.
Interesting piece in the Times today looking at how e-commerce has actually fueled Chinese deflation over there. Pinduoduo gets a mention. Remarkable things that are happening. Meantime, our own economy getting a vote of confidence from Williams of the Fed tells the FT that we're well positioned for a soft landing.
Right. I mean, you tweeted that piece, and I said, okay, this is watching the futures. Why aren't the futures coming down? I said, oh, well, first of all, the money flow back from China. But second, we've got Fed speak that actually says, listen, don't panic here. We're going to do the right thing. Now, what I find so interesting, David, is we can just keep doing this. We can keep talking about Fed speak.
Okay.
Or we can say, you know what? We're in earnings season.
Yes.
Let's focus on earnings, because
Please,
that's
let's do
when
that.
stocks change
Much
price.
happier doing that. Really have
That's when
nothing.
stocks change price.
Yes, they do. So let's do that because I have no interest.
Okay,
in
so
talking.
PepsiCo. We talked to Ramon.
Yeah, let's talk PepsiCo.
Okay,
Stock is going to be down a bit. The organic sales growth was not quite what had been hoped for.
Yeah, look at the stack,
Bottom
the
line
so-called
is going
stack.
to more or less stay the same.
Okay, but I think what matters, and this is where I think people at home, I refer to people at home because they watch us. Very bad. David, listen to me. See, when you have a stock that's down, and then they come and everybody says, listen, I'm going to guide down, I'm going to guide down, I'm going to guide down, and then they guide down, like, so what? Nothing really happens. That's what's happened. This stock was at 165. They're trying to jam it down to 164. They couldn't. This is like 605 to 610. David, the fact is that there's, it's exactly what we expected. But matter of fact, when they put money behind Lay's near the end of the quarter, Lay's actually went up 3. So you may think that this is, well, wait a second, it's GLP-1. They have they're doing small form factor potato chips. They're selling very well. They've still not seen any diminution of sales from GLP-1s.
No, we talked about that. There's still a relatively quite small percentage of the population that's on them.
Correct.
But there is certainly the possibility over time, and we're talking years here, particularly as you get normal oral formulation of GLP-1s, that you're going to have a wider and wider part of the population use them. I don't mean just wide this way. I mean wide.
Oh man, you put on bump. But here's what Raymond would tell you. Listen, it could happen. We're going to be ready. He is not he's not a dismisser. He's not a Luddite when it comes to GLP-1s.
All right. So you clearly are somewhat positive on this stock.
Well, no. I'm positive on the price is such. Remember, at 175, not positive. At 165, wait a second. How many people are going to downgrade this? I'd say I feel the same way about American Express. So you know, give me a break here. But I do think that Pepsi is an interesting stock because if they spend and they have the leeway to spend because they've got cost controls, then the stock can come back. So I'm not saying sell it here.
Right.
No,
Well,
I'm
to
not.
your point, it's really not looking like it's going to be down very much, at least right now in the pre-market.
Well, because it's been down every
23
day.
minutes before we get started. Pepsi continues to expect core constant currency EPS growth of at least 8%, with a 1% FX headwind. So you're talking $8.15 in EPS for this year.
I want people to understand what you just said.
Yeah.
Is the actual story of Pepsi.
Okay.
That's unbelievable. You got it. So it's going to be like Coda.
Every so often,
No, you're very good.
Thank you.
No, it's 8%, and that's why. Because like when you see these things, they did not guide the so-called algorithm, which is just a fancy way of saying we didn't guide down from what we said we would do, and that was terrific. I think Ramon LaGuardia is a great modern-day executive who goes around the world, looks at things, and say, look, we have to have a little better, healthier snacks and smaller form factor. They made a great investment in this Siete chips, which is a vegan chip. People, well, you don't know about vegan. But in the end, they have a Middle East problem.
He did say that there are pockets of geopolitical tension and macro pressure that will continue to weigh on international markets
Egypt,
into
Pakistan,
2025. In fact, take a
Turkey.
listen to what LaGuardia said on the call.
we knew this year was going to be a year of normalization, and that's what's happened. The consumer is reassessing patterns and with mobility and some of the financial situation. Now, going forward, we think that the category will continue to grow at the pace of the past because of the long-term trends.
I don't know if you saw Katie Huberty's chart out of Morgan Stanley today, looking at how consumers are trading down with less prevalence, at least in groceries.
I thought that was very interesting. I looked at that. I always read Katie's stuff, and it is a trade down. But I would say that the way that people are trading down is they're just going to Amazon. By the way, Amazon, look, Walter would say best channel they have in terms of growth. Okay, they also they also have that some part TV. I don't want to get too excited about TV. But you take a look at Walmart. Yesterday there was a piece saying that Walmart was starting to cut into Amazon. I find that to be a little fatuous. But they're going to Costco, Walmart, and Amazon. And you may not think they're trading down, but when you look at the prices of all three, I don't know if you looked at Prime prices today. Holy cow.
It's Prime Day.
Oh, load me up with Apple. I know I'm going to hurt the numbers of all the bears, but there are some deals in Apple today on Prime. You've got to check them out.
Oh, I will. Thank you for letting me know.
It was a valuable piece of information.
And I responded by saying thank you. What's the issue?
Carl, let me go back over some of this Pepsi stuff. Now,
we got to get on to Hurricane Milton.
It's a major storm.
No, I know.
Milton's now Cat 4, expected to return to Cat 5 today, barreling toward Florida's west coast nearly 2 weeks after Hurricane Helene battered that region. NBC's Jesse Kirsch is in Sarasota this morning with the latest. Jesse, good morning.
Hey, Carl, good morning. We're in an area that could be getting twice as high of a storm surge as compared to Helene. I want to give you an idea of what that looks like here. The water level on this home was around my waist height from the last storm. Again, we're talking about twice as high potentially now. Sorry, we got a lot of bugs out here. You can see all this debris that is left behind. This is a typical scene after a hurricane. We've got furniture, we've got food, we've got all kinds of other items out here. But this is going to become potentially more problematic once Milton makes landfall, because all of this could become projectiles. We're talking about winds that could be gusting well over 100 miles per hour. We're also looking at something that in storm surge that could become a battering ram going into structure. So on top of all of the typical preparations, the calls for evacuation orders, officials are also scrambling to get as much of this out of the way as they can. And some people are taking it into their own hands as well. This home's owner told us that he paid out of his own pocket hundreds of dollars to get a crew to start removing some of this debris, and this is even after some of it has been taken away. Just gives you an idea of how much stuff is out here. It can be concerning in terms of exacerbating damage. It also can make it harder for first responders to get to people in the aftermath of the storm. So all that is going on top of what we typically are talking about when you have a major hurricane barreling towards shore. The evacuation orders, people stocking up on non-perishable food, on water, pre-staging of resources, pre-staging of power crews, that kind of thing. So all of that is going on, but this is an added thing that is being looked at. And again, this is the second major hurricane that we were expecting in the same region in less than 2 weeks. This area has been very hard hit this fall, Carl.
Jesse, appreciate that. Jesse Kirsch watching Milton. Officials definitely speaking in a sterner tone regarding evacuation. Jim, today, Piper's all over the insurers. Goldman tries to put a number on the impact on Disney.
I thought that was very important because I think Disney's actually experiencing some good business away from this, so I have to be conscious of the fact that if 150 to 200 million, let's say they lose that in sales, I mean, you can come back from that. Disney is having it good at the box office too. My worry here is just that there's going to be kind of an existential thing, David. Florida is, yesterday there was a really good piece in the Journal about how Florida is no longer a destination. But Florida is so built.
It's going to be uninsurable, right?
Uninsurable.
In some way. And that's certainly, and we talked about this yesterday, we will continue to, of course, given the migration that has occurred into the state. Second most populated state in the country, correct? After Texas, I believe. Isn't that right? I think so. California, I'm sorry. Excuse me. California,
right.
Texas, Florida. Right. Third.
Castellanos.
Sorry, forgot about California. Is California really a part of it? No.
Yeah.
And there was a lot of question as to whether, given the increasing rates of homeowners insurance, the state has a plan, but right now I believe Governor DeSantis has said it's not solvent, really, given all the demand on the state plan. and so it does become a key question for the state as they continue to take the brunt of hurricanes.
Well, but they can raise
different
rates.
parts of the state, by the way.
Raise
This is
rates.
the West, not the East.
But you're saying that they just won't write for you.
They won't write for you.
I mean, Tampa was.
They won't write for you.
And well, if you read the commentary about the storm, it sounds like a bomb.
Yeah, the commentary is pretty scary.
Yeah, it is really scary. And I think that the idea that if you're an insurer that it's worth the risk, maybe it's just not worth the risk at all.
Looks like it's going to be top 5 in terms of Gulf storms. And that number on Disney, you mentioned 150 to 200 for fiscal Q1 Parks EBIT would be worse than Irma, which was 2017.
Yeah, look, you have to look at Disney. It's kind of like PepsiCo. Disney was down badly because of the hurricane. You got to look at Disney and say, okay, what happens after? The stocks come down a great deal. ESPN numbers are okay. Box office is better. It's absolutely true that theme parks won't be that strong, but I think what happens is we asterisk it. We say, all right, that's what happens. There's nothing you can do. I really believe that. I think that people say that Disney destinations will not be stopped by this. People will still go.
Well, and obviously Orlando is not right in the path of the storm, so
Right.
you know but it will stop
It
travel.
doesn't-
It will stop travel.
Yeah, well, it could be so dystopian. Doesn't it to you? Dystopian?
Listen, you hope for the best. I mean, these things do change course.
Right.
And it will and potentially can weaken.
There's not enough attention being paid to this.
Not enough? Of what?
No, to any of these storms, because people have never had this kind of storm before because of global warming.
North Carolina is still in the midst of
Asheville. I mean, people I don't know. I mean, I was with Paychecks yesterday talking to them. They have huge number of employees that are saying, listen, why are people focused on this? So because we're focused on
No, we're trying. We're trying. When we come back, NVIDIA surpassing Microsoft as both companies chase Apple for the title of the world's most valuable company. Take a look at the pre-market. Pretty steady. We'll get to Boeing, Alphabet, Honeywell, Uber. Got some calls on Microsoft, Affirm, Amex when we come back. rising in the pre-market, extending yesterday's gains. The chip giant hitting a 6-week high now, overtaking Microsoft to become the world's second most valuable company behind Apple. Now we got these Foxconn headlines about a Mexico, basically a super plant, Jim.
Isn't this incredible? It's
Make
Guadalajara.
servers. They would make servers there using NVIDIA,
Right.
using Blackwell chips.
They have to.
It's a little confusing.
Right, but I mean, you've got Foxconn. They're not doing it out of the goodness of their heart. Fox chair, Young Lou saying that there was crazy demand. Now, last week it was insane demand.
Yes.
Now it's crazy demand.
Yes.
What's next?
Well, you know,
Luda. Absolutely.
I spoke to Brad Lightcap, the COO of OpenAI, yesterday.
I love that interview.
And I thought there were a number of interesting takeaways. But of course, as they move their model to this 4.0, where you can ask questions and the compute that has to be behind that, well, it comes to one conclusion. Take a listen. We don't have it ready. Sorry.
Well, what would if I had listened to
Oh, now it is ready. Take a listen.
For the first time, you've got models now can use compute when you actually ask them a question. And the more they can think, the more they can use compute, the better their answer gets. And so, much like a human, the more time you can take to think about something, generally the better the output's going to be. We think that paradigm is completely different. It has completely different implications for our infrastructure, completely different implications for how we scale compute. And I think we're only just at the beginning of understanding
All right, well, give me a little more here then. I mean, what does that mean for compute? Tell our viewers, does it mean you need more or less?
We think we're going to end up needing a lot more.
There it is, a lot more.
there it
We
is.
need a bigger boat.
No, honestly, come on. This is really an important interview.
Yeah.
Because along with the Guadalajara, what they're saying is the Blackwell, the problem in the last quarter was not demand. A lot of people are saying, listen, that was a cover. It's they can't make, the chips are very hard to make. It's called yield. And I thought your analysis, and I thought what's happening in Guadalajara confirms, look, it's more than just orders from Amazon and Meta and Tesla.
Without a doubt. And obviously Microsoft is a part of this as well. You guys have all seen this Oppenheimer downgrade this morning.
Yeah, oh, please.
I know. Well, they talk about OpenAI losses. Again, it comes back to OpenAI reportedly expecting a loss of $5 billion, half flowing through Microsoft. They say they reiterate the street's likely overestimating near-term AI revenues. They say as enterprise adoption and infrastructure remains a bottleneck, and you can see more from that. I want to make a point here on this, however, because I do have one my sources who owns the stock who says they think OpCo is mismodeling this as they're including $2 billion in OpenAI costs but not revenue. They have the first quarter Azure up 30.5% year over year versus the company guide of 33%. That would be a 1.5 point miss. There's no reason to think they missed first quarter, so they're adding back that 3% of Azure growth to full year, and that gets you back to a number more or less in line with consensus. So again, at least there's some criticism of this OpCo note saying they're including $2 billion of OpenAI costs, but not the revenue associated with it. Remember, everything flows through Azure.
No, that's right.
No, OpenAI, all that money
that's
for
great.
that's going to
Great.
Microsoft. So.
Okay.
Anyway.
Yeah, that's great now. I love the interview. She's come on.
Kramer's Mad Dash in the opening bell after this break.
Good morning, retail traders. I was listening to the gibberish. Listening to the gibberish. Mm-mm. 5 more minutes. We got the 200 SMA as resistance today. And that's right around 570.40 on the 1 hour, so that's what we're going to stick with. 5746. $570.46.
AC. Take a look at some S&P gainers this morning. SMCI's definitely been a mover last 24 hours.
That knife
We'll get to
yesterday
that,
really
along with
got
some
to me.
news on Honeywell. We'll get to Roblox and a bunch of other movers today. By the way, you can
I know
catch
there's going to
us
be
anytime,
volatility.
anywhere.
I said it
Just listen
over and
to
over again.
follow the Squawk on the Street Opening Bell podcast.
Goodbye. Bounce back this morning. Kind of the 5-day low. They were sounding real negative yesterday. They don't know what to do when the market dips like that. Neither do I sometimes. I've been very, vocal, what do you call it? Very vocal about volatility. Now what the frick? Oh yeah. I'm second guessing these interest rates. After all this time of waiting for at least one cut, I don't understand. I mean, they've already priced in 6. Eating my apple this morning. Got a couple baked potatoes in there in the Instapot. Got a little pop here on the SPY already. They're trying to send a message first thing this morning. Let's do it.
Beams up to 25 stocks in just a few clicks.
Today's the 8th, so we're look at the 9th. Baidu down $8. NVIDIA's got a lot going on right now. SMCI had a heck of a day yesterday. And continue running this morning. We're up a little bit on Carvana. Zim reversed a little bit. Zim. Apple's up. A little sell off on Apple yesterday was a buy. Tesla. We got the 10th coming up, 2 more days. Spies at the VWAP, above the VWAP. USA Red Book year to date 5.4 versus 5.3 prior. China taking a little slap in the face. There's Google. Tesla moving up a little bit.
China.
China. Tesla's the only China one that's up. PDD's the one that's been pumped the most, of quite a bit. And they were pumping Boeing this morning. It's pulled back a little bit. Air Lease received 20 new planes in third quarter. Remember, they're on strike. At the worst time ever. Their pumper, they'll be their pumper. Okay, SPY's at its first support here. Where are you there? The 572s. The 572s at 424, 124. I'm going to scalp these real fast. Yeah, we could pull back on the SPX if we don't break out here. We got lower highs. We could pull back real easily. Bring it back to the 9 at least. And that's $3. SPX put. It's at 5,700 strike. On the put. We could drop down to the 200 as far as that goes if it doesn't hold the 9. Right here, get out. What was that China bear one for the China ETF? I got it. Okay, I'll be right back. I'll leave you with Caroline.
Date heading into it. So now they're actually up about 0.2% despite this miss on the top line. Net sales fell about 0.6% to $23.2 billion. Analysts were looking for $23.9 billion. So miss there. Adjusted EPS of $2.31 did top analyst expectations by a penny, but PepsiCo attributed the sales miss to Quaker Foods North America recall, subdued demand here in the U.S., and then some business disruptions in some international markets, pointing to rising geopolitical tensions for that. Pepsi did say that demand for snacks and drinks dropped this quarter. Sales volumes for both food and beverage divisions declined 2%, and sales volumes were down in every region except for Europe. To be a bit more specific, Quaker Foods North America sales saw the steepest decline. That's down about 13%, pointing to recalls for potential salmonella outbreaks in products that really attributed to that 13% decline. Frito-Lay North America sales volumes, that's the Cheetos and Doritos division, sales volumes slipped 1.5% in the press release. PepsiCo said, after outperforming packaged food categories in previous years, salty and savory snacks have underperformed year to date. And then North American beverage volumes fell 3%. They did point to strength in Pepsi and also in Gatorade, saying that Gatorade gained share in the sports drink category, saw mid-single-digit net revenue growth. In terms of the outlook, Pepsi now expects a low single-digit rise in organic revenue, down from its prior outlook of 4% growth. And it did reiterate its forecast for an increase of at least 8% for its core constant currency earnings per share. In terms of some of the commentary, the call's still going on, but PepsiCo said, we expect consumers to remain choiceful and value conscious as the cumulative effects of inflationary pressures continue to impact budgets and spending patterns, and also pointed to elevated geopolitical tensions impacting the international business as well. So shares are up about 0.2% right now, still negative year to date, but down about 1.4%. year to date. Meanwhile, of course, we always take a look at Coca-Cola when we talk about Pepsi. Coke shares up about 0.4%. Coke's had a very different year-to-date performance. Shares are actually, only about 5% away, 6% away from the highs, and up about 18% year-to-date. Heading into its report, it doesn't report until the 23rd of this month.
Yeah, it's really impressive. Coke's big move compared to Pepsi. Really amazing stuff. With the stock doing so solid as a staple where Pepsi's been struggling. Kind of impressive, too, that Pepsi's not down in this. So it seemed like a pretty weak report, especially because for a long time the thought was that the snacks business was kind of the ballast, and it was, but there's just not really any growth there at this point, like a percent. So it's just a very kind of meager growth, proposition right now. So the stock not selling off. Maybe the market has sufficiently punished them by not buying the stock for a long time. So, all right, let's talk some tech stuff. Let's talk some notes this morning. Unfortunately, they're mostly negative. Qualcomm's got a downgrade. Shares are lower by about 1%. Shares have been kind of stuck too, kind of since the midsummer. So to get a downgrade now, not going to help.
Yeah, certainly not helping today. Shares are off about 1.2% after this downgrade from KeyBank. The analyst there downgraded shares, chipmaker, to sector weight from overweight. Didn't give a price target, but said PCN markets have yet to materialize, saying our previous thesis was that Qualcomm would be increasingly viewed as an edge AI play given its positioning in handsets and PCs. However, given these end markets have yet to materialize in any meaningful manner, we don't see Qualcomm benefiting from a replacement cycle fundamentally, or being given a market premium as an edge AI beneficiary until that happens. The analyst also expressed concerns that Apple will create its own modem because Qualcomm currently builds the modem chips that Apple uses in its iPhones, and KeyBank's supply chain work has confirmed that Apple will begin to ramp its internal modem in stages over the next several years, and ultimately thinks that could take a $1.55 to $1.65 create a $1.55 to $1.65 EPS headwind to earnings. If that actually comes to fruition, that would be the full impact there. So moving to the sector weight camp, or more neutral camp, I will say the majority of analysts still bullish on Qualcomm. If you take a look at the breakdown, 65% rated as a buy. KeyBank didn't give a price target for Qualcomm. The median price target is $208.50. Qualcomm is currently trading at $165.10. So the majority of analysts think that this is a stock that has some room to run, but KeyBank points out some potential headwinds for shares of Qualcomm.
Okay. Yeah, stock really hasn't done too much, so I don't think the market's going to be super panicky about downgrades in Qualcomm. I feel like the note from Microsoft, on Microsoft rather, from Oppenheimer earlier was a little bit kind of more meaningful, but that stock's still hanging in there. So Qualcomm, I guess, just a little bit softer, a little bit more responsive for bears to take a little bit of a profit here, perhaps on the downgrade. More downgrades, though, Caroline. American Express from 2 different shops this morning, despite being a huge winner on the year, up almost more than 40%?
Yeah, piling on American Express, and shares are under pressure because of it. Earnings are on the 18th, so these downgrades come ahead of that. And let's start with the most bearish of the downgrades. BTIG actually downgraded AXP to sell from neutral with a $230 price target. So American Express closed yesterday around $274. As you said, right now shares are down a little bit more than 2%, and this analyst thinks they could fall another almost 15% from here. BTIG says fundamentals are deteriorating for American Express, saying our downgrade is based on 2 key factors that can be summarized as fundamentals are more
That didn't
likely
hold up very
to get
well.
worse than better, yet expectations for rapid improvement continues to climb. BTIG sees greater risk of worsening rather than improvement in some of the key metrics like build business, revenue growth, net interest income, and credit trends, and thinks the macro environment will drive a deceleration in the build business as it likely gets worse, even in a soft landing scenario. So even if we do see that soft landing scenario get achieved, thinks the company's growth in Gen Z further declines, and thinks that unachievable 2025 expectations are based into the share price right now. So thinks that American Express will miss those 2025 earnings and revenue growth expectations. Also points to a firm taking point of sale market share from more established players like American Express and Capital One. So actually upgraded a firm to buy with a $68 price target. Meanwhile, HSBC not going all out bearish, but moving to the sidelines on American Express, downgraded it to hold from buy. Actually raised its price target though to 270 from 265. But if you take a look, American Express shares right now, as I said, down more than 2%, currently trading around 267. So only a couple dollars upside with this new price target, actually, below where it traded yesterday. Continues to think that American Express has an attractive economic model, manageable credit risk, aspirational brand, proven product innovation, strong mind share with younger demographics. So very, bullish in terms of that, but thinks that it's all priced in at these levels because the stock is up 42% year to date now and 79% over the past 1 year. So HSBC does think that American Express can deliver mid-teen annual earnings growth, but says the company's
AXP is American Express.
And reaching its goal of 10% annual revenue growth may be challenging without accelerating economic growth. So less of a bearish call here, but moving to the sidelines because it basically thinks it's priced in at these levels. So American Express shares off today. If you take a look, analysts pretty split on this one, 40% buys, 50% holds, and 10% sells. So that BTIG bear call definitely in the minority. The median price target 267, which is basically where it's trading right now.
That's the one that's more interesting to me is the BTIG note because of the Affirm mention too, as that stock has really defied expectations for those who doubted their longevity in the marketplace. And shares up about 2.5% for Affirm. Definitely worth watching here because if it has the potential to dent Amex's business or any of the other kind of legacy payment businesses, it's a big deal. So definitely an interesting note. Thanks, Caroline. Appreciate it very much. Helpful look at some of the big movers this morning. We'll come back to trade some tech. Dave Mazza joins us from Round Hill to take a look at the MAGS ETF, and it's quite a bit of dispersion within the 7 giants. We'll take a look at the biggest winner lately, which is Meta, but also Tesla in focus ahead of Robo Day.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Let's talk some tech here, as we've got quite a bit of dispersion within the Mag 7 category. Meta has been pretty amazing. Tesla's got a lot at stake with its robo unveil this week. Joining us, Dave Mazza, CEO at Roundhill Investments, home of the MAGS ETF, MAGS. We're going to do some trading and some options, too, coming up. Dave, welcome back. Good to see you this morning.
Hey, thanks for having me back.
So Meta's like in a world of its own. Let's start there as we kind of like maybe rank some of these performances, because it looks like as a whole, the 7 are kind of disjointed right now. How would you describe it?
Yeah, no, I think you hit the nail on the head with that categorization of where we are with the MAGS ETF and the underlying Magnificent 7 stocks. Is obviously at the beginning of the year, we're all focused on NVIDIA. We knew the chip sales. We know the amazing revenue growth. But quietly, Meta was starting to outperform it.
Well, that's because you all were, not you, but CNBC was bashing NVIDIA big time. Now it's back at that market cap. What are you going to do, CNBC?
I'm a believer that we're going to see something exciting out of that. Is it enough to justify kind of seeing the stock rip higher? We'll have to see. But at least going forward, I do think we're in a much better setup for Tesla heading into this earnings season than we had been for some time.
Okay. Flows-wise, when you look at it from the group perspective, from the MAGs, what are you seeing?
Yeah, it's interesting. So many people would expect, sort of with some of the softness that we've seen out of the Magnificent 7 over the last 3 months, that maybe we would see outflows out of course, the MAGS ETF, which is intended to provide exposure to those 7 names. We haven't really seen that. They've been a bit more muted. We saw a significant amount of inflows into the fund heading into the last earnings season. And I would say maybe outsized because expectations were so high for the group. We know indicators like RSI got really stretched. All that's kind of come.
The 572 SPYs got
we have continued to see
down to 109.
It's been more of a trickle over the
now they're
last
at 137.
few weeks, but I actually think that should be priced in, but we will have to see because, as we know, so many of these stocks got punished last earnings season for not delivering on the top line and raising their guidance. And if we don't see that kind of going forward, I think investors are going to continue to be really discerning about what these companies are able to deliver.
Speaking of delivery, I feel like we got to come back to Meta for a second. It's the only one making all-time highs right now. Also, with the context where Apple's been kind of struggling basically since their big event, the Meta trade, is it about Zuck and his persona, the glasses? What's going on, Dave?
Well, look, I mean, I think if there's a history for PR, sort of reinventing images, we know Zuck is going to be the leader of that today, but I'm not sure if that necessarily drives the stock. I mean, just this weekend, he came out with a custom Porsche minivan that he's designed for his wife, which is really, really cool. But other than that, I do think, again, the company has been through a transition, right? We are seemingly so far removed from the Sheryl Sandberg days, the issues of Cambridge Analytica, and all the baggage that was on the stock. I think, in some of the flub of moving so far into the metaverse. What's interesting is that investment, though, into the metaverse has started to pay off early for their pivot now to AI and generative AI. And, I think the idea that they could sort of be AI for the people with the integration into Facebook, Instagram, their other apps is actually a real one. We know they've had the ability to kind of monetize things pretty well going forward. So for now, I think investors are believing in the CapEx pretty sharply, and are rewarding the stock. However,
below 251 over the next week and a half. That's only about 3.5% above the current share price. So you don't need an explosive move. Now, going into that expiry on October 18th, over the next 10 days, when this expires, The option market's priced in about a plus or minus $24 move in the shares. Now, this is bullish in nature with that kicker right at the short strike around 265, which is about that one standard deviation move the option market's priced in. But if you want, if you're more bearish on this one, where it's already rallied, maybe the news is already built into it, buy a put butterfly to the downside because you offset some of your costs by doing the unbalanced or skewed flies on these.
Okay, that's if you want to go the other way.
Yeah, if you want to do
This
the put
is
side, yeah.
more
It's
of a bullish
flexible
approach.
strategy. Yeah, this is a bullish one where you expect a pop, and this is going to be a big robo-taxi event where you can take advantage of all that upside.
All right. I'm kind of thinking that it's going to be impressive too. I don't think it's going to flop as hard as a lot of people think, but
remember they delayed it, so they gave themselves some time to maybe tighten this up. Yeah.
Yep. I mean, the West Coast, this stuff is like pretty smooth running at this point. But is it going to be more impressive than Waymo and some of the others? I think is going to be the bar that we compare it to.
Big Tesla exec that led the Cybertruck and some other launches for this company just left and went to Google Alphabet's Waymo.
Yes, that might
was
be
announced
somewhat of a negative sign. All right, thanks for that. Appreciate the trades. Coming up, we're an hour 2. We're going to talk some banks, looking at Wells Fargo on upgrade. Have earnings. Be right back. This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact...
Big breakout on the SPX right here.
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree.
Double check that address. I can't hear you.
I can't hear you, but look, I sent it out. Should be there Thursday. I'm sorry now. I'll put it back.
Go back and double check that address. Hello. Oh. George.
And that's a good sign. So again, I agree with you. The follow through from the labor report last week wasn't very powerful, but again, maybe some of the Chinese equities took the limelight in the last couple of days. Obviously, in the last week and a half, it's been very strong. But now we're seeing a resumption of the traditional movers, and that would be tech today. And then, of course, some of the cyclicals are selling off materials and energy because of what's going on in China.
It's a good point. The China connection too, given how big that move was coming off today, the money coming back into the tech in the U.S. story. Maybe there was a little bit of trade-off there.
Yeah.
Because I know a lot of folks were waiting for that springboard bounce of Chinese equities, and we haven't seen the animal spirits type of market in some time. So if there is any degree of like zero sum, like if they're taking money to put it into China from elsewhere, then that's something we need to think about. So I do think that's a notable connection. Thanks, George. Good analysis. Appreciate it.
George.
Let's talk earnings. We've got Wells Fargo coming up, and there's an upgrade on the stock going into the earnings. Jeff Pierce joins us for a look at the beginning of the next quarter. Jeff, we are here, earnings season on the 11th, so we got it on Friday. Wells Fargo coming out. What's this analyst saying, getting bulled up so close to the earnings?
Yeah, it looks like it. I mean, we've got, of course, investors are waiting to see these earnings. We've got J.P. Morgan on Friday as well as seeing Wells Fargo report. They're going to be looking for clues on how these rate cuts are affecting the banks and the current economic landscape, how that's going to play into these earnings and valuations. But we do have analysts that are already weighing in. Wolf Research upgraded Wells Fargo to outperform with a price target at 65. They said they see a downside consensus across its rate-sensitive bank coverage. It says Wells Fargo is no exception. However, the risk is better reflected in the stock's multiple, with shares trading at a one-turn discount versus Wolf's target price-to-earnings ratio, the most significant discount in the bank and broker group. Wolf believes that the upside from Wells Fargo eventual asset cap liftoff doesn't appear to be priced in either. And let's start with that, the asset cap, because we know Wells Fargo has really, in terms of their stock, it's really lagged among the other banks because they've had that asset cap of $1.95 trillion put on them. Among other restrictions that they've had on them, it's really hurt their returns, their growth, it's added cost. But we are hearing that that could be lifted in 2025 after they've already submitted a risk and control process to the Federal Reserve. If we were to see that lift on the asset cap, we could start to see higher returns and earnings come in. Of course, Wells has had some recent regulatory problems. We saw some issues with their risk management practices, their anti-money laundering control, so certainly that could play a role, but we've largely seen the market shake that off, so it seems like very good news if we see that come to fruition in 2025.
Okay. Downtrend definitely in place. Not hard to spot on the chart, but to hear the positive commentary about maybe where there's a potential growth here. Wells Fargo still kind of sits alone in the category as one that's sort of had artificial limits put on it over the years. So always kind of maybe the idea of market share take back kind of lingers in this stock. It seems like that's some of the message still.
Yeah, and listen, there's a lot of uncertainty for Wells and other names. I mean, if we see a soft landing, certainly that could mean loan growth, client activity picking up, but we've also got the election coming up. We've got the Fed and figuring out what sort of rate cuts we're going to see going forward. Elections could have a major impact on regulation in either direction. While we could see lower rates, pick up that loan growth, we could see investment banking pick up, lowering funding costs. But it could also hurt some of these more asset-sensitive banks dealing with lower yields. We know Wells focuses on consumer and commercial banking. They do have a large wealth management division as well. Typically, a bank like this is going to benefit in the short term as we start to see these borrowing costs reduced. They can get that cheaper funding, potentially increase their net interest margins. But over time, their ability to generate income in a lower rate environment is certainly a question mark. We know Wells Fargo's net interest income is already expected to fall by about 8% next year, or in 2024, down from what we saw in 2023. And we know margins have been squeezed as investors are looking for those higher rates, and so they've had to raise those rates in their wealth management area. Having said that, we've still seen decent returns come out of Wells Fargo. They've had a very aggressive stock buyback program, which has played relatively well. But there's some question marks. The asset cap is one of them, but also how they're going to be able to handle this lower interest rate environment. And I think investors are going to be watching that very, very closely.
Okay. Thanks, Jeff. Good look at the note. Good look at the overall situation for Wells Fargo. Thanks. Let's trade it. Tim Bigham joins us this morning as we look at the shares trading 57. Pretty nice little price target of 65. Mr. Bigham, good morning. How are you approaching this into earnings?
I think, you guys kind of alluded to the downtrend in the stock, certainly on a intermediate
SPY calls are at 144.
Short-term, the stock actually looking pretty good on the charts, in my opinion. A series of higher lows here ever since it bottomed out right around that 53 level. So looking perhaps to head towards 58.50, those old highs, and challenge that. I just think, this report probably not going to see fireworks. The stock has been pretty much trading sideways with a little more, day-to-day volatility, but is kind of caught in a trading range. So I'm kind of favoring the upper end of the trading range here with a trade, maybe not 65 for a upgrade like Wolf came out with. And certainly valuations are comparatively cheap, but not dirt cheap. So I'm just going out and buying next week's 59 calls, selling this week's 59 calls that occurred during earnings, paying just 20 cents for that. So love having these very cheap kind of calendar spreads, similar to what we did last week in Nike, where the risk return can be very nice if it comes to fruition. And the fact I'm able to sell about a 60 IV and hedge it with a low 40 IV, like that term structure vol. And the options implying only about a, 4% move, so that puts it at that upper end of the implied move boundary range as well. So not really looking for much fireworks as much as a vol capture trade, as a slightly bullish trade here, and kind of have a nice swath where it's profitable, and can put on a vertical next week if need be to further hedge the position.
I like that. So you can get a little bit of both worlds. If you don't think they're going to blow it out of the water, but you think that the stock's going to be able to firm over the coming weeks, then you've got the October 18th call. But in the short term, you kind of sell some of the vol going into the report.
Yeah, exactly right. And again, I don't think, earnings and valuations, like I said, are, comparatively cheap, but not really cheap overall for Wells or any of the banks. And yeah, you're getting probably a little NIM benefit here with the long end of the curve steepening, versus the short end. We'll continue to see short rates come down, but it looks like the long end, 4% on the 10-year is a pretty big deal, in my opinion. And I think will benefit banks, especially if the Fed continues to cut short term. So I think the banks will feel a little beneficial effect from that yield curve going from, what had signaled somewhat recessionary fears never came to fruition, but starting to now steepen, which will benefit banks and some other companies as well.
Okay. Like the trade. Good approach. Fading some vol into the report, but confident the Wells Fargo won't fall apart. Thanks, Tim.
You got it.
Good stuff. Option strategist at Buy Alerts. All right, when we come back, we're going to take a break from some of the intraday action here on a couple stories. First, we'll talk about investing into the demographics of America. Guardian Pharmacy CFO joins us after an IPO last month. Then after that, we'll talk betting markets.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Morning Trade Live. Let's talk some stock specifics. Guardian Pharmacy Services, ticker GRDN, went public through IPO last month. Joining us, co-founder and CFO David Morris here with us to talk about long-term pharmacy services. David, thanks for joining us on the show. Congrats on the debut last month.
Oliver, I appreciate it. It's great to be here. We're very excited. As you mentioned, we got the company out in late September and are excited about where it can take the company. We've got a track record over the last 20 years in the long-term care pharmacy services business, and we've built really a purpose-driven platform focused on the assisted living community, which is a community that really needs complex services we offer that ensures the safe administration and adherence to medication. So we're excited to be here. Really what this does for us, it enables us to continue to leverage the platform we've built over the last 20 years. We've have a large company. We're the largest assisted living focused platform in the U.S., yet we only have 12% of the market. So we have a nice tailwind in the assisted living market of about 5% a year, and we're excited about continuing growing and doing what we've been so successful at doing over the last 20 years.
Introduce us to that business model, David, for those that aren't familiar, the long-term pharmacy services as opposed to kind of the traditional way we think about getting drugs at the pharmacy. When you talk about assisted living, you're talking about serving those assisted living centers as their provider of pharmacy services. You're not running these living centers.
We're not. I mean, think about our pharmacies. They're typically 20,000 square feet, light industrial facilities in a metro area. We're not co-located with our customers, and we're closed doors. So we don't serve the public, and what we do is compliance, packaging the meds, provide consulting services and delivery to the assisted living and skilled nursing operators in a market. So we serve typically a 2 to 3 hour radius. So it's a growing market. If you look at the total U.S. drug spend is approaching $600 billion. We're about 25 billion of that. So a very large, growing, addressable market.
That addressable market, are there competitors already embedded with other living centers? Do you have to take a competitive approach to this, or are you carving out a new market in the way you deliver these services?
If you look at our competitors in the market, it's very fragmented. There are about 1,200 independent pharmacies out in the U.S. providing services like we do. And what we have is built a platform that enables to drive synergies and volume to more effectively run these pharmacies and provide the services. And there's a lot of opportunity for us to partner with many of these pharmacies and continue our growth trajectory.
Thinking about then the potential for M&A, it seems like that's a pretty real path to growth then. Am I wrong?
No, it is, and it's been part of our DNA and growth. If you look back, our growth over the last 20 years, it's been driven primarily organically. We open nice pharmacies with great operators and grow organically in that market. The second way we grow is contiguously in adjacent markets with great operators. And then, Oliver, the third piece would be M&A. And we've executed, nicely over the last, 15 or 20 years with our M&A platform, and we'll continue that. So we're driven by organic, and then we'll layer in nice M&A opportunities as well.
Okay. As far as that growth goes, how do you balance it, David, with keeping the financials intact? Can you achieve the growth that you want while maintaining the bottom line? What is that trade-off like in your mind?
I mean, you know, we grow contiguously. We also grow through M&A. And the nice thing about our business is over the years, we've been able to very effectively manage our capital allocation. The way we've grown, we have little to no leverage. Our business is very strong from a cash flow standpoint. So we're well positioned to continue to execute, if not accelerate our M&A approach to the market.
Okay. Thinking about, David, the growth going forward, the demographic aging in America, how easy is it to price, to model out demand for what you're going to need, or does it change kind of based on where the biggest medical breakthroughs are? Like, what are the big verticals right now? Is it neurodegenerative? Is it just general kind of healthcare? What is the main kind of growth market that you see?
Well, you know, we're focused on assisted living, but we serve adjacent markets as well, the skilled and behavioral health. There are opportunities in the hospice markets that we're looking at. And, you know, if you step back, the assisted living market, the average age of a resident in assisted living is 87. I mentioned that the market's growing with a tailwind of 5%, and we're taking market share in the markets we're in on top of that. So it's a very nice profile for us to continue growing and executing like we've so successfully done the last 15 years while looking at adjacent markets, which we're doing.
Okay, understood. We'll be following along closely. Thanks for the introduction. Appreciate your time, David.
Oliver, thank you very much.
Thank you. David Morris, co-founder and CFO of Guardian Pharmacy Services, GRDN. Stock been doing pretty well since the debut last month. We'll talk some charts when we come back, looking at tech before we discuss election matters and betting probabilities. We're looking at Micron and Arista after some notes. The NASDAQ is still up. We do have the Russell and Dow red, so the market's a little bit divided this morning, but enough working in big tech. Micron right now, though, is one of the exceptions. It's down, and Arista Net is up at a high as we speak.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Tech's having a good morning here, but Micron's a little light. Let's start there with our charts. Jenny Horn in the newsroom, Mr. Rick Ducat with me here. Micron with price chart cut from KeyBank. What are they saying, Jenny?
So, I mean, I will say that this is objectively still like a more muted tone on Micron shares, as they did reduce their price target here and lower their expectations. They reduced their price target to $135 from $145. Also keeping an overweight rating, they expect Micron to garner some significant share on its fastest and most high-capacity, high-bandwidth memory that's expected to advance some of this AI innovation, and they believe Samsung continues to struggle with its performance and to become fully qualified on Blackwell.
No.
As a result, they actually believe that Samsung will convert their unused HBM
I read something about Samsung there.
traditional DRAM, which they anticipate to result in oversupply in then the first half of 2025. So not necessarily.
I cannot accept that course of action.
To be a bit more pessimistic on all things Samsung, but naturally the supply chain right now is so critical for all of these companies.
Very critical. Today, Jenny has the mother look. The cute mummy.
You're pushing your luck, little man.
I just love this girl, how she has different personalities when she dresses. Most of them are about the same. One day I'll tell her that. Oh boy.
Arista as well as Sienna, their top networking equipment picks overall. So a really optimistic note. Obviously 460 implies some upside here, and that would be, at least based on the metrics I was seeing, a new street high price target. Previous high was around 430. Street average right now is $362 a share. So that implies about 9% downside, I think, just because the re-rating of this name has come so quickly. Analysts are trying right now to play catch up. I will say though, and just to add, Arista does trade at now a pretty lofty premium. It trades at a forward PE of around 45.5 times. So that would make it more expensive than, I mean, telecommunications, the tech sector, the S&P 500, the discretionary sector, pretty much most of the sectors we look at, it's right now trading at a premium too.
Yeah, good reference, because there's not a lot that looks as good as this chart. I mean, it doesn't seem like there's a ton to say about it, Rick. Take me through it real quick, though.
Hey, you took the words out of my mouth. It's a beauty of a chart, you know, mostly within the boundaries of these two blue lines here. Trend line going across the lows, duplicated it, put it across the highs. Didn't fit exactly. We had a little bit of an outlier there, but for the most part, it matches up with the highs that we've seen. Now, 52-week highs that we're forming today. Not a lot of net movement overall here, but still, we did peak our head above that upper boundary of our channel here. So let's see if, you know, the bulls can kind of give us another push to get some kind of upside breakout here. Steeper white trend line still in play here, beginning with these lows. We're above our moving averages. The moving averages are trending upward here. Formed a little bit of a volume node at these elevated levels as well. So when we look at momentum here, we can see that we have made a series of higher lows trending upward here, but we also have this downward trend line to consider as well. And we have not really made a good push into that overbought area, just a tiny little foray into that threshold above 70 there for a bit. But if we close above our channel boundary and make a push into the overbought area, that would be a good sign for the bulls here. So what if that does happen? Where do we look next for potential resistance? Standard deviation channel, blue linear regression line, line of best fit. One standard deviation to the upside comes in near 432. One of the few ways we can try to project something like this is by analyzing price history relative to itself and finding an extreme point based on that data. So that's one place to look here. To the downside, our linear regression line is, again, the place to be keeping our focus on here, because it lines up with our yellow 21-day EMA near about 377.50, and then our old high close and our recent low are just below that at 371. So quite a bit to consider to the downside there as well.
Okay. Pretty interesting chart. I guess when you're just going perfectly up and to the right, y equals x, the next question is if the linear relationship goes like exponential, you know, does it then really, really blast off and melt up higher? It seems like that's kind of what bulls would really like to see, but if not, then up and to the right is just fine. Thanks, Rick. Thanks, Jenny, for a look at a few notes this morning. We'll talk to the latest in election betting when we come back. The numbers on Kalshi's expectations, as well as a big legal victory for the betting platform, coming up next.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
All right, let's divert a little bit from the stock talk and look at the election and also betting markets, as well as some big legal developments at Kalshi. Joining us, Tarek Mansour is the CEO and co-founder at Kalshi, back with us. For those who missed the market overtime, go and watch it. Tarek, great to have you back on the Schwab Network.
Thanks for having me, Oliver.
Hey, congrats as well. A big development as you guys did get a district court ruling in your favor that you can list the election betting possibilities. Tell me what that means to you, as this is obviously a huge market that I would think probably becomes, I don't know, your most popular now?
I mean, absolutely. The election market is massive. We've always said this. When we started the company, and I kind of talked about this at the time. In 2016, we had the idea for the company. I think a big thing that was happening this summer, I was working at Goldman Sachs actually, is a lot of investors, whether it's individuals, retail, or institutional investors, they wanted to get a position on the election or hedge against the election. Election is massive. It impacts everybody. I think it's the holy grail for prediction markets. So yes, absolutely. I think elections will change everything. I think the last thing I'll say is actually, this will be, this court ruling, this Kalshi victory in courts against the government is a critical milestone for financial markets, because it's actually the first time in 100 years that these election markets are back to being legal in the United States.
Okay, so remind us again the difference between the way you guys run your business and some of the other betting markets that are out there. You're CFTC regulated, which is completely unique. And so when we look at some of the other sites that have had these betting markets, why did you have to go through this process?
Yeah, absolutely. I mean, I think the easiest analogy is like, look, we are regulated, we are legal, we operate legally within the United States in all 50 states. And, there's always sort of bad actors and people that operate outside of the bounds of the law. And that's always been the case. And the reason they do that is because this market has a lot of demand. And so what has happened in the last 100 years is that the demand for these types of markets has gone offshore, unregulated products, platforms operating illegally. But this court ruling now is going to bring it all back under the regulatory umbrella. And so our approach has always been
Big Puppy.
Do it regulated, do it safe, do it trusted.
They're at 191 now, the 572 calls.
One, we believe prediction markets are going to be the next frontier of financial markets. This is the next big thing. It's becoming abundantly clear. And two, financial markets need to be done legally and in a regulated way to build trust. I have not seen an example of a large-scale financial market that is done in a shady, sort of murky territory. So legal and regulated first. That's our motto.
And what type of visibility do you have into who's trading? Are there any strings attached to where you need to monitor, like what's going on? Like if there's any, big players, or are there any stipulations now to monitoring what happens in that pool?
Yeah, it's a great question. I mean, I think absolutely. I mean, I think as a regulated exchange, it's like trading on stocks or trading on options or any other financial instrument. We know who the traders are. They have to, do what we call know your customer. So there's some of their information when they onboard to the exchange, and then we monitor their trading as it goes. The amazing thing about these markets is, as they get very liquid, and they're already very liquid on Kalshi, within I think now 2 days of trading, is they become an incredible gauge of who's going to win the election. It's actually the most accurate way to forecast the election. And funnily enough, actually, the odds right now are right at 50-50 between Trump and Kamala. We'll see how that evolves over the next month.
I'm looking at it right now. As you guys got this up quick, obviously you were ready to roll with it now at the top
227.
of the page. 51 Kamala right now, 49 Trump, and it seems like you're picking up a good bit of volume. What are you seeing, Tarek? Like, are people storming to this, or as the liquidity fills up, will that change at all kind of the dynamics of the polling?
Yeah, no, I think we're seeing an incredible amount of signups, incredible amount of deposits. Right now, we're just essentially in the phase of onboarding the customers. Which, you know, as a regulated exchange, it takes a little bit of time, but you know, no, this has been sort of a massive milestone for the company. And I would say, you know, I think people are going to look back and see it as a massive milestone for financial markets.
You guys do it as binary contracts, and you've got a lot of iterations. You've got different states you can bet on. You've got the popular vote you can bet on. Are you seeing anything in particular that stands out, like any anomalies? Is there anything in your polling or your data that stands out that we should be aware of?
So right now, actually, it's kind of calm season right now. Actually, it seems like, you know, things have tapered. You know, there's been some jousting from both camps, and then sort of there's a little bit of a pause, a wait and see. I'm just looking forward for the next 2 weeks. I think the October surprise is going to land, and I think markets are going to move. I mean, market volatility is going to skyrocket when the October surprise lands. I mean, if it lands, but it usually does land. Yeah, right now I think you know, the one last thing. So like the one thing to watch right now is obviously Pennsylvania. It looks like early voting is started. And things are starting to move. So I'd say the Pennsylvania market is the one to watch on Kalshi. It's moving, it's volatile, and you know, Trump and Kamala are neck and neck, and a lot of people are saying that this is the one that determines the election.
Interesting, I like that. Hey, not to like, I mean, I don't know how much you know about how the other competitors, if you call them that, trade. We saw pretty big movers has moved too much. Can you speak generally at all about the process or the structure behind your markets versus others?
Yeah, so I mean, Play Market falls under the unregulated bucket, and so that doesn't come with some of the checks and balances that a regulated exchange would come with. I think there's, you know, it's interesting. I don't know. It seems like there's some sort of inside, like, it's interesting. I don't know why the odds are inflated that way, but it's clearly that they're inflated. I don't think they're correct. And maybe a lack of liquidity, maybe some sort of scheme happening on the product, but this is the difference between a regulated and an unregulated product. On an unregulated product, any of these schemes cannot happen. But I think right now, I think it's fair to say that it's really kind of at the dot 50-50.
Okay. Well, you guys are loaded up right now. Almost, I mean, you've got all the big stakes. You've got margin of victory, you know, a betting market. So it's certainly going to be quite a bit of action. Congrats, Tarek. Thanks for giving us the latest. Appreciate it.
Thanks for having me, Oliver.
Absolutely. Good stuff, and we'll be watching the numbers. Also, of course, some disclosure as Charles Schwab, the parent company of this network, is an investor in Kalshi. Tarek Mansour, CEO and co-founder at Kalshi. All right, we're coming back for a little chat on the market. Stick around. Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in. Let's chat about the market session here. Checking back in on trading. Mr. Dan Brand joins me in the studio, Senior Specialist Retail Trading here at Charles Schwab. Dan, bond selling got pretty intense last week, but it's cooled off a little bit this morning. We're actually catching a bit of a bid from the lows and treasuries overnight.
And yields going higher because good economic news.
Yeah,
right.
Got a nice little NFIB this morning. It was good.
Exactly. So we're kind of undoing that a little bit, but bond prices went down substantially based off the the
big jobs report.
Big jobs report last week, and they're reacting. And then crude oil was going up as well. Now we're seeing crude oil collapsing right now because China didn't do enough stimulus, apparently.
WTI really getting whacked.
I would think it would be the exact opposite with the major hurricane, coming right down into the the Gulf Coast.
Yeah, no, that's a good point.
Maybe they're saying that it's not going to have a big reaction. I think the market's really going to be looking at that FOMC minutes tomorrow for details of the QE.
The drop in crude continues to disappoint crude bulls, but also support the notion that we're not going to have a big reflation scare. I think it's pretty interesting how hard crude is coming back because, for the first time in a while, it looked like maybe it could make a run for $80, and then hard rejection should limit some of the reflation potential.
Yeah, I agree with that. Yeah, is it an economic indicator? It might be.
Yeah. Because when bonds sell off like they did on employment, then it kind of gets you maybe thinking about inflation again. But I just don't think we're there. Caroline, crude down 5%. Seems like generally we've had a pretty good response to good jobs data, good small business optimism this morning. We're in good shape. The NASDAQ's ripping right now.
Yeah, I mean, the Mag 7 all higher, NVIDIA leading the way higher, Netflix, not a Mag 7 member, but one of the best outperformers, really, year to date, is closing in on all-time highs, only about 1% away from there. I do think that's important to note when you take a look at big tech and how close the Mag 8, let's call it, are closing, how close they are to the highs. It's really only Meta and Netflix that are close. Meta's about 2% away, but if you take a look at the others, Apple's 5%, NVIDIA's 6.5%, Tesla 10%, Amazon almost 10%, Microsoft 12%, Google, Alphabet even more than that. So just interesting to note there. But having a strong day today, nonetheless. Palo Alto, the best performer in the S&P 500, Affirm, another big winner today after that upgrade at BTIG at the expense of American Express. But there are some losers, I think, that are important to note. Roblox being one of them. Roblox off earlier lows, but still down about 3% today after this short report from Hindenburg Research, basically alleging that they inflate user metrics, saying that Roblox is lying to investors, regulators, advertisers about the number of people on its platform, inflating that metric by 25 to 42%. They also say that engagement numbers are grossly inflated. Bots are rampant on the platform, and they actually point out that Roblox is compromising child safety to report growth in those metrics, saying that their in-game research revealed X-rated pedophile hellscape, exposing children to grooming, pornography, violent content, and extremely abusive speech. Roblox has said that those statements are misleading and that they firmly believe Roblox is a safe and secure platform, and they believe in the financial metrics that they report. But let's see how that plays out, because shares were down more than 6% a little bit earlier, but down about 3% right now. Also seeing weakness in U.S.-listed Chinese companies after China's top economic planning agency didn't really outline a very specific stimulus plan. So most of the names win. Las Vegas Sands, Tencent, JD, Baidu, Baba, all still higher on the month, but seeing sharp losses today. But if you take a look, Lee, Neo, now negative on the month with today's big sell-off. Lee's down almost 9%, Neo's down 7%. So quite a bit of weakness there.
Huh?
And Supermicro, I should note too, was bucking the downtrend yesterday with gains and is now the worst performer on the S&P 500, giving back a good chunk of those gains today.
Yeah, good eyes on the Roblox move. Saw that earlier, pretty intense report from Hindenburg, who obviously has been making some pretty big swings at companies lately. Thinking about the rest of this week, real quick, Dan, as we do have some Fed speakers later out today. Do you think, given the jobs data, it's worth paying attention more closely to what they might say?
Absolutely. Are they going to go 50 at the next meeting? Unlikely now. I thought there was a good chance they were going to go 50 at the next meeting and then another 50. Kind of taking that off, and I thought taking those expectations off of Fed accommodation, I thought that's why the market was kind of pulling back a little bit. Not sure now.
Well, it seems like tech coming to the rescue. I mean, NVIDIA's making big moves here. $133, like breakout, technically. So good stuff there. Thanks, Caroline. Thanks, Dan Grant, for some good thoughts there to wrap up the session here for Morning Trade Live. Trading 360 with Nicole Pedalides is up next. I will see you this afternoon for Market on Close. This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you're with us. We have a big show for you today. The 360 Spotlight will get some long and short picks from Melissa Armo, including a short on Tesla ahead of the robo-taxi event on the 10th. Our disruptor, Arista Networks, after Citi raising the price target on those shares. Our 360 round will talk about all things Amazon. The deals have kicked off. Prime Day has begun. It's the 8th and 9th. A lot to talk about on Amazon. In the meantime, back and forth action. If you look at a chart, an intraday chart of the Dow, for example, you would see it go green, red all day long. Right now, it is up 22 points at 41,977 after setting some recent records. The S&P 5738, the Nasdaq 20,046. That's up 1.25%. So certainly you're seeing strength in tech, and the Russell up 0.2%. Oil and gold both to the downside. Oil has had an incredible run. Last week ran up 9%. It's best week of the year and ran up again. But now it's taken a breather, down about $3.50 at $73.70 the barrel. $26.39 on gold, and the VIX is at 21.23. The dollar 102.32, so that's been gaining, and Bitcoin sitting at 63,020. Jenny Horn is with us, markets correspondent here on Schwab Network. We're taking a look at Microsoft, a downgrade from Oppenheimer. Would love to hear more about that. Good morning, Jenny.
So as far as Microsoft is concerned here, we are seeing a more pessimistic tone out of Oppenheimer today, downgrading shares, which does feel like a rare move, of course, for Microsoft, which has just been more muted over the last several weeks. But they really warned that OpenAI losses could potentially weigh on their earnings, while AI revenue might be trailing the overall expectations. So this note, they did say, well, their investment in OpenAI was a smart move given the company's access to these top AI technologies. They do worry that the investment could pose some risk. They said in the near term, they see some pretty steep financial losses for OpenAI. They downgraded Microsoft shares to outperform, saying the street may be too upbeat now on these earnings prospects going forward. So they said OpenAI losses are this primary concern. Microsoft does have a 49% stake in the company, mind you. OpenAI is expected to lose about $5 billion this year without accounting for payouts for equity compensation, according to a New York Times report from late last month. So Microsoft right now still has its own story. They said that right now the financial benefits of Microsoft's narrative and push into AI is definitely one that's going to be realized. It just might be realized with some losses along the way. It's not going to necessarily be an easy path to the upside. They did reiterate the street is now overestimating a lot of this AI enterprise adoption across the board. And again, I think that this will be a very interesting story as we go into earnings. Microsoft was, of course, has report towards the end of this month, but amazingly so. We initially saw this dip in shares today in a reaction. We're down about, earlier just modestly in the session. Now we're up 1.2% after being up around 10% this year, but we've pulled back from highs by about 11.5%. So a more weaker narrative trying to find its footing here, but earnings is, I think, the next major leg we could watch for an upside or, of course, downside catalyst, Nicole.
Yeah, and I saw Capital IQ have the average, because you were saying that this is a rare downgrade. The average price target is 440 to 600. It's trading at 414, so the average is certainly much higher than the current levels. Jenny Horn, markets correspondent, thank you for that. Appreciate it. Let's get some insights on the news shaping the markets. For that, we welcome in Jay Woods is here, Chief Global Strategist at Freedom Capital Markets. Glad you're here.
Oh, always good to be here.
Surprised to see the back and forth action searching for direction after we've hit some records recently?
Yeah, not overly surprised. This is October, spooky season. People are a little jittery. We saw it last Tuesday, as we were here on the floor and Israel was being attacked. And yesterday, what happened again? October 7th, that horrible anniversary, and there was lots of stories about Israel being attacked again. Could this escalate into something bigger? We saw oil spike, the VIX spike. So the market is watching what's going on in the Middle East very carefully. And then we're heading up in a few days, 27 more days until the presidential election. That's on a lot of people's minds, and we're trying to see where that's going to go. No one has an idea. But I don't think it's going to have that much of an impact on the market, but it will create headlines, that's for sure.
How about the fact that the 10-year has gone back above 4%?
Yeah, well, that's...
the reinversion of the yield curve. What are you thinking about that?
Yeah, well, the speed at which it moved back to 4% caught people off guard. Now it looks like it's going to stabilize here, and that's okay. What is it telling us? That maybe after that 50 basis point cut, we're not going to go a quarter. That if we do, that's okay, and the 10 years getting us to that area where they see the rates finally settling in. So when it dove down to 3.6, that was a little too far too fast, and now we'll see, as long as it doesn't get like the 4.2% and get back above there, then technically I think we're okay. But the speed it moved to 4% did catch people off guard, no doubt.
I do want to talk about some of the current earnings. Obviously, everybody's waiting on CPI and PPI this week, right? Huge inflation prints. Every inflation print is very meaningful. In the meantime, we're seeing Pepsi up 1.5%. Some of your thoughts on what Pepsi's quarterly report tells us?
Yeah, well, Pepsi, they missed on revenues. Their guidance was a little weak. The snack food, segment, especially North America, was lighter than expected. And I haven't heard anyone say maybe it was because of Ozempic or Wegovy yet. That was what we talked about going into this earnings. But it's up today. To me, that's positive price action. That maybe this could be the low low for Pepsi, that they just got it out of the system. This guide, while tepid, wasn't the end of the world. So I'm watching the price tell us, okay, maybe the worst is over for Pepsi, but then you compare it to Coca-Cola. Coca-Cola's up 17% year to date. Pepsi's still down 1%. So Pepsi doesn't really move much on earnings time, but maybe this is the signal that the worst is over for them. Technically, watch the 200-day moving average, still has $2 to go to get there, and it could be a play for the next quarter. We'll see.
Yeah. What about Tesla? We have the big robo-taxi event, followed by, on the 23rd, we'll have earnings for Tesla. You know, there are a lot of very high expectations, such as Steve Wesley, who used to be a board member. He was telling me that he said this event better be really good.
Yeah, well, this was supposed to be on 8/8. Now they moved it to 10/10. You know, interesting dates, but Tesla rallied 35% going into last week, and it's finally pulled back a little bit. This is the most hyped event that Musk has had in almost a decade. They've been talking about autonomous driving, the robo-taxi, for about 10 years. Now we finally get to see what's underneath the hood. People have high expectations. I know Dan Ives is expecting big things, and a lot of analysts think that this could be the turning point for them from a technology point of view. We'll wait and see. The stock tends to go up on hope, and then when the actual announcement comes out, when will it be delivered? What is the timeline here? So there are going to be a lot more questions than answered, but one thing we know, Musk will put on a show, and it will be talked about a lot over the coming days.
And then we do have CPI and PPI. Some of your thoughts on, you know, the prints. What are you going to be looking for? Because the Fed, as you noted, has the meetings November and December.
Yeah, well, the CPI is the one number that has caused the most movement in the market. We have been hyper-focused now going back to unemployment data, but let's see now where the inflationary data has come. We've lowered rates by 0.5 percentage point. Will it be in this CPI number? Probably not just yet, but it's at 2.5. It's looking for 2.3. That's the headline number. That's the core number. But what we want to see is it come right in line with expectations. Anything that throws us off the beaten path, or if it comes in too hot, then, oh my God, the Fed's going to have to react a certain way. But to hit that soft landing narrative, we want to see it come right in line with expectations, nothing to throw off this market. And we've seen the CPI over the last 3 months coming in line. So let's hope for 2.3% in that number, and we'll take it from there.
I mean, some of the other news, we talked about the Microsoft downgrade. You have DocuSign, Honeywell, SMCI, Las Vegas Sands. Any of the names in the news jumping out at you, or any big thoughts here?
Well, SMCI is one we've been watching a lot lately. They had a scathing short report a week ago, and now they had positive news. The stock was up 16% yesterday, following that up again today. So let's see if they can deliver. It is in the S&P 500 now, so more eyeballs are on that stock than ever before. The Honeywell news, that's a spin out. That won't have much of an impact until next year. DocuSign, very interesting. Look at that from a technical perspective. It's going into the mid-cap 400. It did break out on a chart. It had been in a nice sideways base for a long time. Maybe this is the catalyst to get that to finally, rally another 10-15% from here. So that was the big news, I think, adding DocuSign to the mid-cap 400 from a price action point of view. And then earnings. A lot of analysts talking about stocks. Some of those Mag 7 stocks were downgraded yesterday. We saw downgrades in Amazon. We saw a downgrade in Apple. So as we get into earnings season, let's see how it goes, and then watch NVIDIA. We talked to Magnificent 7 stocks. That stock broke out yesterday after Jensen Huang had some positive comments to say.
Yeah. Look, it wasn't a quiz. You didn't have to comment on each of them, but thank you.
I just knew them. I'm sorry.
I'm glad you did, because they're all in the news, and people like to hear some of your thoughts. Is this a buy the dip type of end of the year?
Yeah, I think so. I will stay steadfast to my belief that we're going to have some jitters up until the election. The election is when we tend to peak. It happened in 2016, 2020, and then it was smooth sailing regardless of outcome into the end of the year. Strength begets strength, and I think we've continued to see that rotation. That broadening out theme has been fantastic. The second weakest sector last quarter was technology. Those technology names are starting to make a move. We're seeing it with NVIDIA. Let's see if Apple and Microsoft can follow when they report their earnings later this month. So there's a lot to look forward to. And then, that fourth quarter, strongest quarter of the year, an election cycle holds true. So I think the table is set for us to continue this rally into year-end.
Yeah, I just saw, for example, Alibaba's down. So the hopes for more stimulus is my last quick question. question maybe fading because there were hopes for more China stimulus, but a name like Alibaba down 6%. Any quick thoughts on some of those
China
Chinese
threw a
stocks?
bazooka with the stimulus last week. These stocks were up a tremendous amount.
Bazooka.
Pullback, should be expected.
Do you buy them on the pullbacks or do you stay away from them?
I'm skeptical of Chinese stocks. When a man like David Tepper says he's all in on China, then I'll listen.
Which he did say that.
He did say that. He did. But I'm a little skeptical. Let's get through the election season and see what the China-U.S. relationships look like going forward. But the risk-reward, it could be an opportunity to dip the toe in the water short.
All right, Jay Woods, Freedom Capital Markets. Thank you so much for being with us. Appreciate it. Plenty more to come here on Trading 360. Up next, it's the Big Three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Scott Bauer takes us through the trades for Lululemon, Affirm, Marathon Petroleum. All that. Trading 360, Schwab Network. We'll be right back.
I'm gonna go get my lunch started and I'll be right back. SPY pulled back to support right here. We'll see if it holds on the SPY. This is 1, 2, 3 top. So we're going to see if we hold. If we don't hold, we can drop down to 570.62. The 200 EMA, but right now we're at support. So we'll see if it holds. I've got out of these calls already. And I'll be right back.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Welcome back to Trading 360. I'm Nicole Petalides. Time for the Big Three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. Thank you both for being with us. Before we get to Lululemon, Scott, tell me a little bit about how you're feeling about this market. We just had Jay Woods on, who still feels it's a buy the dip kind of market between now and the end of the year. What are you watching?
You know, I definitely agree with Jay. I think you have to be a little bit cautious. You know, you can't just say, okay, we're down 1%, so it's time to buy. You do have to be a little bit tactical about it and respect technicals, respect moving averages. But absolutely, you know, the market is set up for a run higher into the end of the year. That doesn't mean we're not going to have chop along the way here. But look where the 10-year is, and I'm really focused on that, Nicole. The 10-year at 4%, who would have thought a few weeks ago when it was down at 360 that the market would be okay with it, that the market would be just fine? So I think the market is accepting of better economic numbers that are coming out. The Fed is still going to cut, maybe not as quickly as everybody thought, but here we are. So I agree with Jay.
Okay, so that being said, let's get to Lululemon. Some of your thoughts there.
Absolutely, and there's a shift in the technicals here after a very, very long bearish run in this stock, and the stock is showing some signs of life, and it's now really kind of pivoting and anchoring above that 50-day moving average, and it looks like buyers are really trying to come in on. You talk about a buy the dip here. On any little bit of a sell-off here, buyers are coming in. This could lift the name back to the $300 level. With retail season coming up here, coming into the holidays, this is definitely a name at the top of my list of the retailers here. And I really think this thing could make a nice run up. So I'm going out about 3 weeks or so to the November 1st expiration. And I'm looking at the 285, 295 call spread, which I want to buy for about $2.50. Great reward to risk. And I think the economic backdrop supports this.
Okay, so, the question, it is the holiday season. As I look at this chart here, not too far off 226 at lows. What do you think here when you take a look here at this? Rick Ducat.
Definitely a chart that has been in decline for a while here. And when we look at it, we can see that we had this rather severe gap down here on earnings. That's kind of the start of our most recent downward pattern here, kind of a wedge type shape here. Two trend lines converging toward each other, one going across the highs, one going across the lows. It did look a little dangerous for a bit there when we did hit those yearly lows near 226 because we slipped below that lower boundary. However, we have made a series of higher lows from that point here. You can see now our new pattern that we're focusing on is our two white dashed lines here, which are once again more of a wedge type shape converging toward each other here. Some other things to note, RSI has been improving here. We can see that we crossed out of that oversold area. We've got a green trend line in play here. We are above the 50 midline, so a bit more geared toward the upside. We can also see that we passed above some important technical points. We've got our volume profile point of control, this thick red line here, that's the area of heaviest trading. We made our way above that. We made our way above the 21-day EMA. We are on pace to close above our orange 63-day EMA today. We also filled this gap that we formed right here near about 268, and we are trading above it once again here. If we were to keep moving higher, this boundary here, we've got our upper line of our wedge shape here, and then the area that Scott mentioned, 295 was another point that I had. That's a high point that we had right here. That seems like an interesting place to consider some resistance. Also got a volume node close ahead. Ultimately though, this high right here, 337 would be one area for the bulls to clear to the upside. To the downside, lows, light green line here, low points, 246, and then ultimately 226, our 52-week low for further support.
So they have to watch China. I mean, that's a big, thank you for all of that, Rick. They have to watch China, according to Morgan Stanley. We did see a call. Morgan Stanley maintained the overweight with a $314 target. It's at 273. Scott, final thoughts on this name?
I mean, Rick covered it perfectly. The charts that I was looking at, very similar to what Rick pointed out. So if this bullish momentum can continue, because we've cleared out some of that bearish, downside that we had, I agree, and I think that 295 is definitely within reach.
All right, BTIG came out and actually said buy Affirm, sell Amex. Tell me some of your thoughts on Affirm today.
Well, again, here's another one coming up to the big shopping holiday season that, people, buy now, pay later, and this one really could come into play. It was upgraded today, as you mentioned, and it just pivoted near their swing low, which is also right near the 200-day moving average. So short-term demand here, I believe, can really carry this momentum if the stock can recover and stay above this 42 level. I mean, we're right there. This is really a very pivotal moment for this stock here. If so, I really think that next move is 45 and then 47. So with that being said, I'm buying the November 8th, so I get 1 month on this spread 42, 47 call spread. I can do that, right around $1.25, $1.20, somewhere in that range there. Gives me really good reward to risk.
Yeah, and within that note, to your point about the holiday season is coming up, within the BTIG note, they did actually say that a firm was taking market share from some of the other traditional payments that we would normally use, and that would be mainly American Express. Let's see what Rick has to say about the chart, please.
When we look at this one, we can see another longer-term downward trend has been reversed here. You can see starting all the way back here with those yearly highs, 52.48. We trended down for a while here, and then we stopped kind of right on the nose at that trend line before this earnings event. Nice gap upward here, made a series of higher highs and higher lows once again. Took out our volume profile point of control, took out our 63-day EMA. Now today, we are making a push to the upside and overtaking our yellow 21-day exponential moving average here. So there's some bullish developments to be sure here. However, there's some other things that we maybe need to consider. First of all, as we did have this upward trend line beginning here, price has moved beyond it. The uptrend that we had initially had our eye on is no longer in play. That does not mean we are crashing or anything like that here, because we did manage to hang on in our red line here, our volume profile point of control, often a key support or resistance area here. You can also see this high point I marked, our green line here, 39.25. That was one area of interest here, and we did kind of hang on for the most part above that area. If we were to keep moving higher here, that would be what the bulls would want to see, obviously, because now we would want to recapture some ground on our RSI here, trending lower. We had a little bit of a bearish divergence here with price making new higher closes, but RSI trending downward here. So the bulls would want to recapture some of that momentum, invalidate the downward trend line, hopefully push into the overbought area. Now, some points to watch here. Scott had mentioned 47. That's roughly around this area here. So we want to kind of push above that lone red candle there that we had that upswing for. And then this area right here, another high near 50. That would be another point where we would want to get a surge above and perhaps an energetic breakout to the downside. Volume profile point of control, and then our orange 63-day EMA, 36.50 to 38.50 or so. And then you can see here we had a couple highs, light green line, 34.13. That would be another point to watch.
Yeah, I love it. He's showing us all the important points to watch there. Final thoughts on this name, and then we'll get to Marathon Petroleum. Scott?
Again, I think there's a lot behind this BTIG report about, the holiday season coming up. And given where the consumer is, not in a great place, but I don't think as dire as some people had thought, that buy now, pay later, I think, is going to be really rocking and rolling this season.
Yeah, JP Morgan, a neutral on Marathon, a 172 target. BMO Capital, the price target of 190, down from 200, but does maintain its outperform rating. Where do you think MPC is headed?
All right, so this one, along with many of the stocks in the energy sector here, are so volatile right now, and for good reason, right? You've got so many factors contributing to these big moves, whether it's geopolitical risk, whether it is demand pressures coming from across the country, or not across the country, but across the world, basically, and oil-related stocks that they've just been on a tear recently, right? Especially because of geopolitical risks. And I think you have to take advantage of some of that volatility, just as I think you have to do on this big pullback that we're seeing this morning. MPC is now trading down to a massive consolidation range, a massive congestion level, something Rick likes to look at as well, right around this 160 area, just kind of dip below there right now. So this has been really big support since the beginning of the year. I believe the upside rally was overdone, and I believe this sharp pullback today is overdone as well. We're at about a 15% drawdown today. So since option premium is so expensive, implied volatility is so expensive right now, I'm bullish, but I want to sell a put spread rather than buying premium. So I'm selling next week's, the October 18th expiration, 160, 155 put spread. I can collect $2.25, And the break even on that out to next week is 157.75. I love that area for big support in MPC.
Okay. Look, we've had a lot of action in oil, that's for sure, but you think that some of the reactions are too drastic. Let's see what Rick says about the charts, please, Rick.
Drastic is definitely a good word to describe today's price action. Anyone who's been trading for a while can tell you it is not an easy game. It's not an easy way to make a buck here. One of the most frustrating and difficult situations in trading is basically what happened right here. The false breakout, the big surge to the upside. We cleared some resistance points here. We broke above our all three of our moving averages in pretty much one fell swoop. We broke out of our trend line here. We broke above our volume profile point of control, whatever, so many things we breached above, and then you went long hoping for the breakout, and you just got crushed over the past few days, retreating all the way back down to this green line near 157.50. False breakout, so frustrating, so difficult, but now perhaps there's another opportunity here because it looks like the supportive area is holding so far today. So that after that rapid about face, we can see that RSI once again has returned to the boundaries of our kind of more triangular pattern here, where we had this downward sloping red line and our upward sloping green line here. So once again back below the 50 midline as well here. So long-term downward trend, excuse me, our blue line here still in play. One quick thing to point out too, we did have the highs right here. It looked like a pretty good example of a head and shoulders type shape here, almost like a textbook definition here with the accompanying bad, severe move to the downside there. So, that one played out as the technicians would have expected. So, just an interesting example to keep in mind here. If we break below our support, if we move lower, the old lows from right here, our light green line would come in right about here at this big volume node near like 149 here. If we get our act together, move back upward, we got some heavy lifting to do. All three of these moving averages and our trend line between like 165 to 169, and the real area that we would want to retake would be this red line here. We topped out a few times, 183.50. That would be kind of the sign of a new breakout beyond this range and a new uptrend.
Yeah. I don't know if they ever settled with the Teamsters Union either. They had an issue late September. I don't know if any of you know whether or not they settled with that. That was something sort of an overhang. It is the #1 loser on the S&P 500 today. Final thought, Scott, on MPC?
And that area that he was just pointing out, the 157, 158, which is that congestion, that support area, if you go back about 9 months, even a little bit further, that was previous resistance. One of the things that we kind of look for is previous resistance can now become support and vice versa. So I love this play in MPC. I wouldn't just buy the stock outright and be long it. That's why I'm using a put spread so I can completely define my risk.
Okay. Scott Bauer, Prosper Trading Academy, and our own Rick Ducat there on the charts for the big three today. Thank you both so much. We had Lululemon, Affirm, and Marathon Petroleum. Thanks. Good to see you both. Coming up next, we're going to spotlight some stock buys and sells from our next guest. The short list includes names like Tesla. The big robo-taxi event is Thursday. What you need to know. Trading 360. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. all so you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you're with us. We have some buys and sells, some ideas for your portfolio, and bringing that to us, Melissa Armo, founder, owner of the stock Swoosh. It's great to see you, Melissa. We've had a lot of back and forth action after some records, but a lot that we're waiting on as well. How are you feeling about the market overall?
Overall, the market's been in a very tight range for the last few weeks, but as your previous guest said, it appears that the market is trying to break out, even though it's failed to do it yet. There's nothing that seems to want to make this market really sell off and have any follow through to the downside. If you look at all the things that have been happening, you'd wonder why the market hasn't sold off yet. You know, the port strike was one of them, the war escalating overseas that we're involved with. I think the market's going to break out higher. A lot of this will depend on earnings next week. We have some Friday, and then really the next month running up to the election. So we could have a breakout. It may not last because of the election coming up in a few weeks. So we may have a lot of volatility with that. And if we have some big movers that move the market that are to the downside, that will affect the market too. But right now, between now and just let's say the end of the week, it looks like the market is set to finally rally.
Yeah, I'll bring up Tesla right away because that's front and center. We have the robo-taxi event coming up on the 10th, followed by the earnings on the 23rd. What are your thoughts on Tesla today? And this is one of the names that you believe people should short.
Well, I'm just looking at short term. Again, I don't know what the earnings say, which are, like you said, in 2 weeks. But right now, the stock is having a very difficult time. It looks lower. Even today, right now, as we're speaking, the market is rallying, the market is green, the market's set to break out. And where is Tesla? It's basically right at where it opened and trying to go red. So we had a sell-off in Tesla yesterday. Last week we had a sell-off in Tesla. For whatever reason, the stock doesn't seem to want to get bought. Again, maybe on the earnings, it'll show something where it wants to go higher. But right now, that stock is struggling more than the market. Every time you take a position in something, you want to get in a stock that if you're going to go long, it's moving ahead of the market. Or
Come
if you're
on.
going short, that's moving, you know,
It's at a resistance.
the market to the downside. Like one of the picks I had was Nvidia. Nvidia was starting to break out yesterday while the market wasn't ready to do it yet. And now, of course, today, Nvidia is even higher and the market's higher too. So Tesla is having an issue. You can tell in the price action, which is what I really focus on. Tesla just doesn't look good right now for a buy. So if you don't want to short it, don't short it. But I definitely wouldn't be long Tesla right now, despite you know, what's going on in the next couple of days with it.
I see. Because, I mean, you're right. It's down this week. It's down 2.5%. It's down this month. For the month of October, down nearly 7%. But has had an incredible run over 6 months. It's up about almost 40%. So it did shoot up and now sort of bopping around. Today, it's up 1.25%. But to your point, it's not doing much right now for this month of October. Boeing, another name that you're a little cautious on. Tell me how cautious.
But we have Dow earnings again, which is in that sector, which is Thursday. So it's going to be really interesting to see what those earnings turn out to be. Again, the airlines have been struggling the last year. Boeing has had so many issues. So Boeing is out actually in 2 weeks as well, those earnings too. But that stock will react because it's in the sector of Dow that comes out and has earnings Thursday morning. That's one of the first earnings. So that is definitely a watch for me because it has been attempting to break through that 150 area. It hasn't been able to do it and have any follow through with it, but I've been watching that. And again, remember, every time you turn on the news, it almost seems like there's another thing. The Boeing strike. We have another accident, a plane issue. There's that stock overall, that company has had just a horrible last couple of years. So that's a big watch in 2 weeks as well when their earnings come out. So we'll be watching that as well. But for now, I don't think anyone should be going along it. It looks like people did the last couple of days at rallied, but I think that is really, really, really one that will, number one, react with Dow on Thursday, no matter what Dow does. But number two, people are not buying into that yet until they see something amazing happen, which, what's going to happen on the earnings? What could they possibly say on the earnings to change the outlook on that stock that's happened in the last 9 months?
Right. I mean, look, they're still working with the machinists union, the factory workers, 33,000 workers who want, I think, a pay increase of 40% and such. They have not reached the final on that negotiation. In the meantime, the stock's been hovering around the new lows of 149 and change. Now you mentioned NVIDIA as a name that was trying to break out. You have the triple Qs, you have Netflix on there. Tell me about those three, that sort of theme that you see upside potential.
Well, first of all, I love Netflix. Look at the total reversal today that we're having in Netflix from yesterday's sell-off. Yesterday, Netflix sold off, 100% reverse that already today. Netflix is near the highs. Netflix looks even stronger than the market right now. Netflix is actually probably helping to lift the market today in the QQQs, and that is one of the first earnings. That is next week, so that's a big, big watch. Again, that was hovering around the 725 area. That could even make new highs this week before the earnings. So that's a watch. The stock has become very expensive. Remember the stock hit over 700 a couple of years ago, then it split. I mean, Netflix could end up splitting again. So who knows what will happen with that, because if that actually reacts positive in the earnings, I don't think 800 is even out of range for that stock the way that they can fly. It's very expensive. You can do it as an option right now and very spready, but it definitely moves and it definitely pays. And I like that better than anything on the list that I sent you, because it has held up so strong, even with the small little reaction we had of the selling in the market in the last couple of weeks. Netflix didn't budge at all.
Yeah. Look, I mean, it's at 718. The high was 725. You think it breaks out beyond the high of 725?
Yeah, for sure. And I mean, again, with the market, remember, everything lifts when the market lifts. The same thing when everything falls when the market falls. So we had some selling yesterday with the market sold off. I mean, again, it doesn't last. That's the problem. Like, shorts want to come in, and I love to short. Shorts want to come in, then you never get the follow through. Then the longs come in, and they want to scoop up and buy the support, and then we're not seeming to get the follow through. But every time the market tries to sell off, it just doesn't do it. And sometimes you even see news over the weekend, and you say, oh my God, we're going to be lower on Monday. And then we're not. And then we're down a little bit in the gap, and then we rally. I mean, it's just like with some of these things you say, I guess we're just going to continue flying high. And when you look at the numbers, when you look at the economic data, sometimes you don't even believe it. You say, well, they're probably going to revise it because they keep doing that anyways. But ultimately, when the Fed lowered rates, that was what the market wanted to see.
Yeah, understood. And yesterday we did see an upgrade and a downgrade on Netflix, so we saw some, different types of calls, but I see what you're saying. Thank you so much. Melissa Armo, the Stock Swoosh. Great to see you. Thank you.
She's crazy.
Coming up next, George Sillis is standing by for the disruptors. He'll take a look at Arista Network. Citi actually raising the price target on the shares. He'll break down that call. He'll give us an example trade. That's next here on Trading 360. We'll be right back.
cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3
Strongest bull market I've ever seen.
Available anytime, anywhere on
So
any
much
device.
uncertainty going on.
Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Penelides, live on the floor of the New York Stock Exchange. A look at developing stories. I'd like to bring in Caroline Wood, senior markets correspondent here on Schwab Network. We're taking a look at Roblox, the Hindenburg report, another report, a research report, a short report, and a lot of concerns within that report. I haven't heard too much of a rebuttal just yet, but not good.
No, it's certainly not, and it's weighing on shares. Roblox off earlier lows, was down more than 6%, now off about 3.5% following this short report from Hindenburg Research. As you said, alleging inflated user metrics, saying that their research indicates that Roblox is lying to investors, regulators, and advertisers about the number of people on their platform, inflating the key metric by 25 to 42+%. Also said that another key metric, engagement hours, is being inflated by an estimated 100+%, alleging that bots are rampant on the platform. And then on top of that, they're saying that Roblox is compromising child safety in order to report growth to investors in terms of these metrics, saying in-game research revealed an X-rated pedophile hellscape, exposing children to grooming, pornography, violent content, and extremely abusive speech. They go into specific detail about inappropriate games they were able to access without age restrictions, and I can tell you it's nothing that you want your children near. Ultimately, Hindenburg Research says overall we think Roblox has adopted the Silicon Valley approach of growth at all costs, whether by misleading or opening its platform to dangerous predators and illicit content unsuitable for children. So I reached out to Roblox for comment, haven't heard back yet. I will say they have responded to other media outlets saying, we totally reject the claims made in the report. The claims are simply misleading, and the authors of the report have an agenda. It is a short report, after all, designed to make share prices fall, saying we firmly believe that Roblox is a safe and secure platform, and in the financial metrics we report. Clearly having an impact on shares today, though, off more than 3% right now down more than almost 10% this month.
Yeah, well, that's the rebuttal, that emailed, I guess, response, but it's certainly weighing on the shares, as you noted. Thank you. Caroline Woods there on Roblox today. It's time now for the disruptors. George Sillis is here, senior markets correspondent, taking a look at Arista Networks. Citi with a call, boosting the price target shares on those shares. Tell us a little more about that story.
Well, yeah, Citigroup does have an outperform rating on the stock, and they increased their target, as you mentioned, to 460 from 385. And I think what they're looking at is a couple of things. I mean, first off, Aristanet is one of the larger internet providers for network gear and software solutions for major data centers, enterprise companies. Partners, mega cap partners include Meta Platforms as well as Microsoft, and essentially they're an infrastructure stock that is the backbone of cloud and, of course, artificial intelligence and networking connectivity. And so one of the things about Aristanet is that they decouple software along with hardware, and that is actually quite a value proposition for those companies or buyers.
Volume's real slow right now.
Maybe want the hardware that is agnostic or separate from software. The other thing about Aristanet is it doesn't have a lot of international exposure, and I think that's quite compelling. But going back to what I think Citigroup is looking at is if you look at Juniper Networks, which was purchased by Hewlett Packard Enterprises alongside Cisco, it looks like the market is developing to fewer suppliers, and therefore pricing power seems to be intact for the network gear that Aristanet sells the marketplace alongside its competitors. And if you actually look at the earnings or the EBITDA growth estimates for next year, 25% expected on 22% sales, and that those EBITDA numbers have actually increased incrementally over the past 6 months. And over the last year, compared to the same quarter last year, it's higher by about 2.5% or 250 basis points in margins. So as price has been moving higher, it's up over 100% over the last year. So has earnings, which places next year's multiple around 41 times.
So it's pretty amazing, right? So AI demand, more demand for data centers and the infrastructure build out there. The stock's hovering around $400. Tell us about your example trade.
Yeah, George.
Yeah, so if you look at the stock, obviously it's in an uptrend, Nicole, so we don't want to fight that trend. It seems to respect the 20-week moving average, which corresponds, give or take, to the 100-day moving average. So what I'm going to do is I'm going to play a trend continuation, and I'm going to go all the way to December with 73 days, and I'm going to basically buy a bull call spread. So I'm going to buy the $400 call option.
Damn, girl.
And then I'm going to simultaneously sell the $410 call option. So altogether, this would cost you about $5 a share or $500 a contract. So essentially, we need the stock to move higher, obviously, because it's bullish. And break even is 405 because you're outlaying 5, but your profit potential is $5.
Golly.
So it's a 1-to-1 return on risk. And that maximum profit.
Man, it's up 500%, guy.
$410 on the stock. And that's, again, not too far off where the stock is right now by about 2%. So it only has to move incrementally, about 2% or a little bit more than that in the next 73 days to reach max profit.
Okay, George Sills, thanks for the example trade there on Aristonet and the call from Citi today. Good luck there.
Don't say you understand it.
Today. Thank you so much. Coming up, our 360 round, a look at Amazon. Prime Day kicks off today. It's the 8th and the 9th. What do we need to know and find out about this company? Will it be the biggest ever? And what's the outlook for Amazon? We'll be right back with our panel.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan!
How's my favorite client? Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech. Trends?
All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investments.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. Time for our 360 round. We're looking at Amazon. Of course, the Prime Day kicks off, right? It's the 8th and the 9th here of October, but that's just one of many Amazon stories that are ongoing. Arun Sundaram, equity research analyst at CFRA Research. Melissa Otto, head of TMT research at Visible Alpha. Thank you both for being with us. Arun, you have a buy rating, $225 price target. What are your expectations for Prime Day, and what else is a super uber focus for you when it comes to Amazon?
Yeah, hey Nicole, thanks for having me. So this savings event is actually called Big Deals Days. Amazon, it's kind of an extension of Prime Day, which is their infamous summer savings event. This one's called the Big Deals Days. It's kind of in the middle of Prime Day and also the holiday savings period. So it's a smaller event for Amazon, not as big as Prime Day. But I don't think it's anything that's going to necessarily move the needle in terms of Amazon sales for the quarter. But it's still an important savings event, and we expect this to be a strong 2 days of sales for Amazon. One thing that we kind of learned with Amazon over the past few years is that whenever Amazon announces these kind of savings events, sales tend to hit new records, and we don't believe anything will be different this time around. I think for this savings event, I think one unique feature here to this year is that we'll likely see the fastest delivery speeds for Amazon, which would be great for consumers getting their goods quicker to their doorsteps. Also, this is also Amazon probably lower its cost to serve during this event as well. So lower cost for Amazon, quicker delivery speeds. I think it's really a win-win for Amazon here.
Oh, okay. So lower cost is a big one too. Let me hear, Melissa, some of your thoughts on Amazon over and above today's big deals day.
All eyes are going to be on the Q3 and what they're going to guide to for Q4. It's going to be a really interesting one. I think just kind of recapping Q2, we saw some volatility in the shares, the sales numbers, and the North America retail margin came in a smidge light in Q2, which caused some pressure on shares. Coming into Q3, expectations have come down a bit, particularly on that North America retail margin. Initially in August, Visible Alpha consensus was expecting 6.3% in this Q3. However, that has come down 60 basis points to 5.7%. And how the market will guide for Q4 will be really critical.
Okay, so watching the margin pressure on the retail side of things, is that something that you're keeping a keen eye on as well, Arun? And what about Amazon Web Services? What's the order here of importance? You mentioned the cost structure and cost savings that maybe Amazon is experiencing. I'd like to hear more about the books and the balance sheet, because folks want to know whether or not they really should be believing in this company and buying it at $182, Arun.
Yeah. So about the North America retail margins. The North America retail segment in Q2 margins were slightly lower from Q1, but that's it's not really due to their e-commerce retail business. That margins of that business actually increased quarter over quarter. It was due to other investments Amazon's making, mainly in its Project Kuiper business, which is its satellite business that they're ramping up investments there. I think as long as Amazon kind of discloses, the margin pressure from this satellite business versus their, actual core e-commerce business, I think the stock will be okay from that perspective. AWS, in terms of what's the most important for Amazon, advertising and AWS are two highest margin businesses for Amazon. And really, right now, if you look at AWS, it's really firing on all cylinders there. 3 consecutive quarters of accelerating growth in AWS, hit 19% year-over-year growth in the latest quarter. In advertising, that's also a very high margin business for Amazon. That's a $50 billion run rate business for Amazon. Amazon doesn't disclose margins in that business, but it's probably close to like 40 or 50%. So very, very profitable for them. And the best thing for Amazon right now is that the two most profitable business segments, which are advertising and AWS, those are the fastest growing segments for Amazon. So that's good for overall margins. So we do believe margins over the next few years will continue to expand. In terms of the balance sheet, right now Amazon's just generating a ton of free cash flow. That's why one of the reasons why we have a buy rating on the stock. Free cash flow has been accelerating, growth has been accelerating there, and we see that continuing over the next few years, despite an increase in capital investments related to all the AI features that Amazon's investing in. We've continued to see sizable free cash flow growth, and that's one of the reasons for our buy rating.
Yeah, understood. I mean, that's certainly a nice lineup for a balance sheet when you listen to it that way. Melissa, I'll give you the final words here on Amazon. What should we be watching? Because the earnings are due out on the 24th.
Absolutely. I think looking ahead to Q4 in terms of company's guidance, Visible Alpha consensus is expecting $186 billion in total revenues. That's going to be the number the market's going to be expecting in terms of the guide, where they need to meet or beat those expectations in order for the shares to potentially grind higher from here.
Okay. Arun Sundaram of CFRA Research and Melissa Otto, Visible Alpha. Thank you both. A good look there at Amazon. We appreciate it. Thanks for joining us here on Trading 360. I'm Nicole Petalides. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'll see you at 2 o'clock for the watch list. Join me then. Keep it right here. Fast Market is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week, it's going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky.
That's a tough question.
Great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions, and we'll have some option strategies. We're going to lead off with some tech names that were downgraded today. Microsoft is pushing aside its rating drop today, but it's been under pressure over the last couple months. And Qualcomm, which has dumped nearly 30% from all-time highs that we saw in June. And like Folio, break down consumer sentiment data in McDonald's, the fast food stock has rebounded sharply over the last few months and is now just above flat on the year. Now let's take a look at the major indices, which are near session highs as we speak, rebounding from yesterday's sell-off. Nearly all of those losses regained. The S&P 500 up 0.8%. The Dow lagging a little bit, down nearly 2.1%. The Nasdaq 100 leading to the upside, up over 1.25%.
Spike coming down a little bit here.
Also lagging, up just over 0.25%. As we see strength in tech leading in some of those blue chip names under pressure. To help me break down market action, let's bring in my co-host, and that's Kevin Hinks. Kevin, what's the give me the reasoning behind the rally back after a weak choppy session yesterday?
No.
You're not going to give us that.
No, I want to know what yesterday was. This I can understand, right? Because the overall U.S. economy is good. Interest rates are over 4%, but not really spiking. Why your crude oil's back down? Why was yesterday? That's the one I can't figure out.
Well, crude was up nearly 4% yesterday. Yields continued to rise. 10-year got above 4%.
Yeah.
And that actually, the 10-year went to 4.05% today, but that's pulled back a little bit also.
And then how about 130 yesterday when all the, markets were at like 0.5% and they doubled right at 130. They just plunged got down 1%. I don't know. I'm trying. You know what? Sometimes it's not worth your time or brain power to figure out why they're moving up or down. Just trade them, right?
Well, it seems like there's a lack of liquidity. Maybe that's why we fell yesterday because, I was just looking at markets, whether it was the futures or some individual names, and we saw some big chops and big swings based on nothing coming out. So maybe it's a liquidity problem with stocks just below all-time highs.
And, stocks are getting, pretty pricey here. Interesting move in gold.
Yeah.
Pretty solid move there. Crude oil backing off after, melting up the last couple of days.
Yeah.
By the way, China, that's a big sell-off in China after days and days and days of stimulus coming out. They open up after a week vacation and they pounded the Chinese markets.
And they had a press briefing over in China, and that's, I think, why oil even turned lower, was the fact that they didn't come out with any additional stimulus, which I think maybe the market had kind of priced in, the price of crude anyway. A big red candle in crude oil today after rising nearly 4% yesterday.
So it's tricky. I mean, these markets are volatile, and there's so many things that you can list as a reason why they're doing one thing or another. It's geopolitics, it's U.S. politics, it's earnings coming up, it's the move in the macros, it's the U.S. data. There's so many reasons why the market could move, and frankly, pick one, right? And try to figure out why that one's moving. You know what it's better to do? Just trade them. Keep trading, stay in the markets, adjust your winners, adjust your losers. I mean, these are great markets to trade. They're all over the board.
Yeah, choppy. Get a narrative, and then if you want to trade it, trade it. Yeah, get a narrative based on individual names or the overall market or a different asset class. All right, let's expand this conversation. Bring in Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, so I asked Kevin, I go, what's going on? Why are we rebounding from yesterday's loss? And he goes, no. So do you have a more clear answer? Because I think we got some good stuff. Yeah, go ahead, Nate.
It's all about perspective and interpretation, right? I mean, there's always bulls and there's always bears. So yeah, I think yesterday, likely, Tom, you're probably spot on with the yields going up and oil prices going up. Oil prices down today. If we simplify it, maybe that's, to some extent what is creating some of the price action. We've got CPI later this week. We've got Q3 earnings starting later this week. And then, if you look at the Russell, it's not doing much. That's kind of taking a back seat. But if you look at technology, you look at NVIDIA, watch out. We're basically coming up to a 3-month high here on NVIDIA. Part of that has to do with Micron, Jensen Huang's recent bullish comments. They're at an AI summit in Washington, D.C. today. We saw Super Microcomputer have some bullish commentary about how many servers they're sending out in terms of strong demand. So it looks like we're going to talk about Microsoft and AI, but if you look at NVIDIA, if it's able to, basically take the baton again and kind of lead back up, and tech pulls us out of this again, I think at least to some extent that is what's going on, some optimism around tech. And perhaps seeing that relative strength come back within that sector. If you look at mega cap tech in Q3, it was essentially the worst performing segment of the market. I mean, it was still up, but on a relative basis, it was essentially flat. So it looks like perhaps maybe we're getting some optimism that's flowing back into that sector.
Yeah, definitely. Nasdaq been lagging. Dow just off all-time highs. S&P 500 just off all-time highs here, Kevin. But then Russell, with those yields going higher, the dollar moving higher, that's been under pressure, and it just hasn't been righted over the last couple of weeks. We've seen actually a downturn. And, I mean, think about this. 50 basis point cut by the Fed. Everybody thought, oh, so interest rates are going to stay low. But they've shot up. I mean, parabolic move over the last few sessions since that 50 basis point cut, where it's kind of like, okay, the economy is doing good, so I get why rates are up. But at the same time, that's not going to be good for the economy down the line if rates stay elevated here.
There's a lot of things that can affect where the stock market goes.
The
data is going to be crucial. We're going to get data later this week. You know, we're going to see a 2.5% year-over-year inflation headline maybe move to 2.3, and everyone's going to say, hold on a minute, that is stale and old, and crude is significantly higher than where that was now. And so they're going to discount the CPI. So what's that going to do?
Right.
What happens if core comes in higher? I think the biggest risk now, or it's almost 50-50, is inflation. Inflation is still out there. I can't believe that they're telling us to take our eye off inflation when core metrics for inflation have all stopped going down across the board.
Right.
They've stopped going down. And if we lose the energy narrative that has kept those headline numbers lower, uh-oh.
Yeah. And you know what? That whole theme that people are talking about is owner's equivalent rent, and rents are going to start coming down. Why would rents come down?
Yeah,
because there's a lack of supply
major
right now.
housing shortage, a fundamental problem.
Yeah. Jobs are robust.
Yeah.
Wages going up.
Yeah.
Why would they have to lower rates on rents, and home prices are near record highs too?
Yeah, that's one of those economists talking. The rents are going to come down, aren't they? They are, right?
If we go into a recession, they are. Nate, I wanted to get your take here because I think a lot of the moves that we're seeing today and yields going higher and stocks going higher with them fits into that narrative last week after that blowout jobs report, and we haven't talked to you since that came out. And the rest of the week was pretty solid jobs data as far as ADP and JOLTS and jobless claims too.
And services. Remember, services from last week was really strong as well. Services, 70% of the economy. We know manufacturing has been, in a recession. It's been in contractionary territory for quite some time. But it's, hey, if you got 70% of the economy that looks like it's in expansion territory, it looks pretty robust, that's good. And then you look at the higher yields. What is the message the bond market's sending? The economy's stronger than we thought. The non-farm payrolls is something that has really appeared to solidify the soft to no landing type of a thesis. If you look at the last 3 non-farm payrolls reports, the prior 2 before September's that we got last Friday were soft. We saw an uptick in unemployment. We saw those recessionary triggers. We saw the Fed commentary, some concerns around, all right, our focus has now gone to the labor market. It looks like some softness is showing up. And then Friday's report basically countered that. Look at Atlanta Fed GDP. They went from 2.5 to 3.2% today. So it feels like the narrative is, hey, the economy, yields are going up. The Fed's likely not going to be cutting as much as we want or as fast as we want. But if the economy's strong and that translates into EPS growth, then we're okay with that. Because if we look historically, has the market been able to move higher if yields are moving higher and or Fed rate cut expectations are pushed out and basically downgraded? The answer is yes. Let's remember we started the year with 7 rate cut expectations. That came all the way down. Let's remember we've seen yields move higher as stocks were making fresh all-time highs. There's supposed to be that inverse correlation between yields and the stock market and risk premium But the market has demonstrated over the last couple of years that as long as the economy is strong, as long as the data continues to tout that case, then we're largely okay with it. And yes, I understand if yields are moving higher, generally speaking, that's not good for stocks. But you have to consider just the history that we've been through in terms of the relationship between the Fed and the economy and rates and what they've been doing.
Yeah, that's a big jump on that Atlanta Fed GDP now. And you mentioned, the services data, the jobs data, pretty robust. That narrative that we keep talking about, soft landing, Kevin, it's coming clear, more clear, right?
Yes, but indulge me for 90 seconds.
Got it.
Okay, you ready? NFIB small business optimism comes out this morning around 6 a.m. Chicago time. 91.5, slight uptick from last month. 33 consecutive months below the 50-year average of 98. The uncertainty index. So this is small businesses, right? 2/3 of the U.S. economy. 2/3 are the uncertainty index rises 11 points to 103, the highest reading.
SMCI is down 3%.
For uncertainty. And small business owners are feeling more uncertain than ever. Their chief economist said, uncertainty makes owners hesitant to.
The reason why SMCI popped was because of demand. Demand. I mean, it still has a lot of stuff. It's got a Concord. Earnings and just honesty. But this is one heck of a run pre-market. You see the air has been let out of the tires here. It's definitely a nice little flag out of a snake. If you look at the weekly. In the daily, we pulled back to the 21, which still would keep it bullish if it held the 21. Not, we got a 1, 2, 3 dip to wait for. One nutty chick was right. Definitely the market bounces back on some of these unusual dips. Yesterday was kind of, I don't know, I got caught in that stupid frickin' knife. I had to get out, but jeez. AMD had a pullback.
All-time highs we saw a few months ago. Fast market's coming right back.
Yeah, it's hard to say what yesterday was all about. It really wasn't much. All it did is pull back to the weekly beginning support level. Someone asked me last week if we were going to have us what would they say, sideways week, where we just, and we did. I mean, we pulled back to support. What gets me at the end of the day, I didn't take that call and it run up $4 on the contract. $1 to $5 something. It, What's Florida? This hurricane going to hit Florida? It's a straight on hit. I don't think I've actually ever seen one go like that before, or just one side of the state on the inner side or the Gulf side all the way out. I wonder what it'd be like to have to run a business in that kind of territory. I mean, you'd have to have some real good, expensive insurance, I bet. I wouldn't know what kind of business. It'd have to be something to do with fishing. Charter business. Because I don't think I could have one that was on the land and have to deal with that every frickin' year. Knowing if I was going to, especially with my kind of attitude, I got to have certainty. It's like, you know, I'm trying to ask for a cost of living increase on my pay with all these companies that I've got, and I'm afraid to do it because, you know, the competition is pretty tough. I mean, they can go, well, we'll just call someone else. We think we've been paying a little bit too much to begin with. And so I had this one account that's kind of been late to the draw, and I just keep. Finally, they said, you ain't got nothing to worry about. We're not going to be looking for nobody else. Which ain't going to matter anyway soon because I'm probably going to shut down.
Sell-off it had for the month of July. And so you look at a company like this, and they're right. You know, Microsoft on the Thinkorswim platform has about a 35 PE. It spent a lot of time in the 20s.
They didn't look at Netflix. Someone told me about Netflix the other day, and Apple.
One thing about Microsoft that you can count on is they stay ahead of the curve. Right? They were, for all this AI with the 3 Mile Island deal, I think they're staying ahead of the game here in all this, but they are
almost identical.
Sensitive to a global sell-off if this whole market were to sell off. But, you know, Azure's doing well. LinkedIn. We don't even talk about Xbox and Activision anymore. It's so on the back burner. They've got Skype. They've got so many businesses that are incredibly important. This company is massive. But with massive companies, Sometimes you get linked into whatever is going bad in the economy. And right now, if this, much like the dot-com bubble, much like streaming, if they get hooked into AI and an overall sell-off of AI, they can be, I mean, just look at that July chart. It's ugly.
Well, and yeah, they have kind of taken part in this sell-off away from AI as the market has broadened its rally. Obviously not the case today, but one thing I was talking about with Oliver Rennick on Morning Trade Live was just really, if you take a look at all of the Mag 7, it's only Meta that's trading pretty close to those highs. The rest, the other 6, are quite a bit of ways away from them. As I said, Microsoft in particular about 12% away from the July all-time highs. But I will say that this call from Oppenheimer is very much, this analyst is very much in the minority. If you take a look at the breakdown of Microsoft analyst coverage, there are 58 analysts that cover the company. 54 have a buy rating, and the median price target is $500 a share. So that's even above those July highs, which is around $467. And if you take a look at the street high for Microsoft, it's $600 a share over $1. And even the lowest price target, obviously there are no sell ratings, so it makes sense that there wouldn't be a lot of price targets below where it's trading, but the low is $440 a share, which is still significantly above where it's trading, not quite back to those highs yet. So I do think that the overwhelming majority of analysts is still very bullish on Microsoft despite valuation, and think it will continue its tick higher even above those highs. But again, it's a 12-month price target, so not without some maybe near-term volatility.
Yeah, and below its 50 and 200-day moving averages, which it doesn't spend a lot of time down below those levels at this point on a technical basis. All right, great stuff. Thanks to Caroline Wood, Senior Markets Correspondent here, breaking down the Microsoft news. Let's bring Nate back in here. Nate, I mentioned the technical side. I know you look at charts on this stuff. Couple times on market sell-offs, we've been below that 200-day moving average, but we're still below it now, and it's down about $55 from those all-time highs. What's your take?
Right, yeah, technically speaking, maybe a little bit in no man's land right here, but as you're mentioning, if it's below its 200 single day moving average, that's the longer term moving average, that gives you a sense of how it's been performing over the past, year or so roughly. And it does, looks a little bit, I'm not going to say head and shoulders top, because you would need to break a neckline if that's the case, but let's just say that it's performed really well if you look over the past 2-year performance, but it's been kind of lackluster over the past 6 months, and that goes along with mega cap tech. As I mentioned, they were one of the bottom performing kind of cohorts for the market, and I think some of that has to do this creeping in sense of growth deceleration. So look, tech is going to contribute mightily to earnings EPS growth as it has been over the past several quarters, but it's all about growth deceleration. The market is very forgiving on valuation if you have EPS growth expansion. If you have EPS growth contraction.
Time for a trader's lesson right here. We had a big knife here on Tiger. Tiger's got a lot of volume. So anytime you have a huge knife, hook up your Fibonacci's on that knife. And I always talk about, when they break out to pull back 50%. Well, this thing bounced up 50% from that bottom. That was like a double bottom off that snake. And it run back up and hit that 50%. And then you'd want to exit the trade.
And so, you look at the stock here. Near term, we could be a little bit oversold. We're down from 440 to basically 410 at the close yesterday. We've got earnings coming up on the 22nd, but look, I'm a little bit, want to give the analysts some credit for downgrading the stock before they report the earnings and not just following suit after they see enough evidence that they're not it. I'm assuming their channel checks are suggesting that enterprise AI adoption is actually lacking traction.
And the investment in OpenAI, another $750 million on that latest round. And that's after $13 billion. So, monetization is going to be an issue. But you got an example trade for us, Nate, maybe based on this and maybe taking advantage of the 1% rally that we're seeing today, even with the downgrade.
Right, yeah. Hey, look, and when you get a downgrade and the stock is up, oftentimes you might cite that as bullish price action that's in there. I think the reason that it's up today is the setup heading into this downgrade. It was down the prior 2 weeks, and the market being up, mega cap tech being up. So maybe a little bit of mean reversion type of a bounce here. But if you were on the side of these recent analysts, D.A. Davidson and Oppenheimer, and wanting to play this from a bearish perspective, we've got earnings coming up on the 22nd. I was looking at, I'm mindful that the VIX is above 20, but I also think that the VIX is likely to remain elevated because of the elections. So you want to look at Vega risk potentially, and if that's not the case, then you might be looking towards, hey, how can I take advantage of this from a theta perspective? And let me get some premium here. So I was going to a bear call spread going out to next Friday. I wanted to avoid that earnings event, and I was selling the 420 put in this example and buying the 425 put for protection. You got a $1.45 credit that's up there. It's around 155 right now at the current price, and I was thinking of seeing how much additional credit I would get if I included that earnings event and go to the 25th expiration, and you only get like an extra 40 cents or so. So you have to take some of these types of strikes and expiration selections into consideration. So with something like this, with a strategy like this, you would want the stock to remain relatively subdued, let time work in your favor, and you would have, this is kind of neutral to bearish in terms of the strategy on Microsoft.
Yep. Yeah. Let's go over this one because it's on the call side. I think Nate might have said puts, but it's definitely calls on this. On this example trade. So going out to the October 18th monthly cycle. So 10 days to expiration, a week and a half. Sell the 420 call, buy the 425 call. Short neutral to bearish, $5 wide call vertical. Collecting roughly about $1.45 credit. Might be about a dime higher than that right now because the stock has continued to move higher. But that credit you collect is what you can make on it. If you collect $1.45, $355 in risk on this one, Kevin. And the break even, $421.45 to the upside. So you still have that cushion where you can profit in 3 out of 4 scenarios. If it goes lower, remains where it is, or even goes up to 420, but stays below that break even.
Yeah, something a little more aggressive on the short call vertical, 64% probability of finishing out of the money. $5 call vertical, but the trade-off, when you get a little more aggressive, bigger premiums, right? So if you think fading this move here in Microsoft, then they'll either do one of 3 things, right? It can go down, it can stall here and go nowhere, or it can go up a small, about another $6.
Yeah.
All those are still profitable on this trade, but you're collecting theta, you're risk defined, high probability. Those are the 3 things we look at.
Yep, and this could be a speculative trade. If you're long Microsoft shares and you want to sell call verticals against them in case it does, maybe reverse. Go ahead, Nate.
Oh, well, I was going to say the timing aspect of the strategy, just because for our viewers, when we're talking about Microsoft, obviously because of the downgrade, they're like, hey, Nate, give us an example trade. We know we have earnings coming up in a couple weeks. So the timing of when you put on some type of bearish strategy, one thing that I think about is this the right time to put on this type of a spread? You might want to wait and see if you get some type of a pre-earnings anticipation as we head into the 22nd, and then look to position yourself in a bearish manner. If you look over the previous earnings reports, the 2 or 3 earnings reports, the stock is, even though Azure is largely coming above estimates, it's been a pretty poor performer post earnings. So
Instant Pot
these are just
cooks
some
a
of the
killer
elements
sweet
that you need
potato.
to take into consideration when we're talking about timing.
Yeah, especially because you got 10 days in this position. You avoid that earnings, but does the stock rally into the earnings? Maybe that's about the timing, I think, that Nathan's trying to get at.
Yeah, ahead of the earnings and only 10 days till expiration.
Right. All right, great look at the short neutral to bearish call vertical in Microsoft. Thanks to Nathan Peterson, Director of Derivatives at the Schwab.
Well.
Research
It's now 11:30, 12:30. We got an hour.
Landon Swan's going to join us from Mike Folio for a look at sentiment data in McDonald's. Fast food stocks only up about 1.5%.
I already made my grand for the day. I
we've seen a
don't want to push
snapback
it.
rally over the last few months.
Yesterday, I barely made green. Today, my first trade. Green. No, they made one. Two. We got a triple top here on the SPX. So I'm just kind of wondering now if we're going to squeeze out or pull back for the rest of the day. It's kind of hard to, it's kind of a choppy little, we do have a head and shoulders right here. So that's a fact. Took me a while to see it. So if it doesn't come up the second time, it'll probably pull back to a 3. I love my water warmer. Well, I wonder what life's going to be like if Kamala does win. I keep looking at property in Hawaii. Tesla has an ascending triangle. She's back? Where's she at? I bet you it was a butt call.
So I think that's a big problem. In fact, when people were recently surveyed and they were asked, what are the things that you're cutting back on because of inflation? The number one was eating out. It was 58% of U.S. consumers are talking about reducing, eating out, dining out, and that was by far. I mean, you can see movie tickets
By
and
far.
experiences are about 33%. Eating out is 60%. That's 3 out of 5 people. So that is a huge, huge number for them. And then when you look at how McDonald's is doing in the space, both on demand and consumer demand and happiness, they're kind of at the bottom of the pack. It's just, wherever, whoever you throw in there, it's just not great. This is consumer demand. McDonald's is at the bottom of the pack. This is a year-over-year change.
McDonald's sucks.
When you change this to happiness, it's basically the same thing. McDonald's is at the bottom of the pack. And I think a lot of it has to do with the fact that people aren't getting the value that they're used to. They're okay with the food quality maybe being a little bit less than some of these others, but it has to be a good deal, right? You got to be able to go in there and have a good deal. Now, to their defense, they're trying a lot of things. I mean, they are trying discounts via their loyalty program. They have offers that pop up in the mobile app. They're trying a new chicken Big Mac. I think that's Thursday, so if you guys are interested, go get it. And one of the things that they actually tried is the $5 value meal, bringing that back. It was a test run. It worked really well. They're extending it. They're starting to see that the perception of value is starting to come back, especially among the low-income consumers, which is key for McDonald's. And so I think that's, it's showing that they're trying different things, but it's all about what's working. And so the effort is there, but we're not to the point of results just yet. So given where the stock is at those all-time highs, basically top of a range, and the fact that everybody's just cutting back, and they don't love McDonald's right now, I'd say that we're gonna have to lean bearish on this one when the earnings come up, and we still got a little bit of time. But right now, if I was a shareholder, I'd say maybe I'll take profits and see if see how things look going into earnings in a few weeks. But right now, it seems a little rich.
Landon, Tom, Kevin, we all have childhood memories from McDonald's, right? And how much we loved McDonald's. And for a little bit, our children probably have some of those because we took them there, right? But our children, we're the boomers, they're the zoomers, they don't have those same memories. Our children like Chipotle and other places that aren't McDonald's to eat. They like Chipotle is more popular with the younger demographic, and they promote to them, and it's just a better relationship. Has McDonald's lost that age demo? Can they get them back with digital marketing? What can they do? Because it appears to me like if you let a kid go wherever they want, if you got a kid 12 to 20, they're going to go to Chipotle. They're going to go somewhere where, like a healthier fast food case here,
or better
doesn't
tasting.
seem like McDonald's,
or better tasting.
Yeah, better tasting. And you know what I think it is. I'm going to date myself a little bit here, but when I was a kid, it was fun. They had the statues of Ronald McDonald. They had a play set that had Happy Meals. It was colorful. Now, all the McDonald's look like banks. It's all gray and white, and there's no play areas, and it's just kind of like, okay, do you want some food? And it used to be cheap, and now it's kind of medium price. It's like, you're losing your appeal here, McDonald's. So I think that I think they gotta I don't want to say reinvent, but they've got to definitely look at what is it that they're known for. Forever, like I said, value and affordability. They've lost that, and now they got to get back to that because. Frankly, they're going to have a hard time competing on taste with all those, the ones that you.
McDonald's, I can spend a big buck on McDonald's meal and go out to a fine restaurant and just spend a little bit extra more and get a better burger by far. So they've got they've outpriced themselves. They let the government mandate their pay raise, and now they can't afford. Plus, you don't go around bad-mouthing half your customer clientele either, like they did. Two-day exclusive. Oh, I got an offer. Shop the sale. Been checking out the Hyatt Ziva, the Montego Bay one. Book now. Oh, wrong date. Damn. 500 a night. Time is running out. Florida braces for a monster hurricane Milton. Taylor Swift and Travis Kelce kiss like no one's watching. Oh, really? I don't think I'd kiss her. They're freaking out. What's he saying? I'd be one of them kind of guys that'd want to stick around and watch it. But this one's a bad one. This is going right straight across their state. I mean, there's nowhere else to go but north. I feel so, tornadoes are bad. I mean, a hurricane you can prepare for, but a tornado, they just drop out of the sky. They're just as bad or worse if you get hit with one. And it's weird watching all these other states get tornadoes now, like we used to get them every year. I've been in 4. 2 of them I can remember real well. One in Memphis. I'll never forget that one. And then the one in here in Missouri when I was a kid, a tree fell through the window. And I still remember that tree. I've been in a lot more. The Joplin one was a bad one, but I wasn't in it. But we could tell it was a bad one. 165 died. I knew somebody that had a hotel reserved down there, and he canceled his trip and wanted to make sure that a hurricane victim got it. I've only been in Florida a couple times, so it's the market's trying to squeeze. This is number 4. So I think it's going to tell us either here now or never. If we're going to continue the breakout. So I'm going to look at the puts just in case. The calls are at 197. I got out of them. They're in the money. So the 570 put at 108. Let's see if we get a knife here. This is risky. Maiden day trade / scalping. OCT the 9th. Strikes 570 at 1.08. This is a risk. $117, baby. Drop. Jimmy wants a 1-2 free. Give me another candle. We'll see. 127. Take profit. Scale out. Oh fuck! I'm charting up the SPX. I did it again, dummy. Yeah, my name. Oh, you dumbass! What did I just do? Well, whatever I did, I charted up the SPX and played the SPY. Jim, you're about the luckiest guy in the world. I don't care what all the women say about you. type what? Oh. So I guess that ain't going to screw around. Is that going to hit Cuba? No. It's 70 degrees here in Missouri. Man, look at that. It's dead track right in the middle. So right now it's a 4. So if he hits land, it'll be a 2 maybe. Lived in Honolulu and Maui, but mostly Honolulu. Trading just comes natural to me.
Much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want
Tesla
to buy
broke
it,
out.
the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues.
Yes, they can.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
There's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Kevin Leary, he makes me crack up. Not in a good way. Yeah. Time is running out. President Biden postpones trip to Africa and Germany ahead of Hurricane Milton hitting Florida. I was told to keep an eye out on Home Depot and any kind of stocks that have to relate to hurricane rebuilding. I heard that. I heard that one guy that does the pollsters said that she did good. Trump's not out giving him. I'm going, what? Where the heck have you been? If you ever get a chance to go to a Trump rally, go to it. If you have never been to one, it'll be your best experience. I've been to all of them. From Reagan on up. Went to Obama's. Went to Hillary. Bush, Reagan, Trump. I didn't go to a Biden. He was in the basement. If you wanted to go to a Biden one, you'd have to go like you were at a drive-in. I didn't want to do that. So Little Boy Blue, I took my little note down from Little Boy Blue on AMC. I didn't want him to start getting on my channel and start cutting me down. Home Depot. PLTR. I see 45 earlier. Oh my God. What happened here? Huh. Rivian at 1035. What's Ford up to? 1050. General Motors. General Motors had a little pop. AUL. UAL. UAL's come back strong. I can see why they were talking about Microsoft. Trust Security reiterates a buy on Microsoft at $600. You can't believe that. Microsoft retail in advance, a $30 trillion opportunity unveiled. Oh well. Don't overpay and get your taxes done. Freebie deal. Huh. I haven't took my shoes off today. If I did, I don't remember putting. I mean, I like these shoes. I haven't taken them off yet. These are the Brooks that I just bought. I like these a lot. Going down to my favorite one so far. The Ghost Max. I think I'm going to get me another copy going and get back into a trade here. Spidus knife. What? Oh, shit. Don't tell me them puts. Oh, no. Wonder what they're at now. Don't tell me. Unbelievable. They're at 160 something. Jim, did you leave 30 some cents on the table just now? Yeah, I did. She got mooned over in the vegetable aisle. Jimmy sold it. Alex.
Yeah, good point there. The Nasdaq, we did see dip at around 1207, attempting to recover here. So we'll be keeping a close look on the overall markets and, of course, the 4 major averages. But we'll be looking more at our upvoted stocks today. We'll be diving into Uber as well as Walmart for a broad AI theme. So stick around. Next Gen Investing will be right back.
I love you, Jenny. Do, do, do.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment. So joining me is our Chart Master himself, Rick Ducat, to break down the technicals for us. And we'll start off with, actually, I have to say, both of these have frankly been winners on the year. Uber's pulled back more substantially than Walmart here. So we'll start off with Uber, which is a bit more interesting. Rick, walk us through this chart.
Uber is one where we had a nice rally in the beginning of this time period that we're looking at, and it's kind of moderated here. So you can see that we hit a high point all the way back here, 82.14, topped out around that same area multiple times here. So this gives us a key place to keep an eye on here. The more times the resistance or support area is tested, the more weight it holds. So from there, you can see we drew this longer term blue trend line sloping downward, happened to connect pretty closely with the recent highs that we experienced here. Also, we have a competing
overhead resistance.
Low point here. August 5th was a low, a significant low for many, many stocks that we've talked about on our programs here. And we can see that that gave us another corresponding blue trend line. However, we have broken beyond our upward sloping blue trend line. Our downward sloping longer term one is still in play, but our upward sloping one, which was support, has now become resistance. Common common situation that happens in trading, kind of this reversal of a key area. If price passes through it, it still becomes relevant when it touches again to the downside or upside or whatever. So now we are finding ourselves in a situation where we're above our moving averages. The moving averages themselves, they're all trending upward here. The next step that bulls would want to see would be for a break beyond our trend line and our recent highs near 78.45. In terms of volume, nothing really notable recently here in terms of our volume average here, but you know, kind of just not really making major progress beyond any important boundaries so far.
Yeah, and so I do think that we're seeing at least an attempted recovery, and I say recovery because we're still off of those highs, but as far as momentum, RSI here of this recent, I mean, pretty decent trend, obviously making a nice move to the upside today. What are you seeing?
Mostly RSI behaving as you might expect here, kind of just matching the price action here. We had a low point corresponding with our August 5th low there where we did cross into that oversold area, but quickly rallied out of it here. You can see this other low point gave us this green trend line to follow here. Happened to be about where we bottomed out last time we were moving lower, but now we are above our 50 midline that separates bullish and bearish momentum. So couple that with the read that we gave on our moving averages and our other trend lines and such right now, probably a little bit more of a bias toward the upside in this name based on those things here. But like I said, we've still got some work to do here in terms of clearing that persistent ceiling that we encountered near the highs, as well as our recent highs too. We haven't really crossed over those yet. So it's not everything isn't all great at this point right yet here, but things are looking okay.
Yeah, I have to say, not so great is a great way to put it, because I was looking at this chart and I was like, I remember when Uber was on much more of a tear than it is now. We've sort of seen that recent upswing sort of start to slow, but as far as now key levels we're watching, we have earnings on November 5th before the market opens, I believe, so we have that to look forward to in a bit less than a month here. So what are we watching in the more near term?
Well, we did clear one area here, this green line. That was a high point that we experienced after a downward price movement there, up around where we had highs several more times, 73.82, roughly around that area here. So that could be a supportive area to keep an eye on if we start moving lower, especially because it's right in line with our yellow 21-day exponential moving average. So around 74 would be a place that traders might have their eye on for potential support. Just below that, we've got our shorter term white trend line and our orange 63-day exponential moving average right on top of each other as well, near about 72 or so. To the upside, the recent highs, 78.45, that's the mark to beat. And then, as I said before, our old 52-week highs here, near about 82. That's where the bulls likely have their sights set on eventually in the longer term.
Yeah, and making a near 2% rally today. So now with this in mind, and I believe their earnings actually are October 31st. I think I said November 5th, but I think they're a week sooner than that just based on the platform here. But with all this in mind, then Alex, walk us through then a bullish leaning example trade.
Yeah, regardless of that date, we're ahead of it.
Yeah.
We only went out to the October 25th expiration for this particular example. What we're looking at is buying a call counter. We zoomed in on that resistance point that Rick talked about, those former recent highs around 78.5, 79. And so what we looked at was a 79 call calendar, selling next week's expiration, buying the week following, which was the 25th. 40-cent debit means $40 in risk on this trade. Mountaintop risk-reward profile that we talk about all the time with the calendar spread. What it looks like is, as you see on the screen, it peaks out at the strike. So in this case, the strike selection is as important as anything, because you're looking for a move to that level. Now, I said we use that sort of former recent high as sort of the strike selection reason. Somebody with a different train of thought may choose a different level, but looking for a test of that 79 mark over the next couple weeks. If you get that, there's a chance for this one to work out. But risk defined, limited to that $40 theoretically in the event that it does fail to make any sort of an upwards movement here, Jenny.
Okay, yes, and now to shift gears and look at, of course, Walmart as our next upvoted name today, which is pretty much at its all-time highs. I know we've pulled back about 3%, but this is one of the strongest charts we look at. And I mean, it's shocking that it's Walmart. I guess in this market environment, this overall macro situation, it's not surprising, but its resiliency has been so amazing given the fact that it's still so consumer exposed. So Rick, walk us through the recent trend we're seeing in Walmart. I mean, all indicators point to nothing but the upside, I can imagine, in Walmart shares.
Yeah, I understand what you're saying. This is not the kind of chart you would expect to see from a blue chip kind of consumer staple type name here with just such strong upward trajectory. We're up about 59% off of those lows. And it's kind of an odd chart too, because we had this large gap to the upside, kind of trended upward for a while, another large gap, and then a steeper rally there that we saw topping out near about 82, 81.60 or so. Now we are, not really making too much more upward progress right now, kind of moderating our gains a little bit here, more of a sideways movement with a range that we've established to keep an eye on in the shorter term at least, 77.50 or so to the downside, 81.60 to the upside. One thing of potential concern here though is that we did break through
78,
the downside of our shorter
38, brother.
trend line here in
Another
white.
buck.
And we are also on the verge of breaking below our yellow 21-day EMA. So even though the chart looks pretty darn good overall, these are some hiccups here. These are some potential warning signs of early
Amazon downgraded by Wells Faggot Wagon.
See how things close, and if we do actually make a significant close below that 21-day EMA, but something to keep in mind as we approach the end of the day here.
Yeah, and I think well put here. And we're not doing a whole lot in shares as far as price activity today, but momentum here. What are you seeing behind this clear uptrend? I know we have chopped around a bit, but still an objectively strong price trend for Walmart here.
The chopping stuff that you said that the price is fluctuating, up and down here, has taken a bit of a toll on momentum here. You can see that momentum was behaving nicely. RSI was trending upward for a while during this rally here, but once we hit our high point, you can see that even though we were in the overbought area, we started to trail off here. You can see that we have been trending downward more. And we're not seeing bearish divergence exactly because price was not making higher closes. Divergence happens when price is making a higher close, RSI is making a lower close, and they're moving in opposite directions basically. But here, it's mostly just kind of matching up with the price action and reflecting this consolidation phase that we've been in for a short time as momentum kind of trails off a little bit here. But now you
SPY
can see
bouncing back up.
Trend line in play, hanging out just above that 50 midline. A cross below the 50 midline would be bearish. A break above that trend line would be more bullish here. So once again, kind of a question mark here for right at this moment. But
So right now we're at a decisive point here on the SPY. Same as the SPX. SPY just went from 120 to 138. 200 bucks. It's an ascending triangle. Getting ready to squeeze. Oh boy.
selling one strike out of the money. In this case, it's the 77.5 strike being bought on the call side, selling the 82.5 call to reduce the risk.
Now, Buffett owns 10% of Bank of America now, so he's sold, I think, the last of his shares. Now, I remember when Buffett invested in Bank of America, and it was at $5 a share, so he bought warrants. If its stock ran to like $15, he could still get them at $5 a share. So he made a lot of money on Bank of America. He's held it for over 20 years. Well, 18. I forgot what year, maybe 2009 he got them. But he bought a ton of them. Everything was cheap. He bought hog at 9. And Bank of America didn't do much there for a while, and then all of a sudden. So he's done very well in them stocks. He's got to be at least up 700-800% on them. 600%. I think he was the first one I ever. Warrants. What's a warrant? The way I understood back then, he had the option to buy them later at the same price, but I could be wrong. But he sold more. He sold it more this week. More Bank of America. Is salmon or tuna healthier? I know tuna can be a lot more expensive. I gotta go clean my glasses. I think I'm gonna go do that right now before I get back into trading here. Fat cats are back.
To the upside today. So joining me now to discuss more on some of this strong price activity is Caroline Wood, Senior Markets Correspondent for the network. So Caroline, saw a lot of analyst notes. I saw buys flying across the board. So I have to imagine that's why we're up today. So walk us through these notes.
Hey there, Jenny. Yes, Palo Alto is the second best performer in the S&P 500 today, behind Palantir, the best performer in the NASDAQ. As you said, shares are up about 5%, and likely contributing to this optimism is some bullish analyst activity. Here? First of all, an analyst over at Goldman Sachs kept a buy rating on shares, but hiked his price target to $425 a share. That's up from $376. So it's currently trading right around $355 right now. So still about 20% upside from current levels, according to Goldman Sachs. The reasons for added bullishness from Goldman Sachs: the analyst points to next generation security annual recurring revenue, also known as NGS ARR. It's a key metric for Palo Alto. Goldman says its strategy to upgrade its attached subscriptions to advanced service offerings is a multi-year process that could lead to significant growth. They say that Palo Alto is about 3 years into that journey. It's expected to take about 10 years.
And the advanced offerings improve security efficacy, but also come with a price increase.
Yeah, I'd
for
say we
customers.
did.
And Goldman says that its assessment of its NGS ARR, particularly from advanced attached subscriptions, combined with anticipated growth in other product cycles, like 21% increase over current street estimates for this metric in the next 3 years, the NGS ARR. So just to put that into perspective, back in August when Palo Alto reported quarterly results for the fourth quarter, next generation security ARR grew by 43% year over year to $4.2 billion. So this analyst bullish in terms of the growth that metric could see. Palo Alto doesn't report earnings until November 13th, so we have some time to wait for that report. It wasn't just Goldman Sachs getting bullish, though. BNP Paribas also initiated coverage of Palo Alto with an outperform rating and a $410 price target, so that implies about 15% from here. As we said, shares up about 5% today, up about 20% year to date, and up 40% over the past 1 year. Currently trading about 7% away from the highs.
Slowly but surely, Caroline, it's making its way back after that really disappointing first quarter earnings release that it had. I was looking a year ago at this time, almost 90% of analysts said to buy, but even kind of the depth of that, uncertainty post that earnings release, it only fell to 70%. Now it's slowly building back up, but it does look like there was a few analysts that got scared out of their buy ratings, but for the most part, most of them hung on to theirs.
Yeah, scared out, or, it is a stock that has seen an impressive run higher despite, some of the weakness surrounding. I think it was 2 earnings reports in a row that were really kind of disappointing. The last time it reported back in August, it had a strong report and shares rallied on that. So could have been valuation calls as well. But yeah, 70% of analysts have a buy rating right now. 28% have a hold rating, and then there's just 1 sell rating on the street. The sell rating, of course, is the price target, the lowest price target on the street at 276, and it was updated recently, just yesterday. So that's someone that maintains that bearishness. But in terms of the median price target for Palo Alto now, it's $392.50. So as I said, it's currently trading around $355. Goldman's $425 price target is one of the highest on the street, although the highest is $445. So there's definitely some optimism among analysts that this is a stock that can continue to run higher, and we're seeing it do just that today with this 5% move to the upside.
Yeah, and Caroline, I think you make such a great point. This was at one point like our earnings winner, and then it quickly became like the earnings loser. Not loser, but we saw 2 pretty, negative moves in reaction to their earnings. Now we've been attempting to recover, but hey, still looking objectively pretty strong over the last 12 months. We'll leave it there. Great breakdown, as always, Caroline Woods, senior markets correspondent for the network. And so now we trade this name, Alex, and I do think that when you trade this name, you consider we're up about 20% this year. Now we pulled back about 7% from highs and 52% off of lows we've risen. So it's definitely trying to recover. We've been stuck, though, in this new range. Just right around like $338 to $350 a share.
How quickly we forget we watched this stock go from about $360 a share to the next session trading $260 a share. It has had such an incredible recovery. The day after that, back in February, if you would have been talking about all-time highs at 380, we might have been saying, is that going to happen this decade? That's how negative the sentiment around this stock was. Now it's within it's within reach. It's less than 10% away, and so I looked at a strategy that would benefit from a move to that all-time high if you think that's in the cards for this stock. And you really see that pretty impressive, slowly but surely stair-step pattern back towards that level. Now there's a few other levels along the way, but in the event that you think it's going to cut through those like the hot knife through butter and get back to that all-time high, this is a strategy that could benefit from that. Going out to the November 1st expiration, so staying ahead of earnings, selling the October 25th 380 call, buying the November 1st 380 call calendar spread. So similar to what we looked at in Uber earlier on in the show, but extending out a little bit longer in terms of duration. $1.50 debit, a little bit more expensive product when you're talking about a $350 stock versus a $75 stock. And so in this case, it's only natural that the risk on this is going to be a little bit bigger. It's a little bit bigger trade. It's a bigger product. So $150 in risk on that $1.50 debit. Trader doing this, though, really would like to see continued upside momentum, with the best case scenario being a move right towards that all-time high. And if it could get there at the end of the month, that would be just perfect.
Yeah, I mean, a name that's making a pretty decent move today, obviously, with the rest of overall tech, but story with Palo Alto Networks has been, I mean, can they continue to grow their enterprise customers? They can continue to grow in a highly competitive space, but seemingly today, a step in the right direction. We will leave it there for FOMO, though. Now, coming up next, time to talk social media stocks, as there is this potential TikTok lawsuit looming, which sent all shares of the social media companies higher today, but most notably is actually Trump Media and Technology, which is up 18%. So we'll dive more into the social media world with the focus on TikTok coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day.
Welcome back to Next Gen Investing. I'd now like to welcome in Kevin Green, Senior Markets Correspondent for the network, to break down some social media stocks for us. So TikTok lawsuit, I know TikTok isn't publicly traded, of course, Kevin, but everyone seems to think this is likely going to be the greatest benefit to Meta. I feel like this is going to be a longer story than anyone has anticipated. It's already been, frankly, a long story. I wish the lawmakers would spend less time trying to infringe on TikTok, and I don't even have a TikTok. So walk me through the story and how it's impacting, of course, the social media world today.
Yeah, obviously a lot of these social media stocks are catching a little bit of a bid here, and this is after 12 U.S. states, as well as the District of Columbia, has filed a lawsuit against TikTok, claiming that it has created an addictive platform for its consumers, especially when you're looking at children, and that the algorithm is really kind of preying on these children, I guess, in order for it to continue to gain and attract eyeballs here. Now, this is actually after an investigation that was started in March of 2022, and this is kind of the first step of trying to wrap up this investigation and see if they're going to be able to bring this to court. Now, TikTok has denied the allegations that this their app causes anxiety, depression, among other issues for people, and so at the end of the day, this is a battle that has been fought by both political parties, and we're going to see if this is actually going to result in any type of formal action. So you're seeing Meta catching a small bid here today on a relative basis. Snapchat also seeing a decent bid, as well as DJT, which is up around 19% in the session right now.
Kev, seen some of that's more just maybe high beta reaction to a strong risk on day with some volatility, of course, around geopolitics. But when it comes to this social media, so much of this is it's just kind of a delicate subject, I guess. I can hear, what TikTok's saying. If I was TikTok, I would say, hey, what makes us different than our competitors? Seems like that's an easier argument to make. If you're going to make, wide sweeping allegations about us, why don't you make them about Instagram? I don't see that much of a difference. But when I look at this space, I'm not envious of those who are growing up, going through middle school and high school right now. We grew up with this stuff, Kev. It was in its primitive stages, but this is, you understand the arguments, and just how do you deal with it? That's the big question.
Yeah, I mean, it is a big question. I think it's just like parenting too, right? Like you just take the phone away and don't give them access. But I know that that's probably not a popular thing these days. So that would be my two cents there. Yes, is there capabilities of having an algorithm that can create and stimulate individuals' interest in a certain topic or subject? Yes, I think that is going to be the case here. But it's not just TikTok, as you kind of talked about it, and it's not even just social media. I mean, there's advertisings out there for many different products, from Nike shoes to deodorants or whatever, that try to capture people's attentions, and unfortunately this is just a scenario where there's friction between China and the United States. I think this is a company that's really caught up in the crosshairs. But we also have to kind of think about the larger implications here. If we continue to have this back and forth when it comes to TikTok, then what could be next as far as retaliation from China? Could it be limiting chip supplies? Could it be impacting companies like Apple, which have a massive impact when it comes to our GDP? So I think this really opens up a Pandora's box. And unfortunately, once again, this is kind of just the company that's in the crosshairs. And you are seeing some benefits being proposed, or investors a little bit showing excitement for some of these ancillary names, but I would say that they're not really one for one. Like Snapchat continues to catch a bid after the story continues to get updated, but when you're looking at the earnings announcement, it's a very weak company and has not been able to monetize in the right way. So this might be something that's like more of a buy the rumor, sell the news type of an event.
Okay, and Kevin, before we let you go, I have to get your thoughts on, of course, Trump media or Trump technology, whatever. DJT is the ticker. That's as closely as I can get here. But I do know that name's surging on the session following like Elon Musk's endorsement of Trump, which, I mean, is this basically just like a proxy at how people are now going to trade the election?
I guess so. Yeah, no, this is an interesting, it's an interesting company. So I'm all for, as you kind of talked about, we have freedom when it comes to social media. We have freedom with trading stocks, and sometimes this is a stock that people utilize to be able to express interest or try to capture short squeezes and gamma squeezes. But once again, when you go to the fundamentals, it's a little bit weaker when you're looking at it under the hood. And then one of its major investors, I believe it was a week ago, kind of sold out of a significant amount of shares too. So there might also be some enthusiasm that maybe some of the bigger holders of shareholders within the company might be done selling for now. And this is the reaction that we're seeing. But once again, short-lived. Valuations really don't match the price of the company right now.
Yeah, Snap, the company with 9 lives, I've always said DJT seems to be just a risk asset. Digital assets in general. Not a lot of fundamentals behind them. DJT may be comparable in that sense. At least there's something there, at least the platform of some sort. But when we zoom out, though, we look at the
but
overall
it don't make no
market
money,
cap,
Alex.
Volatility's kind of dried up over the last few hours. There's that little spat right around the noon hour here in Chicago around some of those geopolitical headlines. Is this to be expected with all the stuff on the back half of the week from CPI, PPI, Fed minutes? Do you expect volatility to dry up a little bit in the next 24 hours till those start hitting the news wire?
Yeah, liquidity drying up. I would think that volatility probably will stay elevated probably for the remainder of the week because of the geopolitical events. Obviously, we saw that massive move to the downside when it came to crude oil, and now we saw about $1.50, maybe almost a $2 move back to the upside because of the geopolitical news that's out there. But I think inflation is going to be really the highlight for the week. And then once we get past that, then we're going to be focusing on earnings starting next week, or pretty much Friday, but starting next week. So I'm right there with you. And right now we're trading at around 57.30 on the S&P 500. That's been a key area of resistance, or an intermediate area of resistance. So let's see if we can be able to hold that, try to push higher. If not, 5,700 could be in the cards again today, unfortunately.
Yeah, I think we'll leave it there. Great insight and great breakdown, as always. Kevin Green, Senior Markets Correspondent for the network. Now coming up next, it's time to talk under 30. So we are talking a name I believe is the first time on this show, that is Laser Photonics. It's ticker symbol LASE. It's up 79, almost 80% on the session. So George Schultz will help us make sense of this move to the upside coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back. It's time for 130. Looking at laser photonics. Joining us as always, George Tillis, senior markets correspondent for the Schwab Network. George, this is the kind of stock that's like right up your alley. It's making big moves behind the scenes, but kind of interesting technology. Overlooked until it isn't. Like I could have seen George Tillis having this one on its radar, on his radar in April, and then July, August, September happens. So talk to us about what this company is first, and then why it's making this pretty crazy move over the last couple months.
Yeah, I mean it's actually been a remarkable mover. I mean it was trading around $1.75 just a few months ago. It traded all the way to $20. And even if you look at yesterday's pre-market, it's pretty remarkable. It traded back below $2. So first off, obviously there's a lot of volatility in this name, so you have to keep that in mind. Second, laser photonics, what do they do? It's actually a very unique technology. It's essentially laser cleaning and technology systems. They essentially provide lasers that traditional sandblasting would do for things like paint removal, rust removal, engraving, and etching. But also they've got a contract, and this is, I think, one of the primary catalysts going back a few months with the Navy for essentially rust removal and, of course, uptake of their metal ships and such. So that was primarily, I think, a catalyst. The other thing is you have to look at the market capitalization of the stock. I mean, today it's obviously nearly doubled from yesterday. It's around 114 million. Short interest in the stock is around 6%. And then even going back not too long ago, there was a firm called Capybara Research, if I'm pronouncing it correctly, that actually put out a short report on Lays, and that created a devastating move to the downside, pretty aggressive. But nonetheless, it looks like there's now some retribution to be had by the company, Lays, which is now accusing the short seller report of essentially misleading information provided to the company. So in essence, what's happening here is we have a business that has a unique technology that has been growing its sales. It's still not profitable because you have to keep that in mind. Last year, they generated only $3.5 million in sales, but they lost $12 million. So that is underlying, putting pressure on the shares. But they did generate a Navy contract. They've generated some contracts with semiconductor manufacturers and industrial automation manufacturers. That's promising. But I suggest today what's happening is that we're seeing more of a short squeeze, and it's been a pretty remarkable move, to say the least, especially for those that are day trading.
So George, I mean, I always tend to look at, I know you do as well, it's like the fundamental story of this company, like where we could find, reasonable moves. And today I kind of look at it as not a wash, but there's risk when a stock is up 80% in one single session. So I mean, is this short report enough to warrant then the credence of shares falling while we also are rallying today, or is there actual room for growth for this company? Because I will say I did check on what it does. There's lots of good YouTube videos on laser photonics. I'd recommend someone check them out. But I mean, this company, as far as its growth story, is there still one outside of this short report, basically?
Well, that's the thing. I don't know too much about the competition of this business. I do think that the technology is very unique, and like I said, if the
User issues evacuation notice.
That's a start. And then, of course, the private sector on top of that, like I mentioned, industrial automation companies and semiconductor companies are starting to use this technology. So I think that's meaningful, but you also have to consider the context of the financials of the underlying business. When you're essentially losing about three or four times your sales, that has to be financed. So I can see why the shorts are on top of this stock, pushing it down, because they see that the company needs to issue shares to finance those losses. But at the same time, we're seeing a pushback by, traders. In fact, today they're pushing back, trying to squeeze the shorts out of their positions, and sort of saying essentially a tug of war, in essence, happening here with this particular name. It may not be over yet. If I look at 5-minute charts, once the stock broke above the high of the range of the first 5-minute candle, it's been trending higher since then. So I'm not suggesting that as a strategy every day, but it's still trending, and it could certainly close higher today just because of the history the stock has of making these sort of monumental, sort of magnanimous moves based on short squeezes.
Yeah, and in these kind of cases, lower priced stocks you hear the short interest. These are mostly institutional investors, portfolio managers that would be carrying these hedge funds, if you will. It is optionable. Liquidity, at least for now, seems to be okay just because it's been a stock that's been on the move. But always something to consider as well. George, appreciate the breakdown. Laser cleaning with perhaps some Department of Defense contracts and technologies in the future. George Chillis, always a pleasure. Great insights. Jenny, the market has largely made a U-turn back to where it is. It seems like this is a deja vu. Every single day we talk about a little bit of a move, and then it's like, oh, we're back to where we started.
I was just thinking, it's funny how we're closing things out just where we started, although today at least recovering some of the losses. So now we're pretty much closing the session on a pretty decent rally, especially in the NASDAQ. We'll leave it there for Next Gen Investing for this Tuesday. Coming up next, we have the watch list with Nicole Petalides.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a very big emotional reaction.
Over 10 years now, and it's almost second nature to me.
Do you think that this is...
I mean, my emotional reactions sometimes are scary. Like I'm watching the put right now here. We're at the yin yang. resistance of the SPY. Are we going to go up or are we going to die? Magnificent, I'll let you answer that question. Are you listening? Are we going to die or are we going to fly? We are now at the pivot point area. We're going to fly, Magnificent says. I'm debating if I should go in the puts. Right now they're at 1010. This is practically where I got them last time. I could get a straddle. There's my 108. The calls would be the 573. And the puts would be 570 at 108. The straddle's at 572. Don't be silly with your puts. Randy? Amazon Prime Day Live.
Taking some profits, selling off. You did a great job showing the big sell-off that we are in fact seeing. That being said, we'll turn our attention over to PepsiCo. Very interesting report and some weakness in that report.
It's early in the earnings season, but PepsiCo came out with the earnings this morning, and they beat very slightly. $2.31 a share.
Oh, yeah,
versus
Pepsi.
$2.30 estimates. Slight miss on revenue, $23.32 billion versus $23.9 expected. They have three big areas that account for about 80% of their revenue. It's Frito-Lay. That's about 39%. That was down 1% on the year. Then it's Pepsi North America, about 20%. That was flat for the quarter. And Latin America, about 18%, which was down 5%. Quaker Oats, you know, they've been dealing with callbacks and a lot of things. They were down 13%, but Nicole, Quaker Oats only about 3% of their bottom line. So even though some of these numbers were fairly disappointing and in line with expectations, the stock is rallying because they sold it off into this earnings event. So the stock on the day is actually up up.
Got the 200.
I've got Pepsi up about 1.5%, trading just below $170. So a little bit of a relief rally here in PepsiCo. Things aren't as bad as expected.
Yeah, it's surprising, right? Sometimes when you don't meet the street's expectations, you would see a sell on the news. But in this case, we are seeing up about 1.5%. And Bank of America still remains bullish on Pepsi today as well. Thank you so much. Kevin Hanks, good to see you. Appreciate it. Now let's continue to talk about the markets in the big picture. Eddie Gabor is with us, owner of Key Advisors Wealth Management. Thanks for being here. Some of the action we're seeing of late, what do you make of it, and do you see opportunity?
I do. I think there's going to be lots of opportunity, especially as we get closer to the election. I think you'll see volatility. You're starting to see it now with the VIX getting over 20 and kind of staying range bound. And I think these sell-offs can be bought. We certainly have been. Because I think post-election, once we get the uncertainty of that behind us, you're going to see a year-end rally that could potentially be pretty sizable, especially for those that are trying to play catch-up for the year. But I think it's going to be the same leaders. You know, our biggest individual stock holding right now is NVIDIA for clients. We are in emerging markets. We bought India yesterday because they've had a sell-off. I think part of that was the rotation to China, but their fundamental story looks really good as well, too. And then lastly, an area that's frustrated a lot of people that we have a position in our small caps. It's given plenty of head fakes. But I think post-election, the markets will kind of digest and say, look, we don't have a recession, and the Fed is cutting rates. That's very bullish for risk assets. And so I think the rotation will continue out of defensive names into your higher beta names, and it will ride this sugar high that the Fed is giving us. It will cause bigger problems down the road, but right now we will ride this sugar high as high as it'll go before we look to de-risk. So we're pretty bullish on risk assets regardless of the volatility here short term.
Yeah, NVIDIA closing in on a record high. I mean, right now we're at 132, up 3.5% today.
I'm gonna go get me some water and I'll be right back.
25%. So we've seen a lot of volatility with NVIDIA, to your point, but getting closer and closer to those 140 highs. Do you think we'll break the 140 highs soon?
I do. I think a lot of it will be post-election on this, but I don't see how a market goes through all-time highs without NVIDIA participating. And NVIDIA's kind of been range-bound and had a lot of volatility the last few months, and it looks like now it wants to break out. So I think it's going to go, in our opinion, it'll go well through 140. And that's why we've continued to keep that as one of our bigger positions. And selfishly, we hope it does blow through 140. But it'll be volatile, too, just like everything else. I think we just kind of need to close our eyes and wait and see what things look like December 31st, because I think these names we're talking about today will be much higher by the time we get to year end.
Yeah, and the INDA, when you look at that, month to date down about 3%, so came off the highs of 59.49. It's at 57 today. Is that a good way to play India?
Yeah.
It is. That's the way we've played it. India, we put that in place last June. It outperformed the S&P over that 12-month period of time. And once this China trade got hot, we noticed India started to cool off. So yesterday we added to our India position. And we do think that's a great way to diversify into a country that has fantastic growth, and inflation that is pre-COVID levels. So they don't have the same fundamental issues on inflation as we do here domestically. So versus just betting all on China from an emerging market perspective, we have a heavier weighting in India. It's less volatile in our opinion. And again, their fundamental story is extremely strong. So I would expect them to rally and beat the S&P from here on through the rest of the year as well too.
Wow, rally and beat S&P. Before I get to the small caps, I do just want to touch on Meta and the triple Qs because NVIDIA would go into that triple Qs too. Meta as well. Why Meta?
So look, Meta right now, again, they fall into AI story from a technical perspective. They look really, really strong. And look, we have a lot of ad revenue that they're going to be able to capitalize on this election season. And so I think, again, the fundamental story is really strong. I think they're going to continue to be one of the leaders. And I do think them, along with the QQQ and NVIDIA, fall in that same story where we're going to get that risk-on rally. Tech is going to be one of the leaders. And this is why we have rotated out of our defensive things like utilities and have continued to increase that and go overweight areas that we think the money flows will go into. And Meta checks off every box on those as well.
Right, and so you like the triple Qs along with that. We talked about NVIDIA and SMH. You have also IWM when you look at the small caps, the Russell 2000. Tell me about opportunity you see there and how that fits in because, we now have over 4% on the 10-year again. Where do the small caps fit in?
So I think we're going to get an inflation print on Thursday that shows a little bit cooling off because they're going to be looking at rear view mirror data. And so we've had a nice spike here in the 10-year. We're probably pretty close to the top, and I would expect the 10-year to come down. And I expect the Fed to cut by 25 basis points again post-election. So we'll be going in to November, December with a time period where we're having the Fed cutting rates, the 10-year coming off of its high, in our opinion, an acceleration of growth, and that's going to bode real well for small caps. Now, if the Fed changes course because inflation reaccelerates next year, that'll be a different story. But right now, I think in that lower rate environment, that's going to be an area that really small caps really thrive in. And so that's why we have not given up on that trade for this year. I think it has frustrated us at times, but I think by the end of the year, again, that will outperform the S&P from now till year end, in our opinion.
What do you think the Fed will do, and what do you think the Fed should do?
I think the Fed got too aggressive with rate cuts by cutting by 50 basis points. I think they'll cut by 25 again in November and 25 in December.
Agree.
The problem that we're going to run into is because of this aggressive cutting. You don't usually see these types of cuts unless there's real problems in the economy.
Storm's about to hit the land.
Inflationary. And look at what commodities have done since September and August. We're looking at oil prices, shipping costs because of what's going on in the Middle East have really gone up. So this is going to be really great short term for risk assets and cause them to continue to go up. But it's extremely inflationary, and I don't think they're going to come close to cutting as much as the market thinks next year, because I think by the time we get the first quarter next year, inflation has reaccelerated to the point where they're going to have to stop the rate cuts and potentially talk about pivoting. And the writing seems to be on the wall. The market won't like that, but the market right now is very short-sighted. And again, we're going to ride that until the data shows otherwise. But everything they're doing is causing prices to go up, and that's why inflation is going to reaccelerate.
All right, Eddie, good to see you. Thank you so much for being on with us today. Appreciate that you're here, Eddie. Thank you.
Thank you
Eddie
so much.
Gabor, the Advisors Wealth Management. Coming up, Options Corner. Tom White is standing by, and he will highlight unusual options activity from the day. How investors are looking to trade on recent news of Microsoft, Ford, and roadblocks, right? Easy for me to say. We'll be right back.
Do, do, do. Okay, it's going to find out here, Magnificent. In a couple minutes, we're going to know.
With the Schwab Network. Available anytime, anywhere, on any device, for free.
Pay attention.
Schwab Network.
We're going to know real soon. 570s at a buck.
The trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. I'd like to welcome in Tom White, host of Fast Market here on Schwab Network. First up, Microsoft. We saw an unusual downgrade, but I did see that Capital IQ has an average for price targets of 440 to 600, so higher than where we are now. And you found a bullish trade, Tom. I want to hear more about that.
Yeah, having little impact on the stock today, Nicole, in that downgrade out of Oppenheimer. And, you know, they basically kind of took away their price target on this stock. They're talking about AI and the investments that they've made in it and how much it's going to cost them. We saw that big ramp up in all the big tech companies as they try to, you know, get ahead of the game here in AI. But OpCo thinks that it's going to take a while. They've still got some losses from those investments in AI. Now, remember ChatGPT, they've got $13 billion invested in that, in OpenAI. They added another $750 million in investments in that latest round, where the value of OpenAI is getting up to $150 billion at this point. So we've got the investments in there, but not having a negative impact on the stock because the stock's already pulled back about $55 from those all-time highs that we saw in the summer of about $468 per share. Now, they report earnings on the 22nd, so you have to keep that in mind. That might be the catalyst moving forward, but it's moved below a couple key technical levels, 50 and 200-day moving averages over the last few sessions, and then immediately after this, Wells Fargo
Always
puts out
clean?
a positive note on them, $515 price target. Truist
No, there's no
said that the
Elizabeth.
cybersecurity unit's
I just
gonna
got
help
this
them.
number
They
a
got
couple weeks
$600
ago.
price target. So it's
Could you-
back and forth on this one, but it's definitely
Yeah, would you- yeah, take me
underperformed
off your
the
call
overall
list there.
market and the tech sector over the last few months. As
All
we
right,
hit,
well, I
these
appreciate
lower
it, man.
levels.
Thank you.
But we did see some optimism out here out in the November 15th monthly cycle. So you capture that earnings event towards the end of this month. Trader bought 10,000 of the 405 strike calls. So these are in the money by about $8 at this point. Paid an average debit of about $21.50 for these in the money calls. So that takes that break even up to $426.50 over the next 38 days. That's only about 3% above the current share price. And open interest on this strike's about 25,000. So they keep on adding to this position of these deep in the money calls with the expectations that, hey, over the next month and a half, we're going to get some more gains ahead, probably post earnings, but maybe getting back to those all-time highs. But buying deeper in the money calls, it's got that
I'm
higher
squeezing.
delta, so it reacts more like the stock, but you're paying pretty hefty premium.
I'm not in it
on
yet.
These calls where they're building a big open interest.
If we break it, I will be.
Yeah, and look look, as we think about this, OpenAI was always an asset for Microsoft, and there was
That's the 573 calls.
being a risk, is it an asset or a risk?
And the 570 put.
But as I said, most of these price targets are well above where we are today. Thank you for that one. Then we turn even though it's GM's Investor Day, we're turning our attention over to Ford. What did you find there?
Yeah.
Well, I think it's an earnings play as far as unusual option activity, but you did mention GM having their Investor Day right now. They just came out with some commentary, stock pop.
GM having Investor Day?
Back of that, they're probably going to have a bottoming as far as investments in EV, or as we like to call them for these OEMs, losses as they build out their EV platforms, because Ford's had some trouble there. They pulled back some of their investments by about $12 billion in the EV space.
Ooh, after getting all that money from the government?
And their big trucks, which have the high margins. At this
See,
point.
I meant Biden wrote him a big fat check. And now they're cutting
truth over facts.
Now they're cutting back. Do you think GM is going to write the check back to the government?
We choose truth over facts.
That's right.
Activity kind of stuck out to me. Was in the November.
That is right.
Cycle, so it's going to expire right after the earnings event on the 28th of
Obama did the same thing. He bailed him out, gave him, I forgot how many hundreds of millions.
Well, he bought 20,000 of the 10.5 strike calls, and he bought.
Did they pay it back? No.
Puts. He paid an average debit of about 96 cents for this position, and what this entitles him to do is take advantage of a move away from the current share price, which is about $10.5, right? This is an at-the-money straddle that he's buying. You can see here from the risk profile, the break-evens where this trader starts making money is below 954 on the downside, or above 1146 over the next 24 days into November 1st weekly options expiration. So you've got that cushion. You need it to go down more than 10% or more than
We're getting ready to squeeze Magnificent
8.5% to the upside.
any second.
Making money, but probably trying to take advantage of low implied volatility, low option premium in a name like Ford, because it's only a $10.5 stock. But what this trader needs post earnings.
What does a trader need?
To move to the upside or downside on this name. So buying the calls and the puts here.
I was just looking at Ford.
Straddle position.
Yeah, look, there's a lot of high hopes for more EVs, more penetration, which is pretty abysmal compared to some other countries, but it's been costing these companies a lot. And to your point, GM saying, look, we probably believe that the EV losses peaked this year, so maybe they see better days ahead, and just like Ford, as you noted. Then we turn our attention over to Roblox. Couldn't believe the Hindenburg Research short report that I read this morning, or heard a lot about. And within that report, I mean, you got the usual concerns about metrics and numbers that may have been inflated or not on point, but it went much deeper, and very concerning to hear safety concerns about children and such. Very disturbing to hear that. Of course, Roblox, right? They gave their rebuttal. But the stock's sort of all over the place now with this. Tell me a little bit about your thoughts and the bearish trade you found.
Yeah, this is a second bearish report in basically the last week or so, because last week Bear Cave issued a warning about potential child abuse on their platform. Hindenburg did hit on the metrics here, where they're saying anywhere from 25 to 42% of the people on Roblox and the platform aren't real, right? This is a money-losing company. They've lost, they've had losses for every quarter since becoming public. For the last 12 months, they've totaled over $1 billion in losses. But they said they're not profitable. They're inflating the numbers. There also were, as you mentioned, some of those, scathing reports about child
Do you think
abuse
that is yours?
and some other things within this report. Roblox
Well, mine's the ding.
And refuted the story both on the metrics.
You're the smart one. You can do it
and being a
faster.
safe platform for younger users. So kind of push and pull on this one. But this is the second one in a week, and I think the unusual option activity, not surprising to the downside here in Roblox today. One that stuck out to me was really short-term positioning by traders out in the October 11th weekly cycle. They bought the 38 strike puts, over 9,000 of those traded earlier throughout the day. Average debit of about 30 cents on these, so not a lot of option premium in these because of the short duration.
SPX is up.
Break even of about 770 over the next 3 days. It's about 6% below the current share price in there. Put volume on this one, which is not a surprise.
We're going to find out.
13 times or 16 times normal daily average volume.
We can't hold the 200.
5 trading sessions with, for every call traded, 3.5 puts have traded in the day. So
if it slips below the 200, we'll see the VWAP.
Definitely not good for headlines.
I almost jumped in them at 96 cents.
And look, sometimes you have a much more dramatic
But I got-
reaction on a Hindenburg short report. For
Get
example,
carried away looking at Roblox.
or numbers that miss, or the low today was 37.5. It's already back to 40.
Right.
You know, down just 2.7%. It could be so much more. We've seen so many companies move so dramatically, double digits in percentage terms on any particular report or numbers or whatever. This could be maybe somewhat moderate compared to other moves that we've seen.
Yeah, when the company came out and refuted the story, you see that turnaround. Maybe some speculators looking to get into this name. Maybe the short report's not accurate, but we saw that in other companies where a company like Hindenburg will release a short report, and then maybe the Department of Justice starts to get involved here a little bit. But this is the second one in less than a week on maybe the abuses and some of the metrics here for Roblox.
All right, Tom White, good to see you. Thank you so much for Options Corner today and every day here on the watch list. We appreciate it. Thank you. Coming up next, we'll turn our focus straight over to OpenAI after receiving $6.6 billion in its latest funding round. How far ahead is OpenAI from the competitors, such as ChatGPT, for example? We'll dive into that, get some details after the break.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. I have a couple of market movers for you to keep an eye on. DocuSign, that's moving higher after announcing that it will be joining the S&P Mid-Cap 400. Big deal for DocuSign. Replace MDU Resources effective prior to the opening. Trading on Friday, the cloud company is up nearly 15% this year. Another mover to the upside is is affirmed after BTIG upgrading the stock to buy from neutral.
FIRM.
$8 price target. BTIG expects merchant engagement to
Oh,
accelerate
AFRM.
payment providers as traditional point-of-sale finance providers pull back. All right, let's get back to OpenAI as it continues to be a leader in the AI tech space and start to think really big picture. That's why we bring in Nathaniel Bradley, founder, CEO, Datavault Holdings. Thank you for being with
Case
us.
for buying a firm and selling Amex.
Because you're so familiar with
Changing credit landscape. This one here used to be one of the biggest shorted stocks
I do want to hit the news, which
at one time.
$6 billion in the latest funding round for OpenAI. Why now? What kind of headwinds do we see? What do you think about where OpenAI could be headed?
Well, thanks for having me. And I
The thing was really
believe
shorted
that it's
big.
the future. We have a number of competing interests in the AI space, but none as well funded or well heeled or probably well strategized than OpenAI. And when you look at Microsoft,
Now we're at
to
resistance.
have Microsoft on your side, this is an unbelievable amount of capital.
Unbelievable amount.
Like when Google bought YouTube to own the video market on the internet, this is Microsoft putting its flag down that it will.
We had 3 black crows here on the SPX and it bounced back up.
What all companies will be doing.
Yeah, and look, this is NVIDIA, Microsoft, and others that are all making this investment. It's very interesting. Sam Altman himself is moving up in the billionaires list. I think I saw him at 150 billion.
Damn.
The whole controversy
150 billion?
was open source versus closed source, right? When he was having these
What would you do with that kind of money?
years ago. And meanwhile, Elon Musk is now moving more in the direction that Sam Altman is. What's going on here? What do regular people need to know about OpenAI and AI in general?
Well, AI in general is revolutionary. It's going to change the way that we operate as businesses, and preparing for
150 billion.
and getting ahead of it as organizations becomes a fiduciary responsibility. It's not something we can ignore anymore. Furthermore, I think that with respect to the change
Get
in
me a
open AI from open source
present.
and nonprofit to a for-profit
Melton could cause 175 billion in damage.
creating a lot of challenges and also opportunities for entrepreneurs and others that can harness now this technology and literally mark it up into other applications, mobile applications and other applications that we see coming to the market.
I mean, I'm just going to get off topic for one brief moment. Do you remember all the voices that started to say artificial intelligence is moving too fast? We should start to put in some regular. They're gone. Nobody's saying anything against it anymore. It became a big deal, and then it wasn't. What happened?
Well, at the same time, Scarlett Johansson lost her voice to AI, and there's been a lot of encroachment on trademarks and rights of in particular. Companies that own content become at risk because their content is sourced and repurposed by these machines that are doing so at a rapid pace. And it's hard to keep up with your rights when your rights are constantly being encroached upon. And so it creates another challenge and almost AI to watch the AI in terms of telling companies when their proprietary content's being utilized. And that becomes a tool in itself. There's other areas of AI, I think, in terms of its governance, and you mentioned it, in terms of regulatory pressure, and you're going to see that reemerge as AI goes into the marketplace and is utilized, and content providers simply need to stand up for their rights or utilize their rights into the marketplace.
So, as I mentioned, Elon Musk, we think of Grok, Amazon, Oracle, IBM. I see some of these in your notes. We talk about ChatGPT, but that's in relation with OpenAI. Tell me about some of these competitors. What's the pecking order? What are some of the strengths of the others?
Altman has his rivals. He's just far ahead with the capitalization, and that makes it very difficult. Now, someone like Elon Musk and his work with X and Gronk and all the things that he's doing there are very exciting in terms of providing us with more choices and more opportunities to use almost an AI Senate in the future, where you would ask each one of the AI what their response is and know what their math is, how they are calculating their decisions. So a lot of this is black box right now, and you can see the need for one supercomputer infrastructure So it's very elitist. Only the top companies have access to these super brains and the ability to not just use the open source, but solve their problems using AI systems and supercompute. So you have a supercompute power. And this is where NVIDIA and other companies play, where the memory, other aspects of these supercompute environments become very exciting investment opportunities. And for entrepreneurs, something to hone in on and look at the very beginning to provide new solutions and new systems that will in the end, competition is good for the marketplace.
Because we think about these large language models, right? And then they try and get more and more data to feed the language so that they become more proficient in every way. So you're saying Sam Altman is number one because he's so well funded, so well capitalized, right? And then Elon Musk ex Gronk that's number two.
In my mind, in terms of a rival there, and look, the other players in the space all have to face the supercompute deficit. They all need a huge capital infusion to get up to speed. And then to commercialize is a whole other aspect of educating.
I miss them crows.
And these companies that want to utilize but don't know how.
That's 2 in a row now.
There's a marketplace.
I don't know if I like that.
Around this, and in terms of the pecking order, you'll see that jockey back and forth with the bigs. IBM X, Watson X. These are all attempts for the commercialization of AI, and they're all beneficial to the marketplace. I think as a small business or an entrepreneur, you're looking at this as the beginning of streaming or the beginning of the internet. It's the very beginning of AI.
And IBM Watson has been around so long.
Yes.
I mean, that seems like the curve, they were in the head
Just
of the
broke
curve,
out with some soldiers.
right? They were a leader, but then they weren't.
They have a vision really in healthcare, strong presence in healthcare, a lot of work under their belt in healthcare. Different road, less consumer facing, but also very powerful in the overall sense of AI, and their leadership there is unmistakable. We know them almost as the first, but the idea that they get passed by the innovation and the ability of forward-facing companies to utilize AI through OpenAI and others.
So over at Data Vault Holdings, you have hundreds of companies that you're following. You have Web3 technology with these layers where you can help these companies to monetize their proprietary data, right? And see the trends. And so what are some of the takeaways or things that have surprised you most? That may surprise us.
That really data has there's a lot of fear around PII, personally identifiable information. A lot of the usable information that we have in the world doesn't belong to a person. And the lack of PII in data sets can add to their ubiquity and to their monetization strategy. There's a lot of fear in even touching the server that's got that data in it. And what's changing now is our ability to de-identify, to protect consumers, protect identity, but also get utility from data. And that companies that didn't before share their marbles with respect to their data sets are finding the non-controversial, non-competitive data sets that they can monetize on behalf of their stakeholders.
Without sacrificing the personal information.
Correct. By protecting consumers and protecting the rights and the law, under the law, having legal monetization of data.
Look, I've seen many surveys where people are very still afraid of their personal information getting out. It just seems so real. And as you mentioned, Scarlett Johansson's voice, that was a good story to tell in this case. It's good to chat.
Nice.
And very, very evident that Sam Altman's in a good place and well capitalized.
He is. Thank you very much.
Thank you. Nathaniel Bradley, founder CEO at Data Vault Holdings. Thank you for joining us on the show. Still ahead, Technical Tuesday. Kevin Horner is standing by, and we will look at key trends that he is watching on the S&P
5750s are up nice, 70 cents to 450.
Also, Otis Worldwide, McDonald's, which had a call today. We'll get right back to you here on the watch list.
Good job, Magnificent. You get a great A. Well, they dropped down real big on that spike. The SPXs did. Better go get another glass of water. Do. Thank you very much.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick. Welcome to Schwab Network.
Daily live exclusive content tailored to
5750s.
Broadcasting 24/7 from our studios in Chicago.
and from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
We got 20 minutes to power hour.
Every investor and trader.
Every market day.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical.
What happened?
Time now for Technical Tuesday and looking at some stocks and trends that watch. Kevin Horner is with us, Senior Manager Trading Services Education at Charles Schwab. So we'll start off with the S&P 500. We always talk about that. Not too far off. I mean, my last check was about 30 points away, but 57.67 is the high on the S&P 500. Tell me a little bit. We're getting closer now. Tell me a little bit about what levels you're watching.
Well, obviously we want to target that round figure 5,800 up above.
I'll be right back.
Go
get some more water.
70 or so. In there, we've tested it a little bit. I think the biggest takeaway is for 3 weeks we've sustained the rally in the 10-year yield on the heels of the FOMC rate decision. So we've managed to hold the breakout level at 56.70 in the face of what has typically been a little bit of a difficult period for us if we're going to get rising yields. So it's been nice from a technical level standpoint, having broken what was a prior high, then became resistance, and is now hopefully solid support at 56.70 as we just kind of consolidate above it. One reminder is we've got that 20-day moving average in orange on this chart, getting nice slope to it. It's caught up already with that breakout level. Start trending upward from here. Working against the 20-day would be a fantastic way to do it. I'm not suggesting that's necessarily in the cards, but from a trend standpoint, we'd love to see the SPX get in here using something like the speedy 20-day as we continue to move higher here. But near term, watching that 56.70 because of the importance of it, Nicole. A couple areas beneath it on this chart that we'll watch, but that all seems like in the face of what's happening right now, doesn't it?
Yeah, well, yeah, exactly. I mean, and plus there's so much volatility that people have to deal with along the way. You are talking about Otis World One. That is on your list today. It's just off a new high of 105 and change. Tell me some of your thoughts here. Where do you think this should be headed, or what kind of channel are you talking?
Well, we're paying attention to the fact that we broke out from this really lengthy range. We've been in this range basically all year, $90 to $100. And then last week of September, we got a little excitable. We saw this thing gap twice in mid to late September and then get through 100 with a pretty good conviction move. Now today, on the heels of this downgrade we've got from Wolf Research to peer perform from outperform previously, we've had a dropout of what was an apparent ascending triangle, maybe bull flag. But I think traders, if you're looking for opportunities to participate, if you believe that this gap out of the range is valid, well, then they're going to look at this zone of support around $100 as an area where they might look to deploy new money for a trade. Now, we've got the 20-day moving average right beneath us. It's at 99.25. A little further down, we also have a nice range of support. In fact, if we were to apply something like the volume profile study, we'll see that there's a volume point of control on this chart at 97. So traders are not necessarily, Nicole, likely to step in immediately on a test of support like this. They may wish to give it a couple of days. Let's see if we can maintain that $100 level. But I kind of liken it off into when you get in the midst of a reversal like this, Nicole, traders want to let the selling stop to ensure that they've found support. It's kind of like driving along the road and wanting to hit reverse. You don't go into reverse directly from drive. You put your car to a total stop and then you get to reverse. That's kind of the same process here. Let's let the selling cease, come to an end, which could happen anywhere between 97 and 100 perhaps. That might give traders an opportunity to participate.
At the same time, I just want to highlight Wolf Research downgraded Otis Worldwide to pure perform from outperform. And that was news today. We have Wells Fargo. They have a 108.
OTIS.
Barclays has an equal weight
Mm.
price target of 96. Those were some
Downgraded.
calls. Also wanted to talk about McDonald's, which actually had some positive analyst commentary today, turning that arrow around, right? Because Otis was down today, and McDonald's is a little higher at 302 and change. What are you watching on the charts for McDonald's?
If we're talking about it from a strictly technical point, you've got that excellent ascension off the lows down here, Nicole. It has rallied 22% off of those lows and 13% just since the end of July. So really August, September, and thus far in October, a nice strong push as well. The level that we've achieved, that $300 level, is fairly significant. That was previously
All-time high 3 weeks ago.
All-time highs. The question becomes, is the action of the last 10 trading sessions sufficient to validate that this is an actual breakout? And this is a spot where it really resembles a bit of a bull flag, having fallen only about $5 to $7 here over the last 2 to 3 days off of that high. It does appear the path of least resistance is higher, but it is imperative that it maintains that 300 level. And what's great about it, if it does, Nicole, is again, in the range, it can give traders the belief that this could move the height of the range. That's about a 50 to 55 point approximation. So could it be maybe a 340 to 350 target if it can hold this 300 breakout level? So certainly been a really great move in the last few months. We want to see, can we push through higher to validate the support that we have now created at $300 a share?
Yeah, pretty amazing here. And Argus actually pushed a nice call out. They call the buy from a hold, and they have a price target of 345 to 301. Any final thoughts on the big picture? Because we're waiting on CPI and PPI this week too for the S&P and what the Fed may do. I mean, you have rates above 4%. Final quick thought, Kevin?
Just paying attention to what happened with oil in this window of time, because oil could easily lead to some inflationary pressures that we did not necessarily expect. The pop has been pretty dramatic. Now today we're getting that to pull back, and that's giving us a little bit of a better comfort with oil. But nonetheless, that move we've seen over the last 3 to 4 weeks could absolutely have an impact on those PPI, CPI numbers that would be a little bit shocking versus what we've seen of late. I would just notice that as well.
Yeah, look, Bostic was talking about Florida now. I'm looking a little forward because this would be right now. into the next group of numbers, but concerns about the economic business there post Florida and what we're seeing with Helene and Milton. And then Gas Buddy said 16% of those gas places ran out of gas. And you have, they said, hundreds of thousands, maybe millions trying to get out. Yeah. All right, Kevin Horner, good to see you. Senior manager.
Thank you, Nicole. Good to see you as well.
Charles Schwab, thank you. Still ahead, we bring in our panel to discuss Supermicro's big moves that we've been seeing. Monday, it announced shipment data that was good news. So, what's behind the increased demand that we're seeing? Is Supermicro out of the woods? We'll be right back.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. It's time to focus on Supermicro. Today, down about 7% after a big jump yesterday of 16%. The stock was higher yesterday on some good news on shipments of 100,000 GPUs with a cooling solution. That could equal billions of dollars in orders. But don't forget, this stock is well off its highs. It started with a short report back at the end of August, a Hindenburg short report, and so on and so forth. Matthew Bryson is with us, Senior Vice President, Equity Research at Wedbush Securities, and Nick Patience, VP and AI Practice at the Futurum Group. So glad you're both with us.
SMCI in the spotlight.
News yesterday, it certainly seems like great news, but it led me to the bigger picture of is Supermicro out of the woods? Because you remember August 27th when we got that short report, there were concerns about accounting. Some of it was delayed or pushed off. Where do we
Big hard sell off now.
That jumped 16% yesterday, Matthew?
Yeah, Matthew.
I think, at least with terms of accounting, where we've been for a little bit now, right? You don't know exactly what's wrong. We have seen this before with the company where the last time it happened, they struggled to get their financials filed and eventually ended up being delisted. You also have DOJ investigation. And so I think that, well, the news yesterday should be viewed as great for the third quarter. You have that uncertainty, which is still going to hang over the company.
What kind of rating do you have on it, quickly?
No, I'm neutral.
Yeah, neutral, so sort of in this wait and see. I mean, Nick, what do you make of it over at the Futurum Group? I mean, it seems obvious that they have great demand because this is billions of dollars in orders from what I understand when you read through the numbers and Barron said it. And, what do you think?
Well, I think they are, they're very much, the announcement they made demonstrates just this seemingly insatiable demand there is for AI infrastructure. So as generative AI has taken off in the last almost 2 years, it's completely transformed the demand for systems and servers and networking and obviously chips and obviously Supermicro in the servers business and the networking business is right in the middle of that. And so it's been a I think this ride has got some way to go yet. There may be blips on the road here and there, but I think the direction of travel is pretty clear for the foreseeable future. I mean, I would say maybe for the next couple of years.
And Matthew, what kind of landscape do they have in the competitive landscape, especially since they have DOJ investigation? They're certainly under the microscope here. Who else is doing the same thing, if at all?
Yeah, no, you certainly have competitors out there. So you've seen Dell, who's announced a couple big customers where actually they're supplying alongside Supermicro. You have HPE and Lenovo. I think Supermicro's advantage is that when generative AI showed up and ChatGPT 4.0 showed up a couple years ago, they'd already been standing up large servers for Facebook, and so they understood how to put these large clusters of GPUs together, and so they were early to market. They've taken advantage of that. They've changed the narrative around Supermicro from a scrappy competitor into the leader in AI. But as you kind of pointed to, Nicole, the problem is that when you have this investigation, if I'm a customer, I at least think about it. And then beyond that, I think there's a longer term question around if everyone can make these servers, is the gross margin sustainable? Do we see some commoditization? And that's one of the other overhangs that I think has been weighing on Supermicro the last few quarters.
Yeah, and a final quick thought, Nick, on the AI infrastructure demand overall. How would you even quantify
This is the second wave?
this year, next year, 10 years? Quickly.
In terms of numbers, I don't have numbers to the top of my head, but I think it's I think there's so much demand. You see it like in announcements like Microsoft and BlackRock doing that $30 billion fund. There is a lot of runway left in this thing overall.
Had a $2 bounce on the
there's not many. So we mentioned
AMD when I called it out.
Dell, there's not actually many companies that can do what they do. Plus, their NVIDIA partnership goes back a long way, and obviously that is crucial to their ongoing success.
Yeah. All right. Look, the demand is there. Good to see you.
Demand
both.
is there,
Matthew,
baby.
Nick, thank you, Matthew Bryson, Nick Patience.
I'd call that second wave on the
That's going to
SPX.
do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me every single day here on Schwab Network. That you can get the app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Thanks for watching. Market on Close with Oliver Rennick next.
We have 4 minutes to Power Hour.
This election season, stay out of the muck and the mudsling.
I've been a little quiet today, not my usual. Been having a lot going on back here behind the scenes. Yeah. You don't want to get your shipping address wrong, that's for sure. Especially when you're talking about big stuff. We'll know in about 2 or 3 days. And there goes your SPX bounce. And the calls are at 390 now. Not much of a move. They're depreciating fast to 57.50s. That's like $70 drop right there on that candle. And Bob is here. Hello, Johnny. Brandy. Hello, Oliver. Tomorrow, Pow Pow speaks. At 2 o'clock. SMCI hit the 50 SMA and pulled back on the daily. It's a big drop there. It's $100 drop. We're back to the 9, so we'll probably hit the 21 if it doesn't hold. And Bob has pulled back more. Woo! 21. And now it's power hour, 2 minutes post. $57, $42, $45.
Checkmate.
Yay. And the straddle, what did you do on the straddle? 572. $57, $42, $84 now. $63 EMA.
that the reshoring of activity, a lot of these Taiwanese businesses are building their plants in America. And it's also a fresh reminder from the Han Hai story that these machines are so big, these aren't chips that you're plugging in. So they've got to build out these massive data centers for the Blackwell chips. So it seems like there's still a lot of work in progress and still much to be mined there. The other thing on a macro side, just real quick, the Fed speak, Kev, the relationship to bonds, a little bit of firming of bonds throughout the day, but I don't really think the Fed speak has moved the needle too much.
It hasn't appeared to. I mean, there's no one, let's put it this way. If you scan the news lines, there's no real big headlines popping up from any Fed speak. And no news means they're not making any headlines. Frankly, is the way I look at it. Unless one of those headlines sneaks in, I just don't see them hitting any of the news wires, which means they're not making any headlines, which means they're staying within the navigational beacons in terms of what they're saying. They're not making any new headlines.
Yeah, fair enough. Don't see that either. Okay. All right. Thanks, guys. Yep. Good analysis of the session here as NVIDIA comes back to the forefront and carries the NASDAQ to a big rally. Joining us, Jared Dillon is investment strategist at Malden Economics, publisher of the Daily Dirt Nat. Welcome back to the show, Jared.
Hey, thanks for having me.
And you've got a pretty big bear case for us today, but let's start with kind of the basics. When you look in the last week, a good jobs report, the market generally strong alongside higher yields. Is that encouraging overall for the message about where we might be going in the near term?
Yeah, I mean, really, the Fed is making a big mistake here. There's nothing wrong with the economy. Here's what's happening. We have a slightly weak
groceries
labor market. And the reason we have a slightly weak labor market is because 4 years ago, we dumped $3 trillion of stimulus into the economy and created distortions known as labor shortages. And over the course of 4 years, we've worked off those distortions, and we are in a process of normalization where we are returning to something like a normal labor market. The Fed is confusing this with economic weakness. We do not have economic weakness. So as you know, the Fed cut 50 basis points. We had a blowout payroll number. The economic data has been uniformly strong. We've had a big repricing in the yield curve where we were pricing in 10 hikes over a year. Now we're pricing in 6 hikes. We might have even less than that.
6 hikes. Finally, someone admits it.
And to your point there, we are kind of pushing up that terminal rate when the data come in pretty well. And I think the notion that this has to be this very
Jimmy no dummy
series of cuts, traditional cycle, one after another. That doesn't seem to have to be the case, right? We should be doing this stepwise. We should be pausing. I mean, I know you're making the case that maybe we don't even need to cut, but if we do, at least then take it slow.
Yeah, we should take it slow. And, Powell has said that he's data dependent. Look, going into the November meeting, right now, there's an 83% chance that the Fed will cut 25 basis points. And there's actually a 17% chance that they won't cut at all. We have some data for the rest of the week, but yeah, I mean, going into the election, and one thing I'm looking at after the election, I'm looking at the election as maybe a positive catalyst. A lot of times the mood going into a major event is depressed, and once you remove that uncertainty, no matter what the result is, sentiment improves, and people may be delaying consumption until after the election. We could have a burst of consumption after the election and a lot of strong data.
Okay, that's a nice optimistic take here. Let's go to the other end. You've got a whole website you've built around the notion of a private equity blow up. So let's start from the top down. Why is that the sector? Why is that the asset class, Jared? And how much has to do with the liquidity of it, which many do like, that they get to stick with their investments, they don't have to get constantly repriced?
Private equity is a bubble. It's a massive bubble. It made sense 10 years ago when interest rates are 0 and you could buy companies.
If we get down here to 57.43, I'm going to buy
interest rates are 5% and you're buying
maybe the 57.50 call.
There are 17,300 private equity firms in the United States. They are all competing for worse and worse deals. They are rolling up stuff that would have been unimaginable. The whole theory around private equity 10, 15 years ago was that private equity would buy stable, boring businesses with stable cash flows. And now they're buying all this incredibly pro-cyclical stuff that has a lot more risk and a lot more volatility. And it's in this private equity wrapper that, like you said, appears to have no volatility from the standpoint of the limited partners.
Is there, though, some connection with our ability to tamp down the business cycle that allows them to have that slower rate of pricing? If we are going to have a Fed that's going to step in, if we're not going to have big booms and busts of the past, does that limit those kind of tail risk events that then would
Nope,
go
didn't
up
break,
from,
didn't
you know,
do it.
a mark-to-market
Broke out.
value?
Well, I don't think we've eliminated the business cycle. I
Okay.
think we've lengthened it. I think we've lengthened the business cycle. We haven't, if you take out the recession of the pandemic in 2020, we really haven't had a recession in 16 years, which
Right.
is remarkable.
Right.
But, private equity in its current form has not been tested in a recession. And private valuations should mirror public valuations. So if we have a severe bear market in stocks and a recession and the market is down 30%, private valuation should go down accordingly. It's not magic beans. Like private companies, the valuation should mirror public companies. So what happens is, if you're an endowment, if you're a pension fund, and you have an investment in private equity, and it starts to decline in value, and you've been sold on this idea that this investment produces 10 to 12 returns in perpetuity with no volatility, that's going to scare a lot of people off, and you're going to get a lot of redemptions.
So does it happen even in the absence of like a major tail risk event, Jared? Because if there's no tail risk event, can they hold on, or is the point that these are just businesses that don't make sense? And do you have specific examples of where this might start? Like, what's the first domino?
I don't know what the catalyst is going to be, but one thing I'll point out is that private equity returns are declining.
Okay.
And have been for a couple of years. The returns are going down. And that's due to most of the things that I talked about earlier, the competition for deals, evaluation, stuff like that. If you buy something at a high valuation, it's very hard to sell it at a higher valuation. And there are no exits. There's no M&A. There's no IPOs. And, LPs are not getting cash like they used to. So it might not have to be a recession.
230 from 170. But I didn't take them.
That the asset class, private equity, falls out of favor over a period of years because of the.
I was wanting that to drop a little farther.
How do we play it? Because it's private equity. How
Damn.
do we play it as everyday folks? Is there a way to short it? Is there a way to capitalize on it? Do you short any of the publicly traded financials that are connected to private equity, or stakes in it, or how do you go about it, Jared?
Yeah, that's kind of how you'd have to do it. There's 4 big publicly traded private equity firms. There's Blackstone, there's TPG, there's KKR, there's Apollo, and Blackstone is pretty big and liquid. That short hasn't worked out so far. What's happened is that in the last 6 months, as rates have come down, lower rates are good for private equity. So most of the private equity stocks have done really well in the last 6 months.
Great.
What's interesting is that rates have ticked up in the last week or two, and private equity is down. So I think there's a strong negative correlation to rates, and we'll see what happens if interest rates continue to rise.
Okay, and you think
Boom.
this has major economic
There's your second wind.
implications throughout
Your
the-
third wind.
Like, does this hit labor eventually? Does this like have major ripple effects?
Big
Or is this gonna be
750s
like a
are at
regional
$3,
banking thing
$320
where
now
if you
from
go
170.
bad, blow up because they were in the bad investments?
No, I think it has big ramifications. I think it's systemic, and it means a lot of things. $8 trillion worth of private companies are owned
No,
by
look
private
at puts.
equity. $8 trillion. So you're talking about a huge
Nah.
percentage of private firms nationwide. PE managers will remorselessly cut staff in a recession. You will see layoffs that come a lot faster from PE firms in a recession. And the other thing is that it's going to take a while for private firms to reprice the valuation of these private firms. And as they're liquidated by private equity over time, it's going to be a big overhang on the economy. So, an ordinary recession usually takes 18 to 21 months. this could lengthen the duration of a recession significantly, where you could have a recession that lasts 3 or 4 years.
Okay. Well, shortprivateequity.com is the website you've made. Kind of looks like the Drudge Report, so you know it's going to be intense. And of course, also author the Daily Dirt Nap. And your short stories, Night Moves, also came out recently. Jared, thanks a lot for the thought. And hey, there it is. Nice. Anything on private equity in there?
No, there's not.
Those are all the fictional ones. All right, Jared, thanks a lot. We'll be in touch.
Thanks.
All right, appreciate the take. Sound on the alarm on the private equity potential. And if you do think it's going to blow up, then the stocks have had huge runs behind them for Blackstone, KKR, and others. Jared Dillon, investment strategist and Malden Economics, coming up. Let's talk this week's probably most fun event, Tesla's robo-taxi reveal. Elon sure is busy in the political realm. Is he going to be able to deliver, or are the bots going to do it for him?
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Oliver Rennick. Let's talk some tech and let's get ready for the robo-taxi unveil. Corey Johnson is here with us in the studio. He's a chief market strategist at Epistrophe Capital Research, former colleague of mine.
Yeah, good to see you, man.
Back in the day. Great to see you, Corey.
And here in Chicago.
Yeah, happy to have you. Big week this week for tech. I mean, robo-taxi unveil. This feels like, I'm kind of excited because it feels like a really high-stakes thing, even by like Elon and Tesla standards, because he's out super involved in the political realm. If he misses on this, people are going to be upset.
Well, I think he's got his hands, his fingers in many pies, right? He's very busy with lots of other stuff outside, Twitter or X, whatever you want to call it.
A lot of people have hated that too. Some of his longest standing supporters.
And that business, from what we understand, is really struggling both with users and certainly with advertisers. But this robo-taxi thing is...
This is the same old line from all you guys. I appreciated the fact that he took over Twitter. Period. And look where the stock is now, boy.
In terms of product rollouts. And so this notion that there is a different business out there that will somehow bring revenues that aren't seen yet for Tesla is increasingly important as EVs...
They're not seen yet?
Tesla share with an EV's
Are you kidding me?
It seems like the big one too, because it's the data, it's the information, it's in the trend of the AI stuff that's going on right now, and it seems like they should be a front runner, but then
They are.
Where you're living in SF, there's a lot more. There's Waymos everywhere.
I saw Waymos in LA last weekend too.
Yeah.
And that thing's really expanding. The partnership between Waymo and Uber is certainly going to be good news for Waymo. This autonomous driving thing is a really interesting business because the technology behind it, there are different approaches. But they might not be good businesses, right? The technology of can radar and everything else that they're using with the car and the artificial intelligence in the car and off the car do enough to monitor to make driving safe, right? Well, that's great. That's not a good business.
Mm-hmm.
If it costs $250,000 for each car, and the car's not going to be on the road for 10 years, so it can have enough fares, so it can charge enough money to break even, it might be a technological solution, but not actually an income statement solution.
That's a great point, and that's where the question of scalability, and also, I guess technically they wouldn't be first to market because of Waymo, but that doesn't mean you have to be, second just because you're not first, right? Long term, you can catch up.
And there are other companies out there that have different approaches to this, but fundamentally, the Teslas on the road right now cannot do the things that a Waymo car can do safely, they're weird. These autonomous cars. When you see them in San Francisco,
yeah, they're true
all the time.
Yep.
I was pulling into a parking structure in downtown San Francisco a few weeks ago, and there was a car in front of me and two Waymos in front of it. And the two Waymos are letting some passengers get out. The car in front of me is laying on the horn.
Right, like, hey man, there's nobody in there.
There's nobody in the car. You're laying on the horn. So it's a different experience, a different world out there.
Yeah.
But the Tesla vehicles, as presently constructed, cannot be self-driving robo-taxis. So they just don't have the technology to do all that.
The hardware.
Right. They also don't have the approval from the NTSB. And Tesla has a bad reputation with the NTSB for all the over-promising that they have done, the things that Elon specifically has said about the autonomous and driving capabilities that the Tesla car doesn't actually have. So as difficult as it's going to be to get any self-driving vehicle through the NTSB, I think Tesla's going to get some serious scrutiny, maybe more than anyone else out there.
The difference between what they need to get to compete with Waymo and their own robo-taxi fleet versus what the cars can do automatically right now in terms of the assisted driving.
Right.
Like on a 1 to 10, like where are they right now? Where do they need to be?
Well, they need to be a 10, right? They need to be safer than anything else on the road on a self-driving basis, right? And they're not there yet with those vehicles. There's also a whole different business model that goes along with doing this. This notion that everyone's got a Tesla in their driveway can then just walk away from their car and it'll go off and make money.
Not even close to the truth, right?
It's not going to happen, right?
Yeah.
So it'll be a whole different kind of car, and they're not there yet.
They can't do this through a software update in a Tesla that you have. Is that correct?
We'll see what they have to say for us.
Because that would be big, right? Like, because I don't know. Because
it would be magic, but maybe software is magic. I don't know. I mean, the problem is with Tesla, even if they say it's possible, it might not be true.
Yeah, and he's already once, right in the middle of a period where, generously once.
Yeah, no, they promised this in 2019. In 2019, Elon Musk said there will be 1 million self-driving robo-taxis on the road.
This guy's a critic.
Yeah, I was thinking even earlier this summer they had to keep pushing out. So, all right, to your point about how this...
And then COVID came, you dingbat.
What it boils down to, because it still is priced like something beyond a car company. But in the last year and a half, it kind of has traded like a car company because they've had to, obviously the stock's been under a lot of pressure.
Well, it's nowhere near the valuation of an actual car company.
Correct. It's way off.
And so you've got bulls out there like the Kathy Woods of the world who somehow imagine an insurance business of Tesla. And it's part of their model. They're like, hey, they're going to launch a business that they don't have, and it's going to be enormously profitable and really big. They're going to launch robo-taxis, which they don't have, and it's going to be enormously profitable and big. They're going to launch a Model 2, which is maybe the most important thing, and it's going to capture a lot of market share and be a great vehicle. There's a lot of speculation in this name. There always has been a lot of speculation in Tesla shares. But when I look at it, I can't possibly value, when I do my discounted cash flow statement, I can't possibly value businesses that don't exist.
Right.
Imagine how profitable they're going to be. But that is certainly the hope of the Tesla bulls.
What do you think, what are those inputs into the model that could get cleared up? Could it be like the areas in which they are able to operate, an actual model of a vehicle if they come out and say like, hey, this is what the new car is going to look like? Do you think that there's something, is there potential that, rabbit out of the hat here?
I'm not counting on revenues from a semi anytime soon, even though that's been promised for many years. I'm not counting on robots, although that's been promised for a few years.
They're like Android robot.
The most important thing for this company, I think, really is going to be the Model 2. It's going to be a truly low-cost vehicle that they can sell around the world. And because now there is something of an infrastructure, right? Now there are charging stations. Now they've got manufacturing capabilities that they didn't used to have. But a low-cost model that they've been talking about, has been discussed for a long time, is really important for this next leg of growth for this company.
What about the energy, just purely the energy sales potential? We have seen in the last couple quarters show up on the balance sheet in a positive way.
Yeah,
since they're going to own all the charging infrastructure, it seems like.
That has not been a good business for them. It's not been a very profitable business for them.
Potentially, or so far not, but
it hasn't worked out for them yet.
Yeah. Before I let you go, what else in the world of tech is exciting to you? What's number 2 after robos?
Everything that NVIDIA is doing is just thrilling, and the massive spending. You know, I spent some time with the Synopsys CFO. Company they do the software that's used to design chips and other systems.
Yes.
And it's just explosive growth in everything in AI, and it's really exciting because the AI is now being used to make AI products, and the companies like Synopsys that are facilitating the creation of new things in AI are also using AI.
Got them out of here. I sold them.
I've been covering technology for a long time. I've never seen, maybe the start of the internet is the only thing I've ever seen that was so exciting.
NVIDIA looks like it's trying to break out again.
Yeah, a lot of the stocks, I was looking at shares, companies I own, Coherent and AOI, the stocks are just exploding today. It's a good day.
You had a few in there. Under the radar AI trades? Seems like you had a few in there?
Yeah, I don't want to talk my own book.
No, please do.
Well, look, I think that there's a lot of things going on in the data center beyond the chips, right? Where you've got connectivity is getting really important. You've got storage, you've got private companies like Vast Data that are doing really incredible things. And Vast Data's got a $9 billion market cap in private markets right now, selling tons and tons of software. You've got companies like Fabrinet and Coherent and Applied Optical selling tons and tons of equipment with this fantastic leg of growth. Stuff that was invented for long-haul telecom is now being used to move data 3 feet in a room.
Amazing. There's so much going through it.
Speeds because there's so much material and so much information that's got to be moved quickly.
Yeah, very cool stuff. Good perspective. Thanks, Corey.
Glad to be here.
Great to catch up. Corey Johnson, Chief Market Strategist at Epistrophe Capital Research. Coming up, let's trade some options. Let's look at the flows of Mr. Kevin Green as S&P's still in that 57 handle, but the NASDAQ is really jamming right now.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips.
NVIDIA is looking good.
Investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
S&Ps are moving as the NASDAQ is carrying the market today. Big tech strength. Kevin Green taking a look at the options flows for us. KG, kind of a little back and forth the last 24 hours. Have we shifted to the higher end of the range, or what are those standards?
Yeah, I mean, at the moment, we are actually testing a key area of resistance at 5750 area. What we
Another $4
now, I can say that
call there on the SPX.
Higher than that strike right now. We're really trying to hit the 5760 or even 5765. So that's something to kind of keep your eye out on. And then also, if we do have a little bit of an unwinding, we could find some support at around 5745. But it does appear that the market really is trying to actually melt up here. It has been melting up.
$6.
I mean, you're looking at the technical reaction for today. Has been in an uptrend. Kind of started off strong, pulled back just slightly, and then continue to move higher here. And I would say the next area of resistance, if you're just looking at it on a longer time frame, is going to be that 5760 area, and that's where we've seen some selling pressure coming into the market. That advanced decline line, this is for the NYSE, actually wasn't a positive here today. You already talked about the strength when it comes to technology, but it's other sectors that are also taking part in this rally here today as well. If you're looking at any type of reversal in the next 25 minutes or so, 5725 is really what you want to be able to hold. That's your negative gamma area, and actually 5730 is your balance. That would be your net neutral for today. So for the most part, we're in a bullish trend, Oliver. Let's see if it's going to continue.
Like that you've got the advanced decline going there for us still to show where the concentration is playing a big role in lifting this market again. Advanced decline going down, but a little tick up today as we've got most sectors moving higher. But given the multiple rejections here, this does seem really important, because if we could get back through it on a day where NVIDIA is also breaking out, you got two really big pieces of the technical puzzle falling into place.
Yeah, I would say a signal for risk-on type of sentiment has been the options volume for today. The top traded contracts has traded well over 100,000 contracts. We haven't had that in a very long time. So I think that also kind of shows you that it's not only just equity traders having fun right now, it's also the retail traders, those speculators getting into those 0 DTE options are also trying to party, for a lack of a better term right now. If you kind of look at that histogram on the left-hand side there, Oliver, that's going to be your negative positioning, but it's kind of spread out. There's not a significant amount of concentration there, and actually 5,700 still at negative gamma level for today if you're just looking at the volume, but if you kind of spread it out and average it out, 5725 for the most part is going to be your level. So you're just seeing a lot of bullish reaction that's going into the market right now to the upside. Now, it's going to be a very big call wall to try to break through 5750, and if we're going to do it, I mean, you could have a scenario here where you could have around $50 billion worth of gamma exposure going into the close. Now, that's if we have a lot of traders and investors trying to get into those 0 DTEs, really try to force those dealers to cover any type of short positioning and really try to get long in order to try to cover themselves on the long side here. So the chance for a squeeze is very high right now. I think we're seeing that. We just want to be able to maintain and really try to close at these levels going in tomorrow as well as Thursday, as the economic data can really give us the push that we need to kind of break out of this range that we've been in over the last 10 trading sessions.
What do you make of the negative gamma level being in, I don't know, it seems like kind of it's in a weird spot based on the 10-day chart. A lot of times the gamma levels align pretty well with clear technical areas, and maybe there's a lot of volume going on there at that level, but it kind of seems like it's like in a strange spot on the chart. I don't know, am I making any sense?
Yeah, you are. So when we kind of look at...
Look at that. Extremely nice. right back.
The 800. What we have not seen is this roll up and roll 4 to 5 trading sessions. A lot of at the money call selling that's taking place, which I would look at as bearish for right now. And then the put placement sitting at around that 5680, 5600 level there. So I would say these levels on a longer term time frame, this is a 3-month daily chart, kind of aligns more with support and resistance levels that we would have just utilizing technical analysis as a whole, whereas the intraday trading is really focusing on just today, what could actually occur for today, where are the pressure points, where are the resistance levels.
All right. Seems like we're in pretty good condition here. Steady grind, still got the higher lows, just trying to make those higher highs and really pushing for it today with a percent rally now 57.55. Okay, thanks KG. Helpful, useful as always. Coming up, let's talk oil prices, energy stocks, and a really interesting disconnect between the two. Now, energy stocks are down today with crude oil lower, but we'll take a closer look at the charts with the NASDAQ team. Then we'll get a developing story.
Oh, you're rubbing it in, aren't you?
Protect their work from AI. Be right back.
You get the Spank Award. Magnificent has hit a higher level. Do, do, do. People are skedaddling out of Florida.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Market on Close. Crude oil is getting hammered today. Energy stocks are down too, but a closer look reveals that the charts look somewhat different. Brian Joyce joins us from the NASDAQ. He's Managing Director of Market Intelligence Desk. Got some good charts for us to watch today. It's pretty interesting, Brian. When you zoom out beyond the last couple of days, it kind of looks like the energy stocks have been holding up pretty well relative to crude, but now how do they look? What's that relationship like?
Yeah, so there's typically a very positive correlation between the two, and that hasn't changed. But you know, after a 2-year uptrend, you know, both peaked around June of 2022, and have since been in, you know, a consolidation mode. And the consolidation is what is different between the two. Whereas the commodity WTI crude oil has been making a series of low highs into horizontal support around that 65-68 zone where it continues to bounce. the energy stocks, say, take a look at the XLE ETF, has been doing the opposite. It's been consolidating sideways with higher lows going into horizontal resistance. It did have a minor breakout recently, but pulled right back into the pattern. So still kind of neutral there. So it's interesting to see how different that consolidation is between the two. I did also notice that there is a positive correlation between energy stocks and material stocks, and materials just in the last 2 or 3 weeks, really, I think China might have been the catalyst. They did see an upside breakout from a very similar trading pattern, roughly 2.5 to 3 year sideways range. And so if materials can continue to move higher, typically as a technician, you anticipate or you expect a breakout to the upside from a wide base such as 3 years. It would be the resumption of the prior uptrend. So if that can continue here for materials, my bias is that maybe the equities will do the same. I know there's a lot of negative sentiment out there in the energy space, and if you look at the Commitment of Traders report, many have been on the show talking about a record negative or short selling position, I should say, that was recently taking place. And so, maybe this sentiment is overly bearish, and maybe there's some other catalysts that could say, hey, maybe in the short term to intermediate term, we could see a rebound to the upside here.
Yeah, it's a really interesting perspective when you've got two almost opposite forms of consolidation, a kind of ascending triangle versus the descending one. I feel like it does create maybe an asymmetrical trade in favor of the energy stocks like you're talking about, because if crude oil then breaks out to the upside, that's obviously positive for the energy drillers in America. And if crude oil breaks down, perhaps it's not as good, but there's also been some talk that they're actually being fairly reasonable and limited in terms of their production, that they could turn on the spigots even more. So maybe the energy companies don't have to be like directly tied to a downdrift in oil if they can just keep pumping more, because it seems like there's no limit to it here in America right now.
Yeah, and there is that old saying that I've heard over the years being in the industry, equities often lead the commodities, or often can lead the metals when you're talking about precious metal space. So, maybe we'll see, something like that play out here. At the very least, it's the levels that I'm watching for each, the commodity versus the equities. The fact that materials are breaking out higher. We did have that, there's a China stimulus announcement 2 weeks ago. I was expecting energy to rebound off of that, and we didn't see that initially. We did see it within materials, but we didn't see it 2 weeks ago within energy. It was last week when we had the Middle East tensions, the flare up there, that we did see the equities kind of move higher. They're pulling back a little bit here, but either way, within the equities, we're seeing that narrowing or that coiling price action taking place. And if those support and resistance lines are true, if they are real, you would expect probably in the very near future a breakout to take place upside or to the downside.
You've got another chart that goes with it pretty well to your point about materials. If we just kind of zoom out and we put energy in the camp of generally cyclical groups, you've got a chart looking at the cyclicals versus staples. And this is a pretty fun one, discretionary versus staples. I mean, that's positive too. That's economically, positive. That's pro-cyclical in nature, obviously.
Yeah, we've been seeing, what I see is very healthy rotation within the marketplace. It initially started in Q4 of 23, happened again in Q3 of 24. So my pushback to all those voices talking about very narrow breadth, at times that's been the case, but if you really step back and take a look, we've been seeing improving breadth. Initially, it happened when the advanced decline line in the S&P 500 broke out to new highs in late summer of 2023. Then this mid-caps, the small caps took off in Q4 of 23. In the first half of 24, we had that hawkish repricing of rates. So then we saw, that pendulum go the other way within equities, where large cap growth, resumed the leadership mantle, and that has now recently rotated back into small and mid caps. So overall, we're seeing constructive bullish price action taking place. Can energy, can materials continue, or materials, can they continue to perform to the upside on this breakout, or will it be a head fake? Can energy follow suit? So that remains to be seen. I think what has been doing well, the large cap growth stocks. I think those high quality names, very liquid names, certainly names that I would expect that you'll see investors continue to buy on dips. Will they really outperform over the next 3 or 6 or 12 months, my bias is a rising tide lifts all boats. I think the Fed put is stronger now than we've seen in quite some time. Just last week, Bernanke, Chair Powell said that the economy is in good shape and the Fed prepares to use its tools to keep it there. So I think, you know, we've really got a lot
for us.
Yeah, so if the only thing I'm concerned about is maybe there's too much constructive sentiment, which is really a short-term, you know, concern. So if we see a little bit of consolidations or some more volatility, you know, between now and the election, you know, if anything, that would probably be welcome for many that want to, you know, look to buy a dip.
Sure thing. Like the charts, like the look at the potential for cyclicals to lead, and the energy to kick into gear. Thanks, Brian. Nice.
Thanks, Albert.
A dichotomy there between the energy price and the energy companies. Brian Joyce, Managing Director, Market Intelligence Desk at NASDAQ. Let's go into the AI stuff real quick for a developing story. Jim Horn, standing by, our markets correspondent. What's next, Jen? With Adobe trying to protect the work in an AI world, that's a nice little headline, Jenny. What are they doing?
I don't know. I feel like it's the first we've really heard about some of these companies actually really caring about the integrity of a lot of this content that's created now via AI. Although Adobe, I mean, it makes sense why they care, because frankly, you can create so much now using their already existing AI technology. But they did show off this new app earlier today that said it will help these content creators protect their work that's used in AI models. So the app is known as Adobe's Content Authenticity. It will help these content credential initiatives from Adobe as well as other tech companies. That states how the content was created. Adobe said in a statement they're committed to responsible innovation centered on the needs and interests of creators. Their Content Authenticity is a powerful new web application that helps creators protect and get recognition for their work by offering creators a simple, free, and easy way to attach content credentials to what they create. They're helping them preserve the integrity of their work while enabling
9 more minutes.
transparency and trust online. So this will not only benefit the creators, it will also help consumers then navigate the digital ecosystem with greater clarity. I think the major concern over our
Always clean may help you.
credit is the authenticity of some of the content we're receiving, because you can basically create something so accurate, so real.
Hello again.
It seems like it was almost, you know, created by a various creator or a celebrity or a politician.
Right.
So I think proving the authenticity of some of these AI creations is going to be huge, and it's step in the right direction for Adobe.
Okay. Shares responding higher. I think that's good. Nice to see the market reward them for protecting creators, and I do think that that's going to help get the conversation started in a productive way, because it feels like we do got to start, you know, reining things in a little bit. Appreciate that, right? Good stuff. Jane Horn with the developing story. Adobe shares that need a boost too, by the way, as they've been ailing since the last earnings sell-off. We got about 8 minutes till the bell. Let's bring in the Schwab team for a big picture discussion. Joe Lazzola joins us alongside Liz Ann Saunders. Joe's a head trading derivative strategist, and Liz Ann is chief investment strategist. Afternoon, guys. Great to see you both. I'm back after a week, so let's do a little rewind real quick, Liz Ann. Catch me up on the way the jobs report impacts your framework for the economy. Let's start there.
Bingo.
Well, obviously changed the reaction function on the part of the Fed. We immediately squashed any thought of a 50 basis point move, and as of this morning anyway, you were actually pricing in a probability of about 12 or 13% that the Fed would do nothing. That said, there is another jobs report between now and the November FOMC meeting, not to mention this week's inflation news and more inflation data between now and then. But what we saw was a market that is, for the most part, in good news is good news. I think the weakness yesterday may have been either technically or psychologically driven by the breach of 4% on the 10-year. That has arrested today, at least for today, and may help to explain some of the move higher. So I think we are again keying off yields, but as long as yields remain more correlated to the growth trajectory and not the inflation trajectory, I think that's a decent backdrop for equities.
Love it. 10-year going from 3.7 to eclipsing the 4 handle again, and S&P's back at the top of their range during that period. I think that really is an important development here, except it still just doesn't seem to be as favorable for the small caps, Joe, as rate cuts. You know, that trade-off still apparently, that group of the market wants the cuts more.
It does, but you know, interesting, Oliver, I was looking at kind of just the daily performance of real estate, utilities, even small caps, and yes, they're underperforming technology, But on a day, where yields are holding up, the 10-year yield is at 4.03, which is, like you said, that's a decent jump from where we got last week. It's interesting to see just kind of how well those components are holding up. I look at one other thing though, Oliver, and that's what else is holding up, and that's the VIX. And so even though the VIX is coming quite a bit today, it's still above 21. And I'm looking at a 21 VIX. I'm looking at a market that's trading 21 times forward earnings, and I'm looking at a 21% year-to-date gain on the S&P 500. And I keep saying to myself, something's got to give, right? So who knows what that's going to be, but I think we'll get some decent insights towards the end of the week when earnings kind of kick off.
Something's got to give.
It's generally up while stocks have held in firm. So I really like that observation. It always seems like there's something interesting brewing when that builds up. To the point of stocks and the relationship with bonds, Lizanne, as you mentioned, as long as yields are correlated with growth, how do we know, what will we be looking for to make sure that's the case? Is it commodity prices staying muted? Crude oil keep failing to stay near $80? Like, what will give us that confidence?
So I think that's absolutely necessary for headline levels of inflation to see continued sort of easing in some of the concerns with regard to oil prices. I also think this week's inflation data, CPI and PPI, and the combination, and watching what the sort of reaction is on the part of Treasury yields, and then in turn market behavior, could give you a sense of whether we'll maintain that positive correlation between yields and stocks, because that's a newer phenomenon. We've been in this environment of an inverse correlation between yields and stocks, and that was in play during the elevated portion of inflation and even in the disinflationary period until recently. And I think it was the shift on the part of the Fed, not fully away from their inflation mandate, but decision-making driven maybe a bit more by the labor market part of their mandate. And that essentially changed that correlation such that higher yields, as long as it was alongside better growth prospects, was met with better equity performance. And I think the next possible either reaffirmation of that or inflection point back in the other direction could be this week's inflation data.
All right, so we are alert again to potential kind of negative impulses for bonds, but right now we frame it as mostly positive when it comes on the back of good economic data prints. We've got earnings. I mean, it's amazing that they're coming up so quickly here. We just heard the case from Brian Joyce of the NASDAQ kind of watch the more cyclical stuff. It's trying to firm up. The earnings, it seems like, then, could be a nice potential for some guidances, Joe. If we're getting, economic data not missing like we were, because last reporting season we were kind of in the middle of economic data missing. Now we're in the middle of economic data beating, so I wonder if that informs our potential outlooks.
Yeah, I mean, I don't know if I would look to Friday or Monday's reports. So I'm not expecting great numbers from financials. They've already kind of warned a little bit on trading activity and trading revenues, and you get the the movement that we've seen in net interest margin. So that that might not be the first signal that you're going to look towards. You're probably going to want to wait and get a couple weeks worth of data there. But in terms of expectations, yeah, financials are expected to be down, and energy is really expected to kind of take it out of the chin. Kind of given what we saw in crude oil prices. So it'll be interesting to see kind of how those stocks trade.
Yeah, we'll see if that ascending triangle breaks down for the energy stocks we were looking at. Good stuff. Thanks, guys. Great to see you again. Great
Good stuff.
Absolutely. Lizanne Saunders and Joe Mazzola. All right, we get our closers panel. Kevin Green going to join me alongside Alex Coffey. We're going to check out some of the market action into the bell, trying to ramp it up here.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
being lucky in trading is great, but it's not a fixed formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the
Damn.
traders I've seen have insatiable intellectual curiosity. Otherwise,
Nice little close.
your skills will become.
Alrighty, well that's it. Hope we had a good day today. I didn't trade much, but I did trade. Ooh, we'll see you all again tomorrow. Yabba dabba doo. Thanks everybody for participating. Crickets!